Hey, everybody. Jeff Gibby here. I hope you're doing well. Welcome to day 3 of the MetaStock conference. I hope you've enjoyed things. It's good to see everybody coming back today. Silver, welcome. Werner, Tom, Stoyanka. I'll put the link for yesterday here. That's how you missed it yesterday. Give me just a second. We're going to get this on the room. From YouTube, welcome Scott, Vincenzo, Ace, all of you. It's going to get underway today. We've been a good session so far, and today's not going to be any different. So let's go ahead and read this fantastic legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So, hope you enjoyed that. I'm going to start off by thanking our sponsor, Stocks and Commodities Magazine. As long as you registered for today's event, you're going to get a free complimentary issue of their magazine, and if you buy anything, you're going to get like 5 years or 2 years, depending on whether or not you spend over $300 or not. So they're great. We love them. I've been getting Stocks and Commodities for 100 years, or since I started, whichever was earlier or later. Anyway, they're great. We love working with them, and it's a great magazine. So we're here, as you know, our MetaStock. We're running a special on MetaStock. We'll be talking about MetaStock all day. Very quickly, it's been rated #1 in its price category 28 years, like in a row. So very, very good software program. Allows you to do scanning and testing and forecasting, and we want you to try it out. We're gonna, if you pay for a month, we're gonna give you your second and your third month for free. Robin, hello, good to see you. Buenos dias, Fasesk. All right, anyway, you can do that at metastock.com/conf promo, 800-882-3040. You can also chat online with us at metastock.com/sales chat. So let's go ahead and get started. Our first guest today is a person that does a good job. In fact, he does such a good job that we're actually bringing him back tomorrow to do our premium session. So he's going to talk for 90 minutes with us tomorrow, 60 minutes today. Jeff has been a partner with us now for just about 3 years, and he's built a huge reputation in the market by training people how to trade. I can't remember the name of the site offhand, but he's done a lot of, he can tell you, but he's done a lot of training people, technical analysis, how to trade. He's great. He does a good job. He has a great first name, and he just does such a good job with kind of teaching things and laying things out. One of my favorite presenters. So let's go ahead and bring him on here. How you doing, Jeff?
Doing well. One of my favorite hosts.
All right, good. I just sent the screen over to you.
Great.
And okay, I can see your screen. I'm going to turn off my camera, and I'm going to get out of the way. So your turn.
All right, we're off to a good start. Well, welcome everybody. Hi, Mark. Danielle from Italy. Hi from Italy. Buenos dias, Robin. Greetings, Earthlings. Great. I'm actually very impressed at this robust group we've got on at an early hour of the morning. Maybe a lot of people are in other countries in Europe or on the East Coast. But anyway, I'm here in Boise, and it is 8 o'clock. So anyway, thanks everybody for joining. Great to have you guys here. I will definitely make it worth your while. We've got some fun stuff to cover. We're going to talk about how to predict market direction up to 5 days in advance. And a lot of the tools and tips and tricks I'm going to share on the session today are really meant to help you guys stay on the right side of the market. And these are difficult market conditions that we're in. Since the Corona crash of last year, the VIX has, for the most part, remained elevated, which is basically classified as a reading over 20. And that can make things quite difficult to navigate in the market. So I'm going to give you some tools to help with that. And before we do that, read our own quick disclaimer. We know that trading securities and options does involve risk. And of course, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. And we do need a broker to trade securities and must meet suitability requirements. We will be covering some trade examples today, some based on actual trades, some hypothetical, and I will actually share some real money results. But of course, we can't guarantee that anybody will mirror the performance of what we share in the presentation due to factors like the time critical nature of trading, brokerage fees, and the activity of other traders and investors. All right, so let's start out by talking about, howdy Silver, good to see you on. Let's start out by talking about why the market is so difficult to trade, because I think in order to find a good methodology or system, it's important to first identify the problem before we get to the solution and address why things can be difficult, because it's certainly not easy to trade or invest in the markets. If it was, we'd all be multimillionaires, and that would be great. But it is a very difficult endeavor, and I'm here to make that easier for you. So let's look at why things can be difficult. And there are obviously a lot of variables to what causes failure in trading and investing. Everything from psychology to a bad system or methodology, trading psychology, all those things, money management can make a big difference, but a lot of it really can be boiled down to math. And so I'm going to highlight something here that is really important to consider when we look at sort of what makes things so difficult for us when we interact with the markets. And I like to use the analogy of a deck of playing cards, because we're all familiar with a deck of cards. We know there's 52 cards in a deck. And in fact, if we shuffle a deck of cards properly, there's an extremely high chance that it comes out in an arrangement that's never existed before. That's pretty incredible, because you've got this relatively small number, finite number of cards, but there's actually an astronomically large number of possible combinations. And this is incredible. When I first saw this, I almost couldn't believe it, but there's actually more ways to arrange a deck of cards than there are total atoms on planet Earth. And that actually boils down to this number that you see here, which is a 69-digit number. It's extremely large, and the number of combinations is really incredible. So imagine trying to predict any random shuffle of a deck of cards. I mean, it would be virtually impossible, right? And when we look at this in the context of the markets, you can imagine that with equities markets, where we have so many variables and so many different inputs into the market that result in the price action that we see on our charts, you can imagine the number of possible combinations. It's much greater than a deck of playing cards. And so predicting an outcome with any degree of accuracy is really extremely difficult. And it's one of the major factors that causes many systems and strategies to fail over the long term. So often, they'll work or be successful during short periods of time and certain market conditions, but they often fail over the long term because they revolve around a set of very specific rules in an environment that's extremely dynamic and rapidly changing. And as I mentioned and demonstrated with the playing card analogy, has an astronomically large number of possible combinations. So when we're trying to form fit or apply a set of very specific finite rules to something like the stock market that's rapidly changing and dynamic and has many different variables, you can see why that can become difficult. But the good news is there is a method that overcomes this drawback to the markets and can actually work regardless of how the cards are dealt. And that's what I'm going to show you on our session today. So here's what I'm going to give you to make it easier for you. And first, we're going to look at one specific indicator that can help predict markets in any time frame. And I'll explain why this works and the methodology behind it, and why it can actually give us forward-looking information as far as what is likely to happen in the markets. And the great news is this is an indicator that's available on virtually any retail trading or charting platform, including MetaStock. It's easily accessible, and I'm going to show you some cool ways to use it. I'll show you the correct way to use the indicator, because like most indicators, there are a number of different ways to use them. Some work okay, some not so great. But ultimately, when it comes down to an indicator, it really the success is determined by how you apply it and how you interpret the information it's giving you, and then how you incorporate it into a system. So we're going to look at that. And the great thing is, and this is important when we look at any sort of a system or methodology for trading or investing in the markets, is we don't want to have too much guesswork or discretion involved, because that can lead to other variables getting in the way, like emotions and things like that. So we want something that can tell us exactly when to buy and when to sell. And this indicator will help us do that. And it will help us identify when momentum is shifting and a new trend is starting. All too often, we get into trades or even longer term investments too late, after we've already noticed, a trend, starting to take place. And so we want to make sure that we're getting into those as early as possible. And I'm going to help you guys do that. I'm also going to give you a nice little trick to eliminate the majority of your losing trades. We can, of course, never eliminate all losing trades. It's a part of doing business in the trading world, but I'll show you how we can help eliminate a good number of those losing trades and keep us out of some of the whipsaw conditions, and ultimately help you guys trade stocks, futures, Forex, and options with consistency. So regardless of what you guys are trading currently, or maybe some of you are not traders or investors yet at this point, but are considering it, what I'll show you does apply to all markets, all time frames. It's universal. It really doesn't matter what time frame or market you're trading. And we'll look at some different trade examples together on the session today to demonstrate that. And then stick with me to the end, and I'll show you guys how you can copy the success that I've had in the markets, and get my trade signals I use to actually make a living in the markets. And I do trade for a living, guys. So I'm not just an educator, but I do trade for a living as well as manage money for my clients. So let's start out by imagining if we could have predicted every major market sell-off in the history of the market. That's a pretty bold headline right there, right? And certainly something that would be nice to be able to do, because as traders and investors, probably one of our biggest fears, and I'll certainly be the first to raise my hand here, is when is that next correction coming? When is the next major sell-off, or even a sustained bear market? That's what we fear, if we don't know how to handle it or prepare ourselves for it, or even profit from it. And now I can say that I actually look forward to those types of market conditions, because often we can make even more money on a sell-off due to the nature of how those take place and the magnitude, and typically those occur over shorter periods of time than we see in longer term bull markets. So they can create really nice opportunities for us if we know how to identify them. And this one momentum indicator we're going to focus on in our session today actually has done an incredible job going back, looking at major market sell-offs and crashes and et cetera, at predicting these. And it predicted the recent Corona crash last year on February 21st. And we'll look at that here in a second on a chart. It also predicted all 4 corrections in 2018. It predicted the flash crash of 2015 an entire day before it happened. It predicted the 10% correction in October 2014, 2 weeks before the sell-off. And going back a decade, it predicted the crash in July 2011, several days before bears began driving prices down. And going back even further, it predicted the major sell-off in 2008. That was the, as you'll remember, the housing bubble and the bear market that we were in prior to this decades-long bull market, when the market lost more than half its value in the second half of that year. So, these are all markets conditions and situations where a lot of traders and investors were really shaken, and unfortunately, a lot of people lost a lot of money in these types of situations. But you'll see here shortly, if you had a nice tool to help prepare you and even warn you of these types of market sell-offs, what a difference that can make. So let's hop in our DeLorean and go back a couple years, or actually, I guess a few years now. Geez, we're in 2021 already. Hard to believe, but let's look at 2018. And I like to use this as a case study because there was 4 corrections this year, and I'll highlight this here on the chart. And this is a daily chart of the S&P 500, the SPX, encompassing 2018. So January 1st, 2018, all the way to December 31st. And we've actually seen some similar market conditions to this moving forward. But this is a great year to look at, being that there were 4 pretty significant corrections. So the first one I'll highlight here is on the left side of your chart. So this was back early in 2018. We had reached a new all-time high in the market around 2,900 on the S&P. Of course, we've hit much higher highs since then, and we'll look at some of those too here shortly. But you'll notice here that we had a very significant correction. So and it took weeks, if not months, to go from the 2,700 level up to the 2,900 level. But you'll notice what happened here. Within just a couple of short weeks, we lost all of that value in the market. So we top out around 2,900, and we mean revert all the way down to that red line, which is the 200-day moving average, which, by the way, is a very closely followed moving average by large institutions and hedge funds. So we have that mean reversion. That's why you actually see that price bouncing off of that level so significantly. But this was kind of that first correction or major sell-off that took place after we were in this decade-long bull run that kind of caught everybody off guard. And then from there, we go into a bit of a range between 2,600 roughly to 2,800 over the next couple months. But then we top out, we kind of hit that double top there around 2,800 and have another correction in mean reversion down into the 200-day moving average. Okay, and you'll notice price that served as good support there in March. Price bounced off that level and sort of kind of trailed along there for a while before going back into an uptrend. And then we hit a new all-time high in the market. So this time we break 2,900, hit a high of 2,940.91. And in October, what happens? We have another major correction. This time we sell off below the 200-day moving average. And interestingly, we go into sort of this similar price action. So if you look back between the 2 corrections earlier in the year, you kind of see that it looks like a bit of an M. And we see it again here between October and December. And we almost technically put us into a bear market in December. We top out around 2,800 on the S&P and sell off down into 2,346. So a bear market is technically classified as a peak to trough sell-off of 20% or greater, and that almost put us there. And of course, we from here went back into bull market territory. But these are very, very difficult market conditions when we start getting these types of sell-offs, and they tend to happen when we hit new all-time highs in the market. So we've of course seen that multiple times since, and we'll look at that here shortly. So I want to give you guys just a quick background on myself before we move any further. If you haven't attended any of my past MetaStock events, I'll give you a little bit of background on myself, and then we'll get into the fun stuff. So I do have 20 years of experience trading the stock options and futures markets. I received professional training at Morgan Stanley and trained under some of the top traders at their trade desk. I'm also the founder and chief investment strategist of Altos Trading. I actually currently have closer to about 50,000 members in over 100 countries across the globe. So we're an international company. We've got members from all over the world, and a really diverse group of traders. We have people that are just starting out to very seasoned veterans, and people that day trade and swing trade and invest for the long term and everything in between. So I also manage money for my clients in my hedge fund, Altos Capital. And I'm the founder and the creator of the Trade Trend Signal software, which I'm always excited to be at the MetaStock events because MetaStock is the very first platform we've ever launched Trade Trend on. And it was a wild success with all of our followers. And we have a lot of loyal MetaStock members that love to use Trade Trend on MetaStock. So I'm going to be talking to you guys a bit about that today on our session as well. So by the end of our time together today, and we'll spend about an hour together today, you'll discover how to use one simple indicator to accurately predict whether the market is likely to go up or down over the next few days or even weeks. And better yet, you can actually access this powerful information up to 5 days in advance. And oftentimes more than that, as we'll look at when we go back to that S&P chart we just visited. And it can oftentimes give us more advanced warning, but typically 5 days is about an average of advanced warning. And it can work for any market, stocks, futures, Forex, whatever you guys trade. This methodology can be applied, and I'll explain why that is. But whether you're just starting out, whether you're a seasoned pro, we have members and students of all experience levels. This is must-have information to make money in the markets. It really is. If you don't understand momentum methodologies, I highly urge you to consider them in your trading because they make a huge difference. So we're going to look at momentum here in the context of the markets and why it's so vital to trading success, how to read momentum shifts and continuations. And once you learn to do this, and it's really simple to learn, applying it is another extra step we're going to explore today on the session, but it can really turn your trading around. And we're going to use one momentum indicator in particular that can actually give us a leading information. Now, most indicators, of course, are lagging, and certainly this particular indicator uses some lagging information, but there's something unique about momentum indicators, and this is what I'm about to explain, is they can actually give us leading information, and I'll explain why that is, and how it can predict market moves in advance. And then I'm also going to show you guys how you can get your hands on a tool that will change your trading forever. And it's a tool that I use myself. I use it in my own personal trading account. I use it to help make decisions in my hedge fund, Altus Capital, and it's really made a big difference for me. So let's start out by imagining a bowling ball. It might seem like a bit of an odd thing to have on a trading presentation. Who would have thought, we're going to talk about bowling today, right? But it actually is an interesting analogy and concept to grasp when we look at this as it relates to the markets. And if we look at how kind of a bowling ball works, and when we take that ball and roll it down a lane and it moves forward towards the pins, we can predict with a fairly good degree of reliability how that ball is going to react, right? We know that once we release the ball from our fingertips, it's going to roll down the lane, and we may not necessarily know how many pins we're going to knock down or whether it's going to be a gutter ball, but we do know that the ball is going to continue to roll. That's fairly predictable, right? And so when we look at this in the context of physics, that's basically described as the tendency of a moving object to continue moving. So once you set that object in motion, it's going to continue moving until something stops that movement, right? And so for an object that moves in a line, like a bowling ball or there's so many things, right? In the real world, a car, a plane, but in the markets, we have linear movement as well. And directional movement with stocks and futures, forex, whatever sort of price movement we're looking at. And so in physics, that's basically the mass of the object multiplied by its velocity, and that's linear momentum. So we have linear momentum in the markets as well, and that's why I like to use this analogy, because it helps us understand why it can actually give us predictive information. So just like we can predict that once we release a bowling ball from our fingertips that it's going to roll forward, we can also predict momentum or linear momentum in the markets. So let's keep looking at this bowling ball analogy, because as we're moving our arm back, so we have to wind our arm back, right, to get that momentum started. The ball, if we just stand still and hold the ball and release it, it's not going to roll forward if we're on a flat surface. So there has to be something to set the object in motion. And that's really the lagging component of the indicator. So that's analogous to pulling our arm back to start the object in motion. So that's kind of, hopefully you guys can see that tie there. Now, the forward-looking part of the indicator, or the momentum, is once we release the ball. So we have a catalyst that sets the momentum in motion, and then that momentum has got, once a catalyst sets it in motion, it's got to move forward, right? So that's the leading component of the indicator, is once the ball starts moving forward. Okay, so basically when we look at this in the context of the stock market, a momentum value above zero indicates that prices are moving up, and below 0 indicates prices are moving down. And this means we can actually pinpoint areas where trend reversals are highly likely to occur. Okay, so let's keep this bowling analogy in mind as we look at the markets and go back and look at some charts. And we're going to look at this in the context of market crashes for the most part, because I like to use those as examples to help alleviate a lot of people's fears around these and actually change the way that they think and see these as really as opportunities, whether it's to short the market or actually look for opportunities to come back in and buy on rebounds and actually, look for good opportunities to get in before price goes back up, because it can help us make money on the way up, because momentum doesn't just measure the fall, it measures the rate of the rise as well in a security's price, and it's a really valuable indicator of strength or weakness. And one particular indicator can help us pinpoint these turning points in stocks, futures, forex with quite astounding accuracy. So if you look at the chart here in the center of your screen, you'll notice that we had a strong sell-off. This is a chart of the S&P 500 ETF, the SPY. Now, we're mean reverting the 200-day moving average. Major sell-off from around 286 all the way down to about 250. And you'll notice here that we have a quick reversal. So on the left half of this chart, that's sort of that initial momentum catalyst. So think of the bowling analogy. That's where you pull, your arm back to set the object in motion. And then we have a reversal. So the trend is reversing direction. And where you see the green arrow is actually where this indicator identified the momentum shift and caused price to go right back up. Okay, and so as I show you here in a minute, what this indicator is and how it works, you'll see that we can actually identify these types of momentum shifts with a really great degree of accuracy. So to give you a little bit of background on momentum indicators and some of the more common ones that are used out there in the market, and these again are all available on MetaStock, and we'll look at a handful of the common ones, and then look at hone in on one of them to look at how it really, in my opinion, is the best at predicting future price momentum. So the first commonly used momentum indicator is the average directional movement index, and this is often referred to as the ADX, and can be used to measure the overall strength of a trend. And you'll notice here as I'm going through some of these common momentum indicators, there's a lot of different ways to use them, and some are okay, some are not so great, and some work fairly well. But the key here is there's a lot of different ways to use them, and unfortunately most of those fail. But I want to give you a basic idea of how they work and what they do. And so the ADX is really best at measuring overall strength of a trend. I don't find it to be so great at helping us identify entries and exits. The next is the commodity channel index. This is a really old momentum oscillator, originally developed by Donald Lambert. And what it does is it measures the relation between price and normal deviations from moving average. So it can give us some good information. I don't particularly like the CCI or use it much in my own trading because it's an oscillator and it can remain oversold or overbought for long periods of time. It doesn't really give us good indicators of momentum shifts. And so I don't typically use the CCI. Now the MACD is another commonly used momentum indicator. And what the MACD does is it reveals changes in the strength, direction, momentum, and duration of a trend in a stock's price. So this is really a versatile momentum indicator. It gives us a lot of different information regarding trends and momentum, and is really commonly used not just among retail traders, but also among professional institutional traders. It's really closely followed by a lot of the big funds out there. And then the last one we'll look at is the relative strength index. This is probably one of the more popular ones, often referred to as the RSI, and it's used to chart the current and historical momentum strength or weakness of a security based on closing prices. Typically the default setting used on that one is a 14-period RSI, and RSI is actually used quite commonly among institutions and hedge funds, etc. It can give us good information when used typically in combination with other indicators as more of a confirmation signal. But the real problem with the RSI, again, kind of like the CCI, the Commodity Channel Index, is that it can remain overbought or oversold. So typically an oversold reading is under 30 and an overbought is over 70. And it can remain there for very long periods of time. And so it doesn't generally give us real reliable reversal signals. So let's look at one of these four in particular that really does the best job at giving us a good indicator of future price momentum, and that's the MACD, or the moving average convergence divergence. And again, as I mentioned, this one's really widely used across the industry, across retail traders as well as professional institutions. And it gives us really good information as far as future trend and momentum. So if you're not familiar with the MACD, it's again short for moving average convergence divergence, and it's been around for a long period of time, about for over 50 years. It was developed by Gerald Appel back in the late 70s, and it reveals changes in the strength, direction, momentum, and duration of trend and a securities price. And really can be used for any time frame in any type of security. One of the common ways that it's used is with the cross, the MACD cross. So basically the way this works is a buy signal is generated when the MACD line crosses above the signal line, and a sell signal is generated when the MACD line crosses below the signal line. So let's take a look at how that works. If we look at this chart that we looked at earlier, we're going to hop in the DeLorean again, go back in time to 2018, looking at the S&P 500 daily chart. And you'll notice that this time I've got the MACD plotted at the bottom of the chart, and we're going to look at those four corrections again as they relate to the MACD crosses. And so the first one that happened in January, after we had just hit a new all-time high in the market, you'll notice that on the MACD indicator, we get this very well-defined cross. The blue line is the signal line, and you'll see that it crosses to the downside. That's our warning sign that momentum, which was to the upside, we were in a strong uptrend, could be shifting down and mean reverting into the 200-day moving average. And you'll see it gave us some very nice warning. It practically caught it at the top there before that correction ensued. And by the way, where these crosses occur relative to the zero line of the MACD, which is that center line you see down there on the indicator, the magnitude of the cross, the slope, etc., are all significant variables. We won't really have time to get into all the different nuances of those, but I mainly just want you guys to focus on the crosses for now to see how these relate to the market corrections. And of course, there are a lot of crosses here that we notice, some greater magnitude than others. But this one was significant, far above the zero line, very well defined, and at an all-time high in the market. Now, the next one occurred closer to the zero line, but very well defined, and almost caught that sell-off, not quite as early as the previous correction, but still gave us very nice warning before the S&P mean reverted to the 200-day moving average. Then we go in this very nice uptrend. You'll see that the MACD lines are above the zero line there for the most part through the middle part of the year. Now, this one was a lot more difficult to identify. It was less well-defined, but it did occur in the context of a new all-time high in the market, which is always something to be aware of. But we do get a cross to the downside here in, I believe it's early October, and then we get another correction. And this one was more severe than the first two. We mean reverted, first of all, had a higher high in the market over 2,900 and mean reverted, and then actually sold off below the mean, the 200-day moving average, down into 2,600. And then this last one, and these are always something to be, extra cautious about, is when we get a cross below the zero line. This one occurred below the zero line in December, and this one actually gave us a really nice warning before we almost went into bear market territory. So you can see how these give us pretty nice warning in these four corrections that we saw in 2018. Now, as you noticed, there were a lot of other crosses on there, and that one in particular in October was a little bit difficult to read. So I'm going to give you guys a trick to make this easier, because the line crosses can be a bit confusing, especially when the lines are horizontal and close together. And so if you look at this example, the lines are right near the zero line, they're horizontal, they're close together, And certainly when you're trying to read these crosses in real time as the market's moving, that becomes even more difficult. And so instead of using the line crosses, we're going to look at the MACD histogram. And the histogram can also be accessed on the MetaStock platform. And it's a lot easier to interpret. And I'm going to give you my settings that I use for it as well. And in fact, they're typically the default settings on most platforms, including MetaStock. And that's there's 3 settings that you would enter, and that would be 12, 26, and 9. And those are all your averages in your MACD line. But you can see here that when you use a histogram, which is basically telling us that the signal line's crossed and giving us a sell signal to the downside if the histogram's red, and a green histogram if it crosses to the upside. And it makes it a lot easier to identify these momentum directions. And basically a bright green histogram means the lines are diverging. We have a strong trend and momentum in place. As they darken and reduce size, that just means that the lines are converging and shifting the other way. And same thing goes for the red. Now, basically what we want to use these for is a sell signal when we get a shift from a green to a red, and a buy signal when we get a shift from a red to a green histogram. Okay, so now let's look at that on the chart. This is a different chart of a stock Momo. It's a daily chart, and we'll look at how this works with the MACD histogram. So this stock's in a nice uptrend here, and you'll see looking at the histogram on the bottom of the chart, we've got a red histogram. So that tells us that we probably want to be cautious in going long on Momo, because at the moment momentum is either flat or moving to the downside. But you'll notice here that the histogram shifted from red to green after a few bars there. And what we'd want to do is then look to go long the stock if price it basically retains that green histogram on that candle. So on a daily chart, we want to make sure that we've got a green histogram at on the close of that day. And then you'll notice here that the stock goes in this really nice uptrend. So on this green histogram, we're trading around $25 a share. And then the stock goes into this nice uptrend up into the $30 level. Now, in the middle of the chart, and you'll notice there the histogram kind of starts to weaken as the stock goes flat, and it starts to move back towards the 0 line, and then it turns red. And this tells us that the momentum is stalling or even reversing direction. And this might be a good opportunity to, if we were to have taken a signal or a trade off this signal, to take profits on that position, and at least wait for another green histogram to go along the stock. So here we just had a brief stall in the momentum. It quickly shifted back to the upside, as we see from the histogram going back from red to green, telling us that this might be a nice opportunity to jump back into the stock as it resumes its uptrend. And so that happened here right around the $31 level, and the stock goes into a nice uptrend again, topping out right around the $35 level before we get another red histogram. And you'll notice that during that red histogram, we have a brief sell-off there over the course of a few days, but it was a significant sell-off because, again, we topped out around $35 and then sold off down to about $30. That's on a percentage basis a very large move to the downside, and that would have helped us. If you look at that first red histogram, stay out of the majority of that move to the downside. But then again, we get a quick shift back to a green histogram, telling us that it's most likely safe to jump back in to the stock if we want to go ahead and reinitiate a position or a trade in that stock. So you can see that it does a very nice job at warning us of future price momentum. Now I'm going to give you another little trick to help, and whether you use this with the MACD or any other indicator or system you're already using, it can really help eliminate a lot of whipsaws and even losing trades that you might experience. And I'll explain this in more detail as we get into to the trade trend indicator, because we've actually got this programmed into that algorithm. But one thing that I do is, rather than jump right in on, if I'm using the MACD, for instance, on a green histogram, I would use a buy stop order to enter a long trade. So basically, I would put a buy stop, which for those of you who aren't familiar with a buy stop, it's simply saying that you want to enter a trade on whatever stock or forex pair or futures contract or whatever you're trading, that you want to enter on at a higher price than the current market price. So in the context of the MACD histogram, I would place that buy stop order at a price above the candle where the histogram turned from red to green. And then conversely, if we were using it to like do a short trade, we would use a sell stop order to enter the short trade, and we would place that at a lower price than the current market price and just right below the low of the candle from where the histogram changes from green to red. And it can actually help filter out a lot of false signals and even improve consistency and profitability. And so, yeah, Sanjay, it can be used for day trading the E-minis. I'm actually going to give you some examples of future trades from my own personal account here in a second using this. So the key here is that I showed you a number of different momentum indicators, some of the more popular ones, including the MACD, and how they can be used in different ways. But really the key is that they have to be used correctly. Obviously, if they worked every time and were easy to use, we would all virtually be successful traders. We'd all be multimillionaires, and the market would just be easy to trade, and we could all quit our day jobs, right? Unfortunately, that's just not reality for most people. But I want to help you guys achieve that if that's really what you want to do, because it is possible if you use these correctly. And I've actually spent more than a decade of my own life and thousands of hours trying to figure out which ones to use, when to use them, and how to use them most effectively. And I certainly went through many, many failures before I reached success doing this because, as I mentioned, as we go back to the beginning of our time together today, the market's difficult to trade. There's, just like a deck of playing cards, many, many millions of potential outcomes. Even though there are patterns that show up in the markets, they never repeat themselves exactly the same way. So my goal was to develop an algorithm that actually adapted to market conditions. And once I got these settings dialed in, I then had to formulate them to work on all time frames and duplicate the success across all markets in an adaptable algorithmic formula that can actually predict future trends and momentum and not just give me lagging information. Because the problem with most momentum indicators alone is that they're either hard to read, as we looked at with the MACD line cross, and hopefully I gave you guys a good solution to that problem with the MACD histogram, but they often give us false readings, lagging signals, or they even stop working when you need them the most or when market conditions change. But what I've done is I've developed a highly effective market adaptive algorithm that uses a unique combination of momentum indicators and proprietary settings that when we combine these with volatility studies and price action setups can actually do much better than the MACD alone. So the MACD by itself can do pretty well, as we looked at in some of those examples. But my goal was to actually beat the MACD and get in earlier on these trend and momentum shifts. And that's what we've programmed into the Trade Trend add-on software for MetaStock. And this can actually give us really accurate buy and sell signals before, a lot of times before the MACD gives us a buy or a sell signal. So it helps us get in oftentimes before the MACD. And we've done this and accomplished this basically with a very specific proprietary blend of momentum indicators and algorithmic rules that tell us based on current market conditions when there's likely to be a trend or momentum shift, whether that's a short-term or long-term trend. And I put a lot of work into making this effective across different asset classes or markets. So whether it's stocks, futures, forex, that was my goal because I trade all of those as well as options. And I mostly trade off a daily chart, but I also wanted to make it work on any time frame because, as I said, we have 50,000 members and that trade all these different asset classes, but also trade in different time frames. And so it's important having a methodology that works regardless of time frame, and momentum is one of those. MetaStock has a really, in fact, across I've tried a lot of charting platforms in my career. I've never seen one that has such a robust backtesting engine as MetaStock. And the backtesting functionality around Trade Trend and MetaStock is really cool. So you can actually check out every signal and backtest all of them going back as far as you want. because trade trend doesn't, the signals don't repaint. They are on your chart. Once they're a confirmed signal, they're there for good, and you can go back and back test those. You can also use it to supercharge your option strategies. So if you're an options trader, this can help you more accurately identify and time your entries and exits based on momentum shifts and trends, and help you trade like a pro without any guesswork involved. So what I do, and I very seldom do this because it is, sharing something very personal. And the reason I do it is because anytime, you offer something to your students or someone you're trying to educate or help succeed in the markets, I think it's important to do that with real money proof. It's very easy to pull up hypothetical performance and say, hey, look how great this works. But unless it's actually put to work in real market conditions and proven that way, I think that that it's, you probably shouldn't follow it. So these are actual real money screenshots from my personal TD Ameritrade brokerage account, where I execute all of my personal trades in the futures market. And so these are trades from the trade trend signals that I use just trading one contract on the daily chart. And you can see that I was able to profit over $13,000 in a single day, with over $21,000 in open profits, over $3,600 in a single day, over $4,400 in a single day. And not every trade is going to be a winner. Of course, nobody can claim that. I did have some losers. The really nice thing about the trade trend algorithm is it helps contain the losers and keep them relatively small. And then when we get in a successful trade, it helps those run as long as possible, because the algorithm also gives you trailing stop levels. So it reads the market in real time and gives you a trailing stop to help protect any profits in open profitable trades and lock those in before the market reverses direction. So I wanted to share these real money examples from my own personal account using the trade trend algorithm. So let's look at sort of an example of trade trend versus the MACD, because I want to show you, what kind of a difference it could make. And I'm going to do this in terms of options, because I know we have a lot of options traders on the session with us today. But this is a daily chart of the SPY, the S&P 500 ETF. And I don't have the MACD plotted here, but it did give us a buy signal. So thinking back to what I showed you with the MACD histogram going from red to green, this is where it would have shifted from red to green. And it did, gave us a nice buy signal before the SPY resumed its uptrend. There was a bit of a correction there in the SPY in the middle of your chart, as you'll notice, before the upturn resumed. So the MACD gave us some, pretty good uptrend, but you'll notice it missed a lot of that, shift. So like if you look right in the very middle of your chart, where the market bottomed out below that 50 period moving average, the red average, it missed, about a week's worth of that move, which was roughly, 267 up to about 280. So it missed about 13 points of that move. So the trade trend algorithm actually gave us a buy signal really right back there where the SPY bottomed before resuming the uptrend. So it gave us the buy signal more than a week ahead of the MACD. And that's really the power of the algorithm when it's combined with other momentum indicators relative to the MACD by itself. If we got out when the histogram shifted back to red, so you'll notice there that the SPY sort of stalled there for about a week, about 5 trading days before it resumed its uptrend again. So that's where the histogram turned back to red. If we had gotten out there, and let's say that we traded 10 at-the-money call contracts on these signals. On the MACD signal, 10 at-the-money call contracts getting in on the MACD buy, so the green histogram, and then out on the red, would have resulted in $335 profit before commissions and fees. The trade trend signal gave us a buy signal over a week before the MACD, and over 13 points lower. And so buying 10 at-the-money call contracts on the trade trend signal would have resulted in nearly a $5,000 profit before commissions and fees. So you can see what big of a difference that can make especially when you're trading options, where timing is key. If you're just buying a directional call or put option, that's almost about a $4,500 difference. That's a big difference, right? So that's really what we designed trade trend to do, is to give us more accurate indicators of future price momentum and momentum shifts and indication, trend indication. So this is another example. This is a daily chart of Micron, one of my favorite stocks to follow. Micron's actually based here in Boise, where I live. Their headquarters are based here. And so I follow the stock really closely. But you'll notice here that we got a buy signal. That's the green arrow that you see there on the chart. Now, here's really what sets trade trend apart from most other add-on indicators. It gives us a warning signal. So this does not tell us to go ahead and buy shares of Micron. This actually tells us to go ahead and enter long if price moves up to a certain level in the future. And trade trend gives us up to 3 candles of advance warning. So we're looking at a daily chart here. It's going to give us up to 3 days of advance warning that the future anticipated price direction is to the upside. And it'll give us an exact entry price as well. So it'll say, you know, enter Micron if we wanted to take this signal at such and such a price if the stock reaches that price in the future. Well, it did in this case. And in fact, it didn't do it on day 1. It didn't do it on day 2. But on day 3, where you see the green dot there, it triggered and hit the suggested entry price. And the stock starts to go up. So this is that whole buy stop and sell stop or order type trick that I mentioned to you earlier. And this is what we have programmed into the trade trend algorithm. And then you'll notice that it prints us a nice trailing stop level that helps us lock in profits before the stock reverses direction. And in this case, this was a really nice signal. So it actually identified a $6 per share gain. So if you just traded 1,000 shares on this one signal, that was a $6,000 profit in only 3 weeks. Let's look at the COVID-19 market crash. This is one of my favorite ones to look at because the market hit an all-time high back on like February 19th, I believe, 2020, right? Who would have thought that the next day we get a sell warning from trade trend? And it's identifying a potential shift in market direction. Now, of course, the algorithm has no idea that there's a major pandemic ensuing, but it can pick up the price action in the security and identify variables that make it highly likely that the stock or whatever security we're looking at, in this case, the S&P 500 index, may move down. And in fact, in this case, it did it 1 day before the MACD signal, and you'll see why that was significant. What happens? The market lost 32% in just a few weeks. And the MACD signal came in a whole day later. And you'll notice that there was a major gap down, and there was about a 100-point gap down in the S&P that next day. So if we had simply used the MACD histogram, we would have missed out on that whole 100-point gap down that trade trend allowed us to get into. And this is always a fun one to look at. This is not a real trade example. This is hypothetical, but I certainly wish I had gotten into this trade. If we had simply bought one put contract on this trade trend signal back on the 20th of February, it resulted in over $100,000 profit on a roughly $3,300 investment on this move down. Pretty crazy. But that's what's possible when you catch these sort of major moves in the market. So guys, we've designed trade trend to really work in any market, any time frame, any size account. It really doesn't matter what asset class or time frame you're trading in, or whether you're just starting out with a small account or you already have built up a really large account. We have members that use trade trend of all experience levels, all account sizes. But here's the key that really sets it apart, as I mentioned, from other indicators, is that gives us predictive buy and sell signals before the move occurs. So certainly not every buy and sell signal is going to be successful, but the idea is to give us some degree of advanced warning of where the future, likely future direction of whatever security or time frame we're trading in, what the likely future direction is going to be, whether that's to the upside or the downside. And it can do that up to 3 candles in advance. So we've developed it to give us buy and sell signals that are valid for up to 3 candles. So like if you're trading off a daily chart and you get a buy signal, you know that over the course of the next 3 days, the likely future direction, and if it goes ahead, the market or whatever asset class you're trading goes ahead and hits that entry price, then you can be very confident that the price is likely to go up. Or if you're on a sell signal, if the market hits that triggers that entry price, that it's likely to go down. And so that's really key, right? Because most indicators out there, you've got to basically act on the signal when you get it. So you may have seen other signal softwares out there, but I promise you Trade Trend is completely different because it gives us that advanced warning. This is a chart of the flash crash going back to August 2015. We get a sell signal on the 19th of August and the market crashes, right? So it gave us some pretty nice advanced warning. Then we get a double bottom and it gives us a nice buy signal before the S&P 500 rebounds. This is the 2008 mortgage crisis going back over a decade. We had hit some all-time highs in the market. We're in this major housing bubble, and then it bursts. And Trade Trend actually gave us a sell warning on May 20th before the market lost more. That's half of its value in the second half of the year. It then, of course, rebound going into 2009. That's really when we started the major bull market that we saw over the last decade. And we got a nice buy signal from Trade Trend on the S&P. Let's go back 20 years to the 2000 .com bubble, right? We're hitting new all-time highs on the market here. We get a sell signal from Trade Trend. Remember, this is just a warning. It doesn't necessarily tell us to short the market. But when we get the follow through and the S&P hits the suggested entry price, we get a trigger. That would be your indicator to short the market. The market tanks, right? And bottoms out there in September. We get a nice buy signal from Trade Trend in early October before the market rebounds. So guys, virtually every system will produce winning trades. The key is it going to keep you out of the market when conditions are not favorable and keep you in the market when they are, because you don't want to end up giving back your profits on the losing trades. And that's what we've designed Trade Trend to help you do, is to keep you out when conditions are not favorable and help you get in when there's really the highest probability of a new trend starting. And again, this is more real money proof from my own personal TD Ameritrade account using the Trade Trend algorithm and showing you that it actually does work in real market conditions. And these were actually, I believe, taken back when in 2018 when we were in those corrections. So even in very bad market conditions, I've been able to be successful with the Trade Trend algorithm. So guys, here's my promise to you for being on with me today at the MetaStock event. I want to help you guys have days just like these, and I'm going to give you access to a tool that lets you copy my trades. And I'm going to reveal every one of my special techniques and indicators that make profits like this possible, and I don't hold anything back. So I give you the exact same indicator and tool that I use in my own personal account as well as in my hedge fund. So what we're going to give you guys access to today are 12 months of Trade Trend for stocks, futures, and Forex, whatever you guys want to use it to trade with exact entry and exit signals. So it gives you the buy and sell warning up to 3 candles in advance. So if you're a day trader and you're trading off a 15-minute chart, you'll know up to 45 minutes in advance the likely future direction based on a buy or a sell signal. And not only that, it gives you the exact entry price. But we don't just give you the tool and say good luck. We also hold live trade interactive trade sessions, and I host those myself with my partner Richard, and we use the tool in live market conditions and do some scans and all kinds of fun stuff together, so we can actually demonstrate how to use it and help you be successful. So we hold those 2 to 3 times a month, and we also give you access to the recordings. All those sessions are recorded in case you're not able to join. You get members area access to those. You also get full support and personal coaching from me. You can ask me any questions you want as they relate to the market or to Trade Trend or anything that you want to find out to help you be more successful. We also teach trade adjustments to fix losing trades, and we give you access to all of those, as well as cover some of our most profitable tickers that we're currently looking at in the markets using the Trade Trend signals. So this is everything you guys get with the Trade Trend algorithm to help get in before the MACD signal, whether you're trading, short-term, long-term, intraday, swing trading, position trading, long-term investing, any time frame, whether you're a stock trader, futures trader, Forex trader, options trader. Ultimately, we want to help you guys cut the learning curve and trade like a pro starting tomorrow. So you guys can actually start using this indicator in your own account starting as early as tomorrow. We want to help you guys get set up with this today. And I want you to ask yourself, if you were able to avoid the next market crash and even make money from it, and hopefully I've given you guys some good tools to do that on the session today, and some tips and tricks to help alleviate your concerns of these types of events. But ask how much that would be worth to you, because I've seen a lot of people lose a lot of money in these types of corrections. I saw a lot of people lose a lot of money, unfortunately, last year when the market sold off 32%. And we want to help you guys not only avoid those, but even profit from them when they inevitably occur again. We're also going to throw in a couple cool bonuses with our package today. So I'm throwing in our professional trading series. This is over 10 hours and 9 modules of online training that covers our best stock options, futures, and Forex strategies. as well as our ebook, How to Create Risk-Free Trades and Let Your Profits Run with Little or No Risk. So this is a really cool money management technique that I outline in my book that can help you really mitigate a lot of the risk in your trades, regardless of what market you trade or strategy or money management technique you use. But it's a really cool money management trick. And sometimes even eliminate the risk altogether while still allowing for profits. So it's a really cool trick. We're going to throw that in for free as well. I'm running a bit short on time, so I'm not going to go through all the testimonials, but we do get hundreds and hundreds and not thousands of testimonials from our Trade Trend members that have done very well with the software, and we're happy to share those with you guys as well. But let's go ahead and look at the package and how to get access to it as we're kind of wrapping up here. So if you guys want to check out Trade Trend on MetaStock, again, we're going to give you 12 months, a 12-month subscription to Trade Trend. You get all the signals on any time frame and any market that you want to look at. Normally we charge $1,499 a year for our 12 months of Trade Trend. We're also going to give you guys access to our live trade sessions that we hold 2 to 3 times a month, and we're actually going to be doing our next live session next week, so I hope you guys can join us for that. That's valued at $550. I also will help personally coach you guys on those live sessions, as well as any questions you have via email. I'll help answer those personally and help kind of hold your hand and lead you to where you want to get in your trading career. I'm valued at $1,997. We'll also give you access to our Facebook group, which has over 800 like-minded members, and also members who use Trade Trend in their own trading and investing. You can interact with all of our other members in our Facebook group, valued at $199. We also will teach how to adjust losing options trades. So we have that all bundled into our online training. And if you guys are options traders, these are really cool. It's a cool arsenal of tips and tricks to help adjust losing trades that we use in our own accounts and even in my hedge fund as well, valued at $900. But ultimately, you get to learn to trade stocks, futures, forex, and options with consistency, and that's really priceless. And again, we're going to throw in those 2 extra bonuses: the professional online trading series, over 10 hours of our best stock, options, futures, and forex strategies, valued at $595, and my new ebook, How to Create Risk-Free Trades, valued at $97. So the total value on our package is over $5,000 retail. So guys, if you went to our website and bought all of these individually, this is what they would cost. These aren't inflated values or anything like that. These are actually our retail prices for all of these things. And so we're giving you guys a really good value today, 80% off of the retail price, $997 for the entire year. We are going to limit this since it is a good offer, and these typically sell very, very quickly. The reason we limit it is because we do offer a lot of personal customer service and support to our new members. And obviously we only have so much manpower to do that. So we don't want to take on as much as we would love to, hundreds and hundreds of people, which we have on the session today. We've got several hundred people. And so these will sell out fast, but we do have to limit them so that we can give you guys good support. So if you want to take advantage of this offer at 80% off the retail price, you can go to altostrading.com/metastock and claim one of the 25 seats. And then I'm going to throw in a quick guarantee as well. I always believe in backing up anything that we offer to our students. And so here's our guarantee, guys. If you don't make your subscription fee back in the first 90 days, I will give you an extra year of Trade Trend at no cost. That's a $1,500 value. Simply send me a screenshot of your personal account. If you didn't make your subscription fee back in 90 days, I'll throw in an extra year of Trade Trend at no cost. So guys, go to altostrading.com/metastock, claim one of your 25 seats. When they're up, we will take the page down. So you will no longer be able to purchase it at 80% off. So I highly urge you to take advantage and get 80% off. And otherwise it will go back to the retail pricing. So we're up on the hour. I hope you guys enjoyed. I hope you got a lot out of the session. And I really hope you guys check out Trade Trend on MetaStock. I'm going to go ahead and pass it back over to Jeff. I haven't really had a chance to monitor the Q&A box. I see that there are probably some questions coming in. If we have time, I'd be happy to answer any, but if I don't get to any questions, you can always email us at support@altostrading.com. We'd be happy to answer any questions for you. And with that, I'll pass it back over to Jeff.
All right. That went quick.
It always does.
I'm going to answer two questions at once. I've been able to actually keep up with most of the questions, but Jeff, thank you for your time. Somebody was asking to see a 1 minute chart of the S&P, and somebody else was asking to see a chart showing all the signals. So I'm going to do both of those at the same time.
Yeah,
Jeff.
and by the way, so I'll be back tomorrow for the premium event. I hope you guys can join for that, but I'm going to be purely doing charting out of MetaStock with Trade Trend tomorrow on that event. So I hope you guys can join for that.
All right. And here it is. Thank you so much, Jeff. I appreciate your time today. I'm going to show this for real quick, and then I'm going to get to Richard. So thank you very much, Jeff. Appreciate it.
Thanks for having me. Thanks for joining us.
All right. Okay, so here is the S&P chart. Anil, you asked for it. I'm pulling it up for you. We don't have really time to talk about like the scanning and the system testing and like all that kind of stuff, although we will as we go today. You know, I actually have a session coming up. We're running a little bit over on time, but this is how it looks on a chart. When you get a setup signal, it's going to show up like this little triangle. This is the S&P 1 minute chart as requested by Anil. When you get a trigger, it's going to give you kind of an arrow. And then when you get an exit, you'll get kind of like this little bit of an exit signal. You'll notice that there's different color codings. Like here you have a shorts entry signal. There's no trigger here though. When you're in a trade, it's going to highlight it either green, meaning it's quickly moving up. You'll notice there's a blue color, meaning that that just means the system's going to get more aggressive about getting out of the trade for you. And really, that's it. You have the red when you're in a short trade. This looks really, really good on a 1 minute chart. And we do have the full-blown commentary. So if I just pick any random day on the chart, we'll just go ahead and pick this one. We'd be in a trade for a couple of days. It's going to say you're in an exit long position is open. Here's your stop out value for tomorrow's trading. And then you can kind of just keep that updated. Now, it says tomorrow's trading. It's actually the next minute because we're looking at this on a minute bar. Like I said, it is fully integrated into MetaStock, so you can scan for the setups, you can scan for the triggers, you can test it, you can see how well it works. So historically, you can match it up. It is fully integrated with the MetaStock program. So a couple of people, Sanjay and Shanti have asked, is it included, do I need to get MetaStock as well? You do need MetaStock as well to run this. We're going to include with that $9.97 price 3 months access to MetaStock. After that, we'll have basically you can subscribe either to our end of day or our real-time package. The price starts at about $69 for end of day and $150 for real-time. There are some options in terms of the way that you can kind of fit that and constrict and set that up. So what I would have you do, if you're brand new to MetaStock and you need MetaStock as well, the best thing, just because of time, give us a call. We'll walk you through what the options are. You can call us at 800-882-3040. You can chat online with us at metastock.com/saleschat. You can also go online and order this at altostrading.com/metastock. It's a great offer. People really, really love Jeff, and kind of he's throwing basically 12 months of the trade trend in with it, the live trading sessions, the personal coaching, the group access. Give it a go. 800-882-3040. metastock.com/saleschat, and we can get you going. If you have more questions, I noticed there are questions coming in here like crazy. I'm going to be chatting answers after we kind of get everything back on the road. We're running already. Yeah, it's funny. We're running late right now. So 800-882-3040. Thank you for Stocks and Commodities for supporting this event. The last thing I'm going to talk about real quick is Jeff Tompkins is going to join us again tomorrow for the 90-minute premium sessions. Jeff Tompkins, Steve Bigelow, and Vince Four are all going to be there doing 90-minute sessions. It starts at 10 a.m. This conference is going to be, these premium sessions are going to be great. I want you to come with us and join us. We did them last time. They were great. These are some great speakers. So for $450, you can come all day tomorrow to the 3 90-minute sessions. Give us a call at 800-882-3040 or visit online with us at metastock.com/saleschat. So that'll kind of help you get going there. running over to our next presenter. Richard Krugel is joining us from, I believe he said South Africa, and I hope I didn't mess that up, but he's going to be talking to us for the first time. It's his first time in the MetaStock room. He's going to be talking about Pitchfork trading. So this is going to be a little bit different from all the other classes that we've been doing. I'm interested to see what he's got to say, and let's go ahead and bring you on here. Richard, how are you doing?
Jeffrey, good on you. Can you hear me?
Yes. Did I get South Africa right? Did I remember that detail correctly?
Yep, I'm in Cape Town, South Africa.
All right,
All
very
the
cool.
way down south.
Yeah.
On a different continent.
Well, we are running a little bit late, so I'm not going to I'm going to get you going. I'll just get out of the way. Welcome, and let me know if you need any help. And we can see you.
Cool. There we go.
Oh, let me get you the presentation screen over. I'm getting a little ahead of myself here. Change presenter.
Okay.
You go.
And show my screen. Cool. I just want to make sure you're seeing the right screen here. I do have quite a few screens going. Do you see the Precision Pitchfork trading screen?
We can see that, yes.
Awesome. Okay, dokie. Right, guys, I'm going to drop the video. I just want to show that I'm real. Thanks for having me, Jeffrey. I'll be coming back. I normally have around about 10 minutes left or so if we have time to take some Q&As. So I'll be more than happy to take any questions that you might have. And then without further ado, I'll start the presentation for you guys. So I'm just going to jump off the webcam quickly and let's get going. I just want to open that up a little bit. And something I've seen the other day is my laser pointer, which is pretty cool. And just go full screen. Okay. Right, everyone, thanks for attending to my session. I'm going to be showing you my precision pitchfork trading, how I use it in up, down, or sideways market. And I'm going to show you a foolproof strategy for capturing massive swings in any market by adding one simple tool to your charts. So again, guys, before we dive in, thanks everyone for joining me today. I hope you're all staying safe and sane out there. It's really great talking to you guys today, and I'm super excited to share with you the most important tool in my trading arsenal, which I use to analyze the markets and make sense of price action, which to the untrained eye might look like completely random mess. But apart from that, guys, I guarantee that we have some incredible bonus on offer towards the end, which you guys don't want to miss out on. And it will only be available for today's participants. Okay, so what's my ultimate goal for you guys today? I want to share with you the method and the tools I use to simplify price action. And using this exact method and tools can greatly help you become more consistent and find you far more accurate trade setups and entries. So what's the secret sauce, you might ask? Well, there's a special methodology that I use to break down price action in a way that's systematic and that you can use over and over again on any market and time frame. And before you ask, it's not really specific to bull markets only. In fact, using this exact methodology together with a market geometry tool that I will be showing you today has allowed me to participate in both bull and bear markets, and they're leading to massive profitable opportunities in stocks, forex, commodities. We even have option traders that use this methodology to time their entries properly into options. And there's one more reason to stick around, guys. We're going to show you how I leverage this tool to guide our members to 4 times returns since we launched in 2018. So just to give you a bit of background for those who do not know me already, my name is Richard Krugel. Just a bit of background. After school, I joined the Navy, where I qualified as a Navy diver, which I obviously don't do anymore. I'm a dedicated family man. I've been trading for more than 10 years professionally. Something I'm really proud about. So I'm also the first person in history to complete a circumnavigation swim around Spain's largest island, which took me 223 miles over 20 days to complete. But I'm also the guy that refused to give up and kept at it to achieve success. I've been helping more than 4,000 traders here at Price Action Income with my courses and with the tools that I created to experience financial freedom, or just help them improve their trading over the years. Like I mentioned, I'm the developer of the Exponential Profit System, or the EPS for short. So guys, that's just a short intro of who I am. Like I said, I'm here from South Africa. And over the years, I did a lot of things right, guys, and I've learned a lot. But I did a lot of things wrong too, and made plenty of mistakes along the way. And you'll probably see it definitely was not easy getting started at all. I've endured plenty of early hardships, and I had failures upon failures, but eventually my determination and persistence paid off when I started developing my own system and when I partnered with Price Action Income to help others do the same. But guys, after doing this for 14 years, where I've worked on a fast-paced trading floor in Cape Town, developed my own trading system, quit my day job and started trading for a living, started my own trading education business, Price Action Income, and trained over 4,000 traders. Everything I ended up learning, I had to learn the hard ways. But you guys can get to cheat a little bit today and hopefully steal my shortcut. But just quickly, so what's it like to learn the hard way? And I'm sure this might resonate with a lot of you out there. Blowing accounts and going broke, constant stress, living in front of my charts all day long, missing out time with my family and friends and my kids, which I especially hated, and almost throwing in the towel every week because I felt destined to fail. So the question for today is, do you want an easier way to analyze price action without second guessing yourself and without wasting hours for a trade setup? So with the tools and the methodology I use to analyze and trade the markets, it becomes way easier to break down price action in a systematic way and to trade in a more relaxed and especially stress-free manner. But just a quick disclaimer, guys, before I get really started there, these results aren't typical. I will show you trade setups that have generated thousands of dollars in 2020. My results certainly aren't typical, and the average trader who attends any average training gets zero results. So, however, I'm happy to show you exactly what's working for me for free today. And this is not for the get-rich-quick crowd or anyone who thinks that there's no risk involved in trading with real money. Sorry, guys, my throat's already a bit dry. Okay, so let's have a look at a few of my recent trades. I'm going to be showing you quite a few instruments. I trade Forex, stocks, commodities on the futures side. So I have access to CFDs as well. I know you guys in the States might not have. So this methodology really works on any market. In this example over here, the Euro CAD, I netted a good profit of 1,500 USD. What I'm not showing you here, and you probably noticed that I'm drawing a pitchfork, that I had a pitchfork on this image here. I'm going to be going into this pitchfork a little bit in more detail in a few minutes' time. But what I quite often like is to identify trend. There's different methodologies that I do to follow trend direction or when a trend might change. And then I wait for corrections within the trend and specifically use certain pitchfork settings to track those corrections using the right anchor points, because to me, certain corrections display very specific characteristics, if I can say that, and then using the right anchor points, which is always a subject of confusion for a lot of traders as to which settings of pitchforks they should be using, A, or B, which anchor points they should be using. I then try to track the end of corrections, in this case, which I pretty much nailed. And then also I would swing pitchforks in a direction of a trade, which I'll also be talking about a little bit later after I've entered, which I can then use to trail my stops and also place my profit targets, which is very important. Getting into a trade is, but I don't know, 30%, 20% of the work, but actually managing an open trade is something not many people actually talk about. Is also for me very important without getting stopped out too often, which is great. That's why I'm using pitchforks for that function as well. Quick example on Australian dollar, US dollar, quite like trading this currency pair, $1,800 there. This is also after a small correction, actually followed a little correction over here. Once I had some sort of reaction, I've got entry conditions that I do follow that I need to see, which are rule-based. I got into a trade and also knew where to place my profit targets. Great trade over there. And then we have automatic data processing, which is a stock. This one ran pretty quick. I think it took less than a week to reach its targets. Same thing I've done here. Uptrend, track the end of a correction, got into a position after certain entry conditions that I follow, and got into a trade. They also no problem reaching our targets. Crude oil is absolutely one of my favorite markets to trade. It's probably not recommended if you're a beginner. It depends what you're trading. You're trading ETF that tracks crude oil, but if you're trading the futures side, you can all know that it can be very volatile, and you might need a decent sized account to trade it. But in any case, this trade took 45 minutes in total to read both targets. So the methodology that I follow using Pitchforks works on most time frames as well. But it's also very important understanding, which I do teach, which time frames and combinations with each other to use, and following a consistent but reliable methodology to break down price action in a way using Pitchforks to get into positions is what I teach my members. Pound yen, $1,400 there. This was just a triangle correction, one of the patterns that I follow, and very specific entry conditions that is dedicated to only triangle corrections. So I kind of treat a lot of the corrections that I follow on their own, and there are different techniques that I explain that can get quite advanced or as simple as you would like, but apply to very specific corrections, knowing which correction you might be dealing with and how I tend to like to place my stop losses on them and where to place my targets. So guys, each of these trades happened in under 6 months, and they far outweighed any losses in between. And just to give you a quick illustration, here are the trades showing both winners and losers, but also take note that the losses were kept to a minimum, which to me is very important. We'll be quite often using my entry techniques and the methodology that I teach and the Pitchfork tool. You'll find that you kind of get into the area where your risk is at its lowest, where good support and resistance typically steps in. Like I mentioned, ideally at the end of a correction, getting into a trade when you believe the correction is over and that the trend direction is going to resume itself again. And quite often you, with proper money management techniques, you either break even or you at least take a small loss. So as you probably all know, that good traders are experts at managing their risk properly, and using Pitchforks definitely can help you achieve that as well. So guys, that's a total net gain of $6,918 in less than 6 months. And that's even accounting for losing trades. So those results are certainly impressive, guys, and they were only possible with the power to forecast price action. But the ability to do so wasn't developed overnight, guys, and I can really assure you that. So what's changed for me along the way, you might ask? Well, the thing is that I discovered, regardless of varying models, that there is a science to how price moves. And this is what's called market geometry. And to me, it changed everything. I'm going to be discussing what market geometry is in a little bit more detail in a few slides from now. But what I want you to understand, guys, is that I discovered this the hard way after many years of blood, sweat, and tears. And if I had only one wish to avoid the emotional roller coaster that I had to endure to try to make success out of trading, then my only wish would be that I knew what I know now earlier on, and that I more actively sought a mentor that could show me the right way. So guys, that's hopefully where I can step in if this is some sort of analysis that you are interested in. So today I want to show you an easier way. What would you do if you could eliminate all the mistakes I've made and grow your account faster? So I want to give you the opportunity to learn from my mistakes. And since I've guided our traders to over 300% in account growth since we launched in 2018, wouldn't you like to be able to say that you did the same? Hopefully that would be quite amazing, guys. So this is where I want to come to the power of market geometry. What exactly is market geometry? Well, there's quite a few explanations of what it could be, but the way that I define it is that there's an underlying symmetry prevalent in all markets and on all time frames. Now, exposing the symmetry with certain drawing tools is what's called market geometry. And when you do this correctly, it can greatly assist you to make sense of price action and give you a serious edge in the markets. And the most important tool in my market geometry toolbox is the Pitchfork, like you've probably seen on a few of the slides there. I also use channels, which is pretty similar to a modified shift Pitchfork setting. I'll be going over those settings in a short while. If you use the same anchor points, but the pitchforks I use primarily is obviously the Andrews Pitchfork, or called the standard Pitchfork. Some platforms might call it something different. And then also the modified shift Pitchfork, which I use, I would say in the majority of the cases, probably 90% of the time, to try to figure out where a correction within the trend might end. So for me, guys, there are 3 tricks or secrets to the perfect Pitchfork trade. So instead of guessing where price is headed, I can trade with confidence using pitchforks. I don't have to worry about risking too much because they help me place a near perfect stop loss, and you don't need a massive account to see real results when you follow a few rules. So let me elaborate on that first point, guys. I'm going to be jumping on some charts in a short while. So instead of guessing where price is headed, I can trade with confidence using pitchforks. Because when you apply these pitchforks correctly, like I mentioned before, they act as a sort of a roadmap, which price will follow in the majority of cases. And this allows me to plan a trade ahead of time, which is very important. It gives me enough time to prepare before price reaches a certain area that I identified, again, guys, ahead of time, before I even think about executing trades. And when price does follow my projection and I do get a certain few of what I call entry conditions, I then know how to when to pull a trigger without any fear or any doubt of getting into a position, if that makes sense. Then secret number 2, I don't have to worry about risking too much because pitchforks help me place a near perfect stop loss. Now, knowing where to enter a trade at the most opportune time, where your risk is the smallest and your profit potential is at its highest, is what makes a pitchfork such a powerful tool. Now, very often you will find that a pitchfork will capture the very end of corrections, allowing you to use very tight stops without the risk of getting stopped out too often. And this brings me to my final secret, guys. You don't need a massive account and you don't have to take an extra risk to leverage these kinds of trades. I didn't have a big account when I got started, and I never risk more than 2%. We even have traders that don't even risk that. I mean, it really depends on you, what your risk appetite might be. And even if I'm in a few trades or that I'm planning getting into a few different trades, then I'll even reduce that risk some more. And guys, you certainly don't have to risk your account balance to get the most out of your risk and reward either. And guys, speaking of risk versus reward, how would you like to learn how to find an entry that turns on the dime, and then with only using a tight stop, increase your profits by 10 times over? And this is certainly possible, as I would be showing you next. This is what's an example of, it's actually on US dollar CAD. I use multiple time frame analysis to break down price action before I enter. In a lot of cases, I will use a smaller time frame for my entries, so I can place a nice tight stop loss. In this case, I had a 12 pip stop loss, as you can see over there, and this was the result of the US dollar Canadian dollar trade that I took. Again, in this scenario, which I'm not showing here, I used a pitchfork, the shifts pitchfork setting, which I sloped using these anchor points. I'm going to be driving into a chart a little bit later to show how I do this, explain a bit more of the pitchfork in just a moment. But in any case, I identified an entry area, which I call entry zones. In this case, it will be a buy entry zone. Before price reached there, got into a trade following specific entry conditions. And you can see from that previous slide that I showed you, I've only had a 12-tick stop loss here. And I believe we made over 542 ticks on this trade. Very importantly, also knowing exactly where to place my targets and how to trail my stops. And in this case, once I enter, I slope a pitchfork in the direction of the trade I want to take. And this helps me to safely trail my stop loss. And like I mentioned, also place my targets. Very great in this trade is that I actually got out of this trade when price hit this upper red warning line, as I call it, to the tick and reverse low, and that was the end of this move. This move actually lasted, was a great swing trade, that lasted for just over a month, I believe it was. And if you can see these green and red areas, a very small stop loss with quite a large, massive return on there. So guys, these kind of trades are possible. And obviously depends what you're trying to achieve. If you're doing this on a day trading basis, then obviously you'll be out before the end of the day. But I quite like using this specific methodology to swing trade the markets. And quite often I can be in a trade for anywhere between a week to sometimes a month or even more if I do capture great trending markets. And very patiently also allow myself to trail my stops without getting stopped out too often. So guys, if you've seen, that's a massive trade. It started with minimal risk, and after spending a few minutes a day managing the position, I closed out this trade for a whopping 45-to-1 reward to risk ratio. Guys, there was over 4,000% return on my investment. And these trades are possible. I have to be honest, with a tight stop loss like that, they can happen once or twice or so a year. Sometimes I use a bit of a larger stop loss, but in any case, I like to really keep my reward versus risk ratio in check properly. And then very importantly, once I do enter trade, like I mentioned, also manage my risk appropriately. So guys, in a $10,000 account, that's a $7,400 return from one single trade in 1 month. And it depends on, obviously, on your account size. That could have been much more. So this brings me to my next slide, and where I'm going to be diving into some charts. I'm not going to be showing this on MetaStock charts. Basically, the purpose of this is that I want to show you the Pitchfork tool. I quite often use TradingView, guys, for my analysis, because it's a very easy platform to use. But we do have a lot of our traders using MetaTrader and also NinjaTrader. But the main issue we've been experiencing for a very long period of time now is a lot of these traders or these platforms, should I say, don't have access to either the Pitchfork settings or the default settings that I use to draw my Pitchforks with. So guys, for me, the Pitchfork's really the holy grail of trading tools, but it really takes practice and the right guidance to use it properly. I often get asked that they using the Pitchfork, right Pitchfork setting, etc., or using the right anchor points does take a degree of, there's a degree of subjectivity related to that. But this is the kind of thing that with my methodology that I tend to completely eliminate. I don't really want that subjectivity there. So there's very specific ways that I draw them, and it's all these things that I do teach as well. So one of the things that we've did, I've sat down with my developers and we've developed a specific, what we call a market geometry toolbox that we're continuously updating at the moment. I'm showing you that next. For MetaTrader 4 and 5, sorry. And then very recently for NinjaTrader 8, which is actually a platform I use quite a bit to also perform analysis on. And I also have a brokerage account with NinjaTrader. So I execute a lot of my trades in there. But just using NinjaTrader over the years, they do have a Pitchfork tool there, but it can be quite time-consuming when you perform this type of analysis to switch between settings and so forth. So I'm going to be jumping in some charts here. And like I mentioned before, sat down with our developers, here's price action income, and we developed this next Pitchfork trading tool that I'm going to show you next, which we call the market geometry toolbox. Now, guys, I'm going to be showing it on a MetaTrader. I'm not showing it on MetaTrader 4 or 5, sorry. It looks very similar to this. I would probably call a floating toolbar or floating toolbox. And we have the specific settings that I use here. So this is again on Australian dollar, US dollar. I've just pulled up this chart because recently we had a very good trade here. I'm going to just show you some of the techniques that I use to find very pinpoint accurate setups. And you probably noticed from here, guys, is that I'm not a very big believer in indicators so much. So I love following price action or naked charts. There is one indicator that I do use, which is the MACD, which I will not be discussing today, but it's also the material that will be on offer today, where I discuss using the MACD to find a momentum divergence. But in any case, guys, in NinjaTrader and also in MetaTrader, you'll have to import this as an indicator. Again, these settings are according to my default settings. They can be customizable, but I wouldn't recommend you do that when you use it on the Pitchforks. But you'll see there are buttons on the top here, and then we also have a hide button and a show button. So very easily, when you perform this analysis, you quite often have quite a few Pitchforks on your chart. So rather than going into NinjaTrader's drawing, selecting the actual Pitchfork, and then clicking on it again and changing the settings, you're on the fly here. You can just click on it, and I'll be showing you that next. So this one I color coded in red, and this one is a shift Pitchfork. So here we have the standard Pitchfork, and this is actually a Pitchfork that I've drawn on my chart since last year, November. And I think you'll probably agree with me, since this, before this actually, price has been a strong uptrend. And I'll show exactly how I draw and why I draw these Pitchforks using these anchor points. So you'll probably see from there, let me just use that again. To draw a Pitchfork, I like sloping a Pitchfork into the direction of a trend, which worked pretty well using one anchor point, which is the starting point. The second anchor point, in this case, a higher high. This case, it was a little bit of a lower low below here, but it's the only anchor point I could use that starts showing promising results when price started moving upwards, and it started respecting what we call median lines. For those that are unfamiliar with Pitchforks, Dr. Alan Andrews created the standard Pitchfork, and he basically created what he called a center median line. And this starts from an origin point, which is your first anchor point, and it runs through the 50% or the middle of the range between your second and your third anchor points. And that obviously gives you a certain angle that's projected, in this case, upwards. And then he went further and also applied an upper median line and a lower median line, which runs perfectly parallel to the center median line, but in this case projected from your second anchor point and your third anchor point. Guys, I also added these, what I call 50% dash median lines. They are visual guides for me, and quite often they help to make sure that price is respecting them. And when they do start respecting them, before they reach important lines like your upper or your low median line, depending on the direction you want to be trading, that the setting you're actually using is the correct one, and that it will probably continue to be quite useful into the future. So I quite like having a Pitchfork define the probable move of a trend, which is pretty much what it did here. These upper lines that I've added here are the same distance or equidistance from your center to your upper, and they just projected from your upper median line and projected upwards again, running again at the same slope, and they're called upper warning lines and lower warning lines. Very useful tool to use during extreme moves. As you'll see in this situation, back in early January this year, price hit this upper red warning line, especially in strong trending lines. They tend to have a stop markets in the track and have them move in an opposite direction. Now I'll just be discussing the next button, which is a shift Pitchfork. Like I mentioned, the one I use in the majority of the cases. Now, typically apply this when I want to use it over corrections. So the only difference here is that instead of the center median line starting at your first anchor point, it starts at 50% of the range between your first and your second anchor point. Guys, it might seem like a mouthful. I'm sorry about that, but all of this is explained in all the courseworks and stuff that I do. But in this case, it was created by or proposed by a guy called Schiff. His surname was Schiff, and he was actually one of Dr. Alan Andrews' colleagues at some later stage. I believe he was a trader in New York, and he proposed using this setting, especially because all markets don't always run at very strong angles. And for me, this is my go-to Pitchfork when I deal with corrections. Just quickly, guys, it's very simple as that, as drawing that. We also have alerts that we programmed on these lines that if price does cross them, it will either give you an alert. You have different alert files here on NinjaTrader and also on MetaTrader. So they can alert you when price actually crosses an area. But just quickly, I want to show you a setup that happened over here. Price, he reached the upper rate warning line. It came back to the center median line, and I was tracking this, first thinking that this was a correction. Some of them might call it an A, B, C. See their little signal fired off. That's not useful right now, but this is typically what an alert would look like. There was an entry over here, and this is quite often where I'll create an area. I want to see two different sloping, pitchforks, in this case, an upward sloping pitchfork defining the trend, and then sloping a pitchfork that will hopefully find the end of the correction. And in this case, you'll see that this could have been a tradable trade. Price didn't actually break the high again. This was what we call a single zigzag, one of the corrections that I follow. With proper money management, got into a trade here using smaller time frames. Price did not manage to break this high again, but got out with some small profit. And this is the case where price reversed lower again. But rather than breaking my head like some guys often would when they follow either Elliott wave or corrective patterns and how to count them properly or try to label them properly, I use these pitchforks as visual guides to guide me into an area. And this was a picture-perfect setup and a very good example of where price returned to the center median line of the trending pitchfork, and reached the low red warning line of the shift pitchfork, which I drew in this case to find a pinpoint entry. Very accurate means of analysis, and price return broke this high, and I've made some decent profits on there. So guys, just quickly, I also have channels here. Channels, very simple, simple tool to use. We just included that there. There's nothing special, but trying to figure out a lot of these percentages in either MetaTrader or in NinjaTrader sometimes can be confusing. And I just like the standard settings, which is why we created this tool. We have fib extensions, we have fib retracements, and we're also constantly adding new tools to the toolbox. These buttons here, if you click on it, it just hides everything. If you want to remove some of the chart clutter, and then we can all show them again, and it's back again. Again, guys, a very quick example of how I use my market geometry to find the end of corrections. Hopefully this does make sense to you guys. I will be taking some questions momentarily. I see we still do have a little bit of time left. But in any case, a very accurate way to analyze the markets. And as you've probably seen here, that I've not used a tremendous amount of indicators. In fact, I mostly rely on naked price action. And then when I do speak about entry conditions, which I do teach, which will be included in the bonuses I'm going to show you a bit later, I only use the MACD to spot momentum divergence. All right, guys, so that pretty much brings me to the end of the demonstration with regards to drawing of pitchforks on MetaTrader and a NinjaTrader. And guys, ultimately we focus on the two things to make this a perfect addition to your toolbox. Firstly, the precision pitchfork is optimized for maximum accuracy and results. And the precision pitchfork is simple to use in your analysis. Guys, if you've never used a pitchfork before, then I propose that you try to give it a shot. I'm sure that a lot of traders are aware of pitchforks. Unfortunately, some platforms just do not offer proper pitchforks, in my opinion, or they don't have all the settings necessary to draw the correct pitchforks, and especially applying them on different market conditions. And if you've never drawn pitchforks before, just try to use them. It never ceases to amaze me how price actually finds angular support and resistance at these lines, and how price tends to respect them. It's really, really cool to see, especially when you're watching them in real time. Sorry, guys. Let me just get that closer again. Somehow I lost the. Sorry, guys. Give me 1 second there. Sometimes switching between these slides really get me confused with like 4 screens. But in any case, guys, sorry, hopefully you've seen that. The Precision Pitchfork tool is simple to use in your analysis if you know what to do, and this is why I'm here today, to guide you doing that. So what I'm going to do with you today is I'm going to give you and share my new Precision Pitchfork with you today. So you can trade with deadly precision in MetaTrader 4 or 5 or in NinjaTrader 8. Please note here, we've only created this for NinjaTrader 8. I believe those traders that have traded with NinjaTrader for a while have probably moved over to NinjaTrader 8. I do believe it's a better version than 7. So guys, this isn't just an imitation. This is the ideal pitchfork designed to my specifications. There are default settings there, especially when it comes to the pitchforks. So if you're out of the box, you can just use them as they are. So guys, my Precision Pitchfork is perfect for you if you want a solution that delivers real results and you want to trade high probability opportunities in any market. And if you want to build your complete strategy with the tools in your platform and you want to trade and live life on your terms starting now. Guys, just a quick few of the reviews that I've got over the years. We've got Stephen over here. He's been with us since the beginning. He's been with us for more than two years. 6 days ago, it's just an actual screenshot we took from the beginning. Thanks, Richard. Guys, Richard is the real deal. Since discovering his videos and finally buying some courses, market geometry has greatly increased my trading success. My recommendation is to learn all that you can about the Andrews Pitchfork. We have another one here from Raymond. I trade with fibs and pitchforks in most markets with great success. Love your market geometry. Guys, this brings me to today's offer before we run out of time. I also want to take some time to answer some of the questions you might have. And this is just for today's presentation, guys, and only for the attendees that attended my presentation. I'm going to give you a lifetime access to my custom precision pitchfork indicator for a total value of $497. I'm also going to give you lifetime access to all the updates and add-ons that we might do in the future. Continuously try to improve these things, as things also change with some of the platforms. You do sometimes need to update your coding or so forth. So that's included as well for lifetime. Then also my personal Precision Pitchfork trading guide, which I'm going to include. That's a downloadable PDF. Great guide to get you started, especially if you've never used pitchforks before, or if you were confused on how to use them before. This guide is really made to help you guys get started. And then also have a 3-part Precision Pitchfork training course, which is more than a 3 hours video course that I personally developed myself, which is also just great to see applied to how I apply pitchforks over and over again, using different corrections that I follow, etc. So a great bonus there for $497. And I'm also going to give access to a members-only message board for sharing charts and more. That's a value of $197. I'll be showing you a little bit of the back end in a short while if you guys are interested in that. This is what that looks like. So if you do decide to get this drawing tools or market geometry toolbox like I've shown you before, you'll have access to the Precision Pitchfork tool, step-by-steps how to download it in whatever platform you want to apply it to. And I have all those videos and also the PDF that I talked about available here. And then we also have a members-only discussion board where you can log in, share charts. People just discuss the charts, maybe their trade ideas, and also gives you access to myself if there's any questions you might have about either strategy or any trade opportunities that might come up. And then I'll be more than happy to help you guys out there as well. All right, guys, so you can see why this is well worth over 2,000 US. Actually, 994 would be pretty amazing in my opinion, but since I know people are struggling and these past few months, or should I say past year, has been especially tough. So I'm going to go even lower today. And like I mentioned before, only for today's attendees. So guys, if you want to take me up on this offer, again, that's the Pitchfork indicator, lifetime access, downloadable Pitchfork guide, 3-part video training course, and a members only message board. I'm going to open this offer only for today for a limited price of $147 US. And guys, we always offer, with anything that we offer the general retail traders out there, we do provide a 30-day money-back guarantee. So if there's for any reason that you do not like this or don't find any of the educational material that I included into this package, then you can just ask for your money back and there'll be no questions asked. And so we have a full 30-day money-back guarantee included as well. So guys, if you're interested in this, then here's the link. We got Westmark. Actually, that is not the link. I just have to quickly ask Jeffrey on the other side there to just give me the correct link there. I'm sure he's already put up some of the links for you guys. I apologize. Some have pasted the wrong link in there. But anyway, guys, that pretty much concludes my presentation. Jeffrey, if you're on the other side, and we've got any Q&As, then I'll be happy to answer that for you.
We did have a question from Ram, who wanted to know, how do you select a good origin point for a pitchfork?
Is that from Ram? Well, like I mentioned before, I use multiple time frame analysis as well. And quite often, my main methodology is to find the end of corrections. Now, where does corrections tend to appear is something that I also teach, using very simplistic tools, which I've not shown today. But when price reaches some of these levels that you know about beforehand, then quite often you'll see, let's say, a retracement that obviously goes against the trend. Let's say an uptrend, price will start pulling back. It goes up again, it fails to make a new high, and then moves lower. And it would be at this stage where you anticipate that you're probably dealing with a correction, A, and B, when price then approaches that low of that first retracement low, if this makes sense, that's the time that you would start drawing your pitchfork. And your origin point would then be, for me, the beginning of where you believe your correction is starting from. But I mean, this can be quite confusing to some people sometimes. There are also different corrections that I follow. For example, triangular patterns, symmetrical, ascending, descending, or even expanding triangles, which are some of my favorite patterns to trade. I use very specific anchor points, which I also teach over those specific corrections to pinpoint where they might end. So generally, just to answer that question for Ram, my origin point will be from an area where I believe a correction started from, if that makes sense.
Hey, Jeff. Sorry, this is Greg in the control room. Did I hear Richard say that the link is incorrect on the screen here? Is there something else you want me to show folks?
Jeff, Richard here.
Jeff, I think your mic's on.
I'm actually able to go to that link. If you have access to the chat, I just posted one in chat that is redirected.
Okay.
So
yeah, I just thought I heard him say that this is wrong, and I didn't have it correct. Oh.
Yeah. It appears to be working. It's just sometimes it doesn't appear to be redirecting properly for some people. So
yeah,
I'm not sure why
what's happening there. I apologize for that, guys. It should be, if it's directing you, Jeffrey, to the right area, then that should be it. So
yeah, it is working. For some,
okay.
Try this one, guys, if it doesn't work for you.
So did you put the one there in the chat, people? Okay, there we go. Price action income, back suspicious and pitchfork indicator. That's the one, yeah.
Okay, let's see. It looks like there's a lot of people asking for that. So, all right, there you go. That one works.
Awesome. Bit of a glitch there.
All right. One question that we have is do you primarily use this tool for same-day trading or intraday trading?
I prefer swing trading. So I quite often like to look at dailies, 4 hours, and then a smaller time frame, let's say 30 minutes to enter into a trade. That being said, it would also depend on, sometimes I can't help myself if I see something intraday, like let's say on crude oil, one of my favorite markets. If I'm actually present to watch the markets and I do see a picture perfect setup, then by all means I'll take it. We do have some of our members that only trade intraday. It works perfectly well for them. I also mentioned before that we also have option traders that use this methodology to, because it's quite important to get into options at the right time as well, the theta decay and all that. So especially if they're trading directionally, like buying calls or puts. So it really depends on your outlook. If you want to be trading intraday, you want to be taking longer term trades, and it's really also a factor of the different time frames that you would use to find the setups as well. We have guys that use monthly time frames, weekly time frames, and then enter on daily time frames. So very patient traders as well. So it really depends on your taste and how you want to trade.
Rogers wants to know if this is for futures only.
No, not at all. The examples I showed here, a lot of them was on Forex. There was some of them on stocks. So it works on any market. It really does, obviously, any freely traded market. So it's just a really great way to find the underlying symmetry that's, to me, prevalent in all markets. A very simplistic tool, but very powerful, to say the least. But it works on any market, on any time frame. I just don't have the time to go day trading, for example, all day long. I also have members to take care of and so forth. So I prefer swing trading. And when I do actually find trades quite often for some of my members, then we look at various markets, Forex, commodities, futures, stocks, whatever it might be.
All right. That appears to be the majority of the questions. Ram says, thank you for the nice presentation.
Thanks, Ram. Thanks very much for listening, and to everyone there. So I'm actually, I think, 3 minutes short, but on time.
And you started. You're fine. Yeah, don't worry. I can talk about anything for 4 minutes. So, Richard, good to have you in here for your first time in MetaStock. Welcome.
Thanks so much for having me.
I hope you enjoyed it.
Awesome. I did. Thank you very much, and thanks for everyone for listening. Take care.
All right. Thank you. All
Cheers.
right.
Bye. Bye.
Okay. All right. There we go. Sorry about that, guys. Let me go ahead and kind of get back to sharing here, kind of get a little bit resituated, if you would. Let me go ahead and share my presentation and my screen. And we'll talk about stocks and commodities real quick. So we did have a question. I think it was from Ram, but it might have been we have had a lot of questions. I actually don't think it was from Ram. It was from Silver. Silver wanted me to clarify what the offers were for Stocks and Commodities magazine today. So I thought that would be a really good opportunity for me to kind of explain everything, and also to let you know kind of what the offers actually are. So let me go ahead and go back just a little bit. If you are watching this in GoToWebinar, you don't need to worry about it. You're already been registered for the event. That's why you're here. If you're watching it on YouTube today, what you should do is you should like and subscribe to the video stream, because it does help us out quite a bit. And YouTube's been a really good, let's say, avenue for us to kind of get the word out about MetaStock. So if you're on YouTube, make sure to like and subscribe. Greg in the control room is going to put a link into the description, or link up right now, that'll say register here. If you register here, you'll get a free issue of Stocks and Commodities just for doing that. So go ahead and do that. You'll receive the free copy. If you do any of the MetaStock offers today, like the subscription or anything like that, you're going to automatically get a 5-month subscription to MetaStock. And if you spend more than $300, you'll get actually 2 years of Stocks and Commodities. So we're going to go ahead and kick those over to you as awards and bonuses. Everybody gets a free copy, and those of you that do anything with MetaStock are going to get at least 5 free months. So, and thank you. All you have to do is register. If you're in the GoToWebinar room, you're already registered. You don't have to do anything. If you're in YouTube, click on the link that Greg is going to put, probably right here somewhere. So there you go. Hopefully that's clear. Hopefully that clears up that question for everybody. And while I'm at it, Stocks and Commodities is awesome. We love Stocks and Commodities. They do a great job of sponsoring the event for us year after year after year. And I think they've been sponsoring the conferences and summits and sessions that we've done for over a decade now. So we do appreciate them, and they're great people to work with. And it's a great magazine. So I'll talk more about that later. So obviously we are MetaStock here. MetaStock's been rated the best software program in its price category for 28 years in a row. The offer that we're doing is if you just do MetaStock, we're going to go ahead and you pay for a month. We'll give you the second and third month of MetaStock for free as part of your subscription. You can do that at metastock.com/conference promo, and we'll basically get you all set up for that. You can also call in if you have questions about like markets and do we cover London? We do. Do we cover India? We do. Do we cover about 200 global markets? We do. If you have any questions about kind of anything that you want to be able to do and I missed it and I didn't answer it, give us a call. We have a great sales staff here. They're all based in Salt Lake City, Utah, and they'll take really good care of you. They do a good job. So you can give us a call, 800-882-3040. If you want to stay on and keep listening to Guy Cohen, because I would, while you're kind of helping get that set up, just go to metastock.com/sales chat and you can start a chat with one of the guys. So the offer that we're going to do again is buy 1 month, get the second and third month for free. And it's a great offer. There is a reason MetaStock's been rated winner of the Stocks and Commodities Reader's Choice Award for 28 years in a row. And so there you go. Let's talk a little bit about Guy Cohen. Guy, I've had the pleasure of meeting several times in London. He has a very, very interesting OVI indicator that he is used specifically for options on U.S. stocks. We worked with Guy to pull this information into MetaStock. It's available as part of like the Traders Club, and it means that you can kind of use this really powerful indicator as part of MetaStock. You can write scans around it. You can incorporate with any of the other studies that are in MetaStock, and it's a really, really great thing. So Guy is also, I will add this, very nice guy. He knows some very good places to eat around London. And I think that's how I'm going to introduce you, Guy. How are you doing today?
I'm doing good. How are you, Jeff?
I'm good. I'm good.
And by the way, just also a nod to Hunter. It was nice to see you, and I wish him good luck.
Yeah, me too.
Wish you good luck. And by the way, we are U.S. stocks and options, just to clarify, but all will be revealed soon. Before I begin, I better say, look, I've got a presentation. We were looking at how to really, really cut it down, but we couldn't find many ways in which to do it. But what I'm going to do for you today, I'm going to go at a pretty fast pace, and then hopefully we can get some questions in at the end. So my voice is going to go a little bit quicker, just so that I can get ahead of the curve, as it were. But what I want to say just before I go into it is that what you're about to see is effectively like an anthropomorphization of charts. Now, I know that many of you guys are about charts, and that's good. But provided that you also absolutely understand that the chart is there to reflect human behavior. And so an awful lot of what I'm going to talk to you about tonight is human behavior. Now, I don't know whether you can see me. I don't know whether I can see you wave or not, but just give me a wave if that makes sense on the GoToWebinar platform, because we're going to, as I said, anthropomorphize a chart, going about it in a slightly different way to what you might hear other people. They talk about chart. I'm talking about people. So just give me a wave. I can see you now, right now, just so I can see it there. There you go. Brilliant. Okay, off we go. So this is all about growth secrets for small trading accounts. And big question is, why focus on small accounts? Well, the fact is that no matter where you are in the world, when we've spoken to people, people with 6-figure accounts think they have a small account. People with 4-figure accounts think they have a small account. So it seems to me that a lot of people think they've got a small account, and at the very least, they want to translate or transform their account into a much bigger account. So it's a kind of like a universal perception. It's personal, and it's all relative as well. Now, these two guys here, Patrick, who made $4,500 in an hour and managed to telegram me that thing. Sorry about the profanity, not very Salt Lake City, I know, Jeff, but what can I say? It wasn't me. I would never use such a word. He thinks he has a small account. Simon, 76,644.74 in less than a year, thinks he's got a small account. So again, these things are very personal. Now, these ladies that you see on the screen, we'll be talking about them a bit during the next few minutes. They did start with what I would call a small account, around $3,000, and they more than tripled their accounts in a very short space of time. So it's something that we can think about. But again, all started with a small account. So what are we going to cover today? First of all, why stocks? I'm going to get into that. I'm also going to then go into the secrets of growing a small account. Then we go through the mechanics of why prices actually move. Seriously important, because if you know why prices move and the interactions of demand and supply, then you can really focus your efforts then. What that's all going to do, the first 3 steps here, is going to set you up beautifully for what we call the big money footprints. We are all about following big money, where there are imbalances of supply and demand. That's what we're all about. That's what we're going to do. Then we'll look at the case study of how other people have tripled their accounts, how you might be able to do the same yourself, and then a quick demo as well, how to find best setups in just a few minutes. So it is a lot to go through. And again, those girls, ladies, did it. Imagine if that was also you tripling your account. This is Pat, turned 10,000 into 26,000 from October to January 2019. And here's the important thing. She didn't trade that much. And also, most of the profits were from just a few stocks that she traded over and over and over again. But then she repeated the trick. She started again and then turned $3,800 into $33,000 from April to January this year, from April 2020 to January 2021. So again, repeating the same trick, similar kind of metrics as well. Joyce tripled her account since May, from May to December, etc. And there's a whole army of people who just really love what we are talking about tonight. And of course, many of them are also MetaStock people just like you as well. We'll talk about that too. So big money footprint followers, if you like. By the end of the session today, you'll discover how they did it and how you might be able to do that same thing as them, and how to achieve it without over trading and without taking big risks. So by the end, you'll see how you can follow the exact formula that Chloe, Pat, Joyce, Tobias, and many others have used to scale their accounts. So, as I promised, I am talking pretty quickly, but that's good, and hopefully we'll get a Q&A session as well. Why stocks? Why stocks? Well, there are many other asset classes that you can invest in. Real estate, great to have. Bit of liquid. If you have lots of debt in it, that you could be handcuffed to, increasing interest rates, etc. Look, it's there as a balance for your portfolio, but not all your eggs in one basket. Bonds and commodities tend to be quite specialized, hence the little cap and mortar board there. Crypto and Forex, well, look, it's a bit of a roll of the dice. Get the timing right, happy days. Get the timing wrong, could be a disaster. Forex, what I look for is an empirical edge. And with Forex, I find that rather difficult. And so do quants, because we do a lot of quant-based stuff. And then you've got the alternatives like fine wines, classic cars, art, all that stuff. Again, quite specialist as well. What we like to do is stocks. Why stocks? Well, for a start, stocks are exciting. Look at this overstock. And how many stocks have you seen do crazy things over the last few years? Literally 10xing in this case, in 120 days, 3 or 4 months. Pretty cool. But also with stocks, you can actually have an empirical edge as a home-based retail trader as well. It's easy to start. You can start small. Simple to learn, simple concepts, minimal cost to start up, but also not just speed, but flexibility. You can do this anywhere where there's an internet connection. You choose how much you do. You'll get very quick feedback and quick results so that you can calibrate and get better. And it's scalable. You can start small and grow quickly. And again, you can apply simple, logical principles. What we do is slightly different as well, but where we can actually give an edge and possess an edge, a palpable, mathematical, empirical edge. So the question is then, well, why aren't all traders millionaires? Why aren't all stock traders millionaires? Well, look, you got a lot of choice. And overwhelm is a big fact of trading. Overwhelm of what do you choose to do, which asset class, which methodology, which software, which trainer, so much to learn. So if you've ever felt that, well, that's something that you might have gone through. Also time. There's a learning curve to all this as well. And it's not just learning one method, it's learning all these different methods and then thinking, which one are you going to gravitate to? Now, another thing is we don't do intraday trading. We don't stare at screens. So that's going to save you a bit of time there. And then finally, well, who to trust? Where's the sweet spot for you, and who resonates, and which method resonates? Now, in my experience, when I work with professionals, as you'll see, they demand proof. I have to produce proof of a system actually working in order to get professional buy-in to what we do. So that might be a good place for you to start. So this is one of our funds that we have launched, and this was from February, but we're still around 60+% up and against the market, which is way below. So this is us in blue, and this is the market in red. And actually, that asset is now up to about $22.5 million at the moment. That's the kind of proof we have to show when we go and approach professionals. So that's what we do, and that's what I'm about to show you tonight is responsible for also doing. And most private traders really never get past all those challenges. So that's why stocks, they're exciting and they're learnable. And what we can do with them to repeat that empirical edge is repeatable. Let's talk about now the secrets of growing a small account. Now, if you've ever felt anxious about the amount of risk you're taking and how safe you can trade while also scaling an account with serious growth, well, then you're in good company. That's a very common thing. Similarly, if you worry about whether you have a different set of rules that apply to you than other people because maybe your account's a bit smaller than theirs. Again, if you've had feelings like that, it's very common. Join the crowd. But luckily, that's not the case. Maybe some people here, although unlikely with MetaStock folks, maybe you've had a fear of getting started at all, or you're really still paper trading and all of that. So that too, inertia is a big thing. Now, luckily, if you can simplify your processes and follow just simple processes, then and principles, then it's just as easy whether you have a small account or a medium-sized account or a large account. And then when you see what other people have done, you can be inspired. You can see what's possible. And look, wherever you are in your journey right now, you're not alone. This is a well-trodden path. So you're okay. It's just a question of choosing what resonates with you most. Now, what we're looking for ultimately is what we call sort of the triple X trade. Now, not all of them are going to triple X by any means, but some of them go nuts. And typically, we're talking about a large cap established stock, not a penny stock. And we're looking for what I call big money footprints, and that's what we're going to be talking about a bit later. But we also want low risk with our trading plan, and low risk in terms of the setup that we are actually looking for. So we're not talking about fly-by-nights. We're talking about established stocks, and it can be either bullish or, in the case here of Roku, bearish, where big money was made to the downside very quickly as well. So there are three principles for growing a small account: 1, safety; 2, growth; and 3, mindset. Do jot these things down as quickly as you can, but I know that Jeff's recording this, so you'll be able to watch it again. So safety, growth, and mindset. Let's attack each one. The first overriding principle is keep it simple. Now, I will show you also later how to get your hands on this book that I wrote, which is called Growth Secrets for Small Trading Accounts as well, which basically enshrines all the principles together in one neat little document as well. So keep it simple. Don't over-elaborate. So let's talk about safety. First of all, of course, don't bet the farm. That's pretty easy. Then also, don't overtrade. I mean, a few trades, max 3 to 5 tops, is fine. Less really is more. Just to illustrate the fact, here's Pat, who almost 10x'd her account from April to January. She trades, on average, just over 1 trade a week. Just over, on average. Not every week she trades that. Sometimes it'll be 3 or 4. Sometimes it'll be nothing. But on average, it's 1.28 trades per week. Chloe, who 14x'd her account in 2.5 years, 1.19 trades per week on average. Now that's something to think about. They don't overtrade. What they are is super fussy, really, really fussy. They only trade certain setups with certain stocks at certain times. And give yourself easy to reach profit targets. Don't say, right, I've got $1,000, I'm going to be a millionaire within 5 months. That's ridiculous. Okay, now maybe you get a GameStop type of situation. Unlikely though. So easy to reach profit targets with individual trades as well. Not just your big goals, but also within each trade. These guys do not set outrageous targets. So you often hear people going, right, I'm only going to risk 1 if I can make 4. On what basis is that 4 coming from? Better risk 1 to make 1. Much better odds. Now, if you have something that gives you better odds, then you're going to win more often than you lose, and now you've got a winning system. The second principle is growth. Again, I talk about these big money footprints. We're going to talk about them in a few minutes. This is what you want to specialize. This is what we specialize in. This is what these girls and guys also specialize in. I'll tell you all about that in a few moments. And with those big money footprint setups, we also focus on a finite group of stocks. We don't need to be looking at tens of thousands of stocks. So save time, make more. Avoid ugly, messy, volatile, scribbly looking stocks. Don't try and be clever in the market. If the market is trending upwards, trade long. If it's trending downwards, then either bow out or trade short. But don't try and outwit. Don't try and be too clever. Don't try and pinch. Doesn't work. Third principle is mindset. Now, there's that big D word, isn't it? Let's write it down, or let's put the D word there, D. And the D word is very off-putting, isn't it? Because it stands for discipline. And discipline is not the right word. The right word for it is the G word. And I don't mean guy, because that's also a good letter, but the G word is guidelines. Guidelines are liberating. They give you a tram line to safely navigate, and also they can propel you into that elite group as well. So by the way, talking about an elite group, this here is thank you for my winning. My winnings are now 24 out of 25 trades. I don't know how long this can go on for. This is from Tobias. Now, why I bring up Tobias here is because he was a problem child, if I can put it that way. He was literally couldn't do the D word or the G word. He couldn't do guidelines, wouldn't do them. And eventually we got him to do them. And this was the result. This was back in February. He wrote into one of the webinars just like this and say 24 out of 25 winners by following that G word. So imagine this. Imagine that you now have to justify each trade to a sort of silent partner sitting on your shoulder, a bit like me. I'm sitting there, and you, having learned the big money footprints and the trading plan that I teach you, you've now got to justify every trade to me. That is going to stop you from making a lot of bad trades. So justify each trade for safety and opportunity, not just for safety, but also opportunity, because that's what we're all in it for. Now, principle, secure your profits quickly. Get to a point where you can't lose quickly. Then effectively, at least it's not eating to your pocket if something goes wrong. It's the market's money at that point. Now, the market's money is still really important to you. Don't get me wrong. It's still really important to you. It still hurts if you lose that, but at least it won't cause a loss in your account. So secure profits early, as in ring fence them. Don't get greedy, and only focus on quality, not quantity as well. Keep it simple and don't do style drift either. Keep to a style. You can't do that many styles as a trader. You just can't. Focus on 1 or 2, and that's where you'll be. Now, in terms of keeping it simple and not overcomplicating, what trading is all about isn't charts. It's all about people. It's all about buyers versus sellers. That's what you've got to understand. You guys are doing it from home. The people at the exchange do it at the exchange. You are people, they are people. It's all about people. The more complicated your chart is, I would say the quicker that you'll lose money and get overawed and overwhelmed and not be in good shape. Whereas a simple chart that can explain the relationship between buyers and sellers, that reflects that, that's going to help you make money. So that's part 2. Now part 3, and then we'll be ready for those big money footprints, which is all important. So imagine that you've got this image of a dream home. Maybe you already live in your dream home, but maybe you don't. But picture your dream home. And I'm going to give you 3 scenarios, and each one contains a super important lesson that literally unlock the secrets to successful and simple trading. So let's go for scenario number 1. This amazing, beautiful home has got an asking price of $950,000. You offer $950, but so does Bob, and so does everyone else. They're all offering the same. What's the lesson to be learned? Well, big money is being thrown at the property, but it's not moving the price because everyone's bidding the same. Correct. So that's not moving the needle. Scenario number 2 involves information. New information is that Google or Amazon, whoever you want to call it, is moving into the area 5 miles down the road with a big headquarters, 5,000 people going to be employed there. That's going to change the nature of this area. That's going to increase demand because more affluent people are moving in, big, good jobs. They want new properties. They want leisure. They want to go to the movies and restaurants and all those kind of things that you can do when we're not locked down. So with that information, Bob, who had offered $950, now offers $960. And then Sue, she offers $970. And then you offer $990. And then Jim wants it more. And there's become this bidding war now based on information that everyone has access to. You're now offering $1.1 million. So what's the learning point? Well, big money alone wasn't enough to move the needle. It's big, aggressive money, a bidding war. That has moved the price. That's moved the needle now. But there's a third scenario, and this isn't public information. This is scarce information. And I want you to write down the words scarce information, because scarce information is the most important thing. Now, Bob's first bid was $950, then he bid $960 based on the Google information. But he has done a bit of extra due diligence. He's run around the area. He's found an old couple that live in the property behind this beautiful home, and he's seen all this land that they own, and they are privately willing to make it available, but they don't want anyone else to know. So only Bob knows that that piece of land is now available. Now, armed with that information, he knows he can bid more because it's going to make his property worth even more. He could build more stuff on it. He could just expand his land, make his land better, all those things. But with that, he knows his property, this dream home, has become infinitely more desirable. And now he's the only one with that information. Now, what we want to make sure of in the markets is that Bob and someone else doesn't get our dream home. Here's the learning point. Information is valuable. That Google information was valuable, but scarce information is life-changing. And here's what I mean by that. If you are a diamond dealer, you have specific information of how to value a diamond so that when you buy it, you're buying it for one price, and then when you sell it, you're able to command a 100 or 200% premium on that by adding value and by knowing your diamond stuff with cut, clarity, color, carat, source, all those. And that information to a typical diamond dealer is worth millions over their career, is it not? Scarce information means repeatable profits. What about Coca-Cola? Scarce information. No one knows the secret formula. It's actually held in this vault. It's worth billions. The same for KFC. Secret rub recipe, worth billions. Scarce information. Realize how important scarce information is. It means a lot of money, and it means repeatability. And that's what we want. Scarce information can be life-changing. So our job is to make ourselves like the diamond dealer, but of the stock market, where we can get that information. And now you're literally teed up and ready to understand the importance of those big money footprints. So just give me a wave on that one. I just want to see you all here. Give me a wave, ready for the big money footprints. Give me this little waving icon would be great. Let me see you. Okay, let us go into the big money footprints. What are they? Well, these are footprints, telltale signs where you can see big money, which is aggressive, as in bidding war type money. It's present in the chart already, but it's also potentially lining up for more, which is going to move the price even more. Now, 3 of these big money footprints are available to exploit literally as we speak. And if you can identify those, then you're going to have a lifelong skill. No question about it. If these become things that you look for, you will have a lifelong skill to be consistent in the markets. Now, very quickly about me, just in case Jeff didn't already tell you, I'm a nerdy but very enthusiastic professional trader, made over 7 figures, thousands of percent in personal gains, had big runs in the market several times, and that I can go on about that. I'm also the founder of OVI Traders, soon to become known as Wise Traders in the spring. And what we do is we help individuals. We create software applications and education to help individuals make their trading successful. Now, you might have known me in various media situations, whether it's been Reuters or Bloomberg or this and that. I've had blue chip clients like New York Stock Exchange and the International Securities Exchange. I won't go into that. Written best-selling books as well, published by Financial Times and Wiley as well. So fair amount of pedigree there. But what I also do, in addition to what we do here, is I also help professional money managers manage money. And you see that our equity curve is in blue here. This is what we have achieved over a period of about 16, 17 years. And this red line here is the S&P. Again, over the last year, this is us in blue, and this is the S&P in red. It's a remarkable difference. And this is something that's becoming bigger and bigger. And what I'm talking about today leans into quite a lot of what we do there. And that's why I'm able to command big fees with that consistency with professional money managers, publishers, and all those kind of people. So literally on any given day, there are millions of dollars being traded in the markets as a direct result of our big money footprint kind of ideas and my systems. And also, more importantly for you guys, I mean, that's the credibility aspect, but more importantly for you guys is that we have a community of people just like you. In fact, some MetaStock people are already in our community of private investors wanting to get better at trading and complement their existing tools that they have with something like MetaStock and complement them with what we have as well. And this is a community that is very tight, and it's extremely friendly and warm, and we're here to help. And in fact, if I just highlight 2 of them, Chloe is 14x'd in 30 months. She's actually become now one of my mentors. She helps mentor people, but she took an account from $3,000, turned it to $45,000 in 30 months. She made 155 trades. This is not someone who got lucky with one trade. She has a 76% win rate and a 1,400% return. Almost gave up, was able to transmute this into dream trip around from Malaysia, where she lives, to Europe for the first time, met us, and I said, you know what, I'm going to hire you. Roger, slightly different, a retired guy in his 70s. He has now said that what I'm about to show you is responsible for about $685,000 of profits, and it's transformed his retirement life. And a great guy, Roger. There's videos of him as well. So again, this is our community, and we get to know them personally. And it's all about really, creating a legacy, isn't it? It's like, for me, one of the great things about what I can do is I can do it for my kids. I can do a small account for my kids and do something like, almost double it in the question of weeks in the summer when the market circumstances were nice and friendly. It means that I can have the flexibility in the day to talk to you guys or to take my little boy to school. That kind of thing, and be with my dog and my family. But my dog is literally right under here right now. This little fellow is literally right under my feet as we speak. So it's about that flexibility and that legacy that you can also hand down that knowledge to your kids, grandkids, and friends and the like. Now, where did it all start for me? It all started with a finance MBA. I have an academic background, unlike most in this space. I'm academic and quite nerdy. But I had 2 professors back in 1996, 97 on my MBA. And they basically said, look, if you want to make big money, you've got to follow big money. This is an MBA that now would cost $57,000 for 1 year, which is, pricey. It was about $15,000 at the time. And here are the investors that make up big money. There's the stock investors, like the institutions, the pension funds, and all that. Interesting. But there's also another kind. And this other kind can transform your performance. And they are the options traders. Now, you don't have to trade options in order to be able to follow the options traders. That's what I'm going to talk to you about. But these guys here, they take risks. These guys here have access to information, and they use that information by using the leverage of options to multiply their returns because they are so confident in their information. What kind of information do you suppose they might have? Put it in the chat. What's the specific kind of information you think they might have to say, do you know what? I don't want to make 1-to-1 here. I want to make 4-to-1 because I know my information's that good. What information is it that you think that they might have or might think they have? Well, this became my ultimate quest. Once I knew about this way back in the mid-1990s, I thought, I got to figure this stuff out. It's a bit like, at the time, 1997, IBM's Deep Blue artificial intelligence machine beat Gary Kasparov's. First time it ever kind of happened. I thought, if I could figure out what these options traders are doing, maybe I can build my own kind of version of Deep Blue. Now, that's a lovely dream to have, but as I discovered at the time, it was a bit like hitting my head against a brick wall. It would literally take years of research. It would take billions of rows of market data. I kid you not, I mean billions. It would require these eggheads like quantitative analysts, specialist programmers, industrial size servers, specific expertise, take years again, and it would cost millions of dollars. So that's kind of where I got to. But what I did also discover is there are 3 other big money footprints for serious success. We're going to go through those we're going to go through these now. So what are these big money footprints? Well, think about this. Think about elite investors out there. You know the ones they talk about. They're trading with billions on any given day. And this activity, that their specific activity I'm talking about, leaves a trail that to all intents and purposes is invisible to the untrained eye, goes unnoticed. But if you can find that specific trail, then that's where you get consistent bank profits, save time. I mean, this is a big one, saving time, and eliminate overwhelm, because you can specialize. And that's the big thing, because you're just going to be zoning in on those things. So what are these big money footprints? Well, we know that big aggressive money is what moves prices. Let's just go through them. The first big money footprint is the presence of big money, which is obvious in itself. And I'll show you exactly what I mean by that. But we're talking volume, big volume. We call it accumulation when volume is going into a stock, or distribution when stock money is flowing out of a stock. The second big money footprint is that other concept we talked about with the house. It wasn't just big money being thrown at the house that made the house price go up. It was the bidding war, wasn't it? It was the aggression of those bids. So, one person was bidding X, but then the next person was bidding X plus 1, and so on it goes. Aggression is important for moving of prices. The third big money footprint is critical, and it's obvious if you know about it. And what we're talking about here is specific areas where big money likes to look at and congregate. And what we're talking about here is key levels. And we're not talking about anything particularly sophisticated here. We're talking about obvious stuff. And I'll go into that in just a minute. So let's talk about big money footprint number 1. And again, now you get to see that we're kind of anthropomorphizing the chart. We're explaining what this means. Now, what we mean by volume rush or volume spike or volume pocket, or various ways of calling it, is evidence of either buying action more than usual or selling action more than usual. And we look at a chart and we see big spikes. If you see a big green spike with the requisite movement, then we'd be looking at buying action, accumulation. If you see a big red one, then you see selling action, the other way around. So we look for that. Very, very simple. So if we look at Perkin-Elmer, good example here, we see here a big money footprint. Just give me a wave if you see the one where my mouse is and the big volume spikes right here. You see them? They're sticking out like tower blocks. They're sticking out like skyscrapers. That's what's good. If you see a few of those, even better. So that's the presence of big money, accumulation going in there. And that's responsible for a decent move, 11% in 7 days. The second big money footprint we talked about being aggression. Now, what we want to see before we get into a stock, we want to see that this stock has the ability to move. Now, ideally, you're going to get a move one way or another, and then a pause, a sideways move, a flag, consolidation, whatever you want to call it. But that's an ideal kind of setup. You want to know that in recent times, the stock that you're looking at has the possibility of moving, that bidding wars move the price. So with tractor supply here, we see that as we see Actually, we see an earnings report, which is fun. Earnings reports are often the catalyst for a big move. That's why I've circled the little bell there. That's when an earnings report happened. But you see it's been the catalyst here to a big move. Look, the move here from $90 odd to $115 in a matter of days. That's a big move. And that then was the precursor to a move of 27% in the next 7 weeks. A very solid, easy, good move. The third big money footprint is this concept of key levels. And there are various key levels, but let's keep it really simple. The 200-day moving average. Everyone knows about it. Nearly everyone has it on their chart. It was actually made famous by Paul Tudor Jones, famous hedge fund manager. Wouldn't consider a stock unless it was above its 200-day moving average. Made it famous. Now, there's nothing magic in it. What it is, though, is that people are looking at it. Hedge fund managers looking at it. Institutions are looking at it. Amateurs are looking at it. Day traders are looking at it. The 200-day moving average is just one of the important key levels. There are others, but this is a really important one. You could literally put your trading plan all around that. Now, there'll be times of feast and famine, times where you're busy and times where you're quiet. But these kind of things happen. So with Livungo here, this was, across what we look for specifically, by the way, across of the key level. I want to see that and a hold of it. I want to see it cross, bullish up, bearish down, but bullish up, and I want it to stay above. Then it gets on my radar if it's within the last 30 days or so. And with Livungo, you see it did cross and hold. It crossed, stayed crossed, and that heralded then the next move of 160% in just 11 weeks. And that's 160% on the stock. Imagine what the options did. Literally 700% with conservative options. But now let's put all these big money footprints together and you get a bigger picture, don't you? You've got with Livungo, do you have the presence of big money? Well, do we see, and just shout out or wave at me furiously if you see big volume spike right here. So that's where you get the big volume spike. You've got a few of them actually, right? Big money is there, isn't it? And then what about aggression? Well, is there an aggressive move? Well, it's gone from 20 to 30 in just a couple of weeks. That's a 50% move. That's a big lot of aggression there. And thirdly, did it cross and hold a key level? Well, it sure did. Up she goes, sideways she goes. Perfect situation. And that, when you see them all together, now do you not see a different picture? You see absolutely that big money was congregating here. Just give me a wave if you see big money footprints on the screen. They're congregating. We are anthropomorphizing this chart so we can see activity. And of course, it happened with Perkin-Elmer as well. Big money footprints there before the setup, before the big move. So we knew that big money was not only there, but because of the key level being breached and held, that more big money could well be flooding in due course. The same with Tractor Supply, exactly the same kind of situation. The catalyst there being earnings. We didn't even have to take an earnings risk. You'd wait till earnings happened, produces the surprise, whoa, off we go. And it can happen in the opposite direction. Here was Roku, big money sell-off, and then cross and hold, key level, and then further dump after that. So that's a 50% move in that one. What about Amazon? Can it happen with high price stocks? It sure can happen with high price stocks. Amazon was $2,000 at this point. All the big money footprints are there. And it then went to, $3,500. Big 75% in 5 months. Can it happen with small price stocks? Absolutely. Here's Altmune. Happened, a beautiful setup here. Crossed, held, up she went, up again she went, and the big money footprints were in evidence in the 30-odd days or during the 30-odd days before all this happened. So you see it happen, and Kirkland's is another one. We'll show you that one a little bit later. So here's the recap. You filter for a volume rush, you filter for price jump, you filter for key levels being crossed and held, and there's one more that you can look at and think about, and that is our old friend, scarce information. Remember, we want you to be the diamond dealer of the stock market. Scarce information transforms lives. And, if I look at Rohan here, he also was looking at these big money footprints. Morning, Guy. I hope you're having a good week. Thanks for DIG. Been a nice winner this week. Looking forward to seeing what happens. So DIG, same kind of situation. 3 big money footprints there. Big volume spike, cross and hold of a key level, and also big price move, from 80 up to 100 in just a few days, and then a further move, 25% profit in 7 days reported there. Now, not only do you need not only is the scarce information super important in addition to the other big money footprints, which I'll talk about in just a few moments, but you also do need a robust trading plan. You just don't do this with your eyes closed. There must be a trading plan that makes it safe for entry, makes it safe for protection, makes it safe also to protect your profits as they come. So you don't want profits turning to losses. So we do have a proven 4-step formula for your trading plan. I don't have time to do it today, but I do cover it in my flag trader program. We still got, by the way, scarce information to cover, so keep on watching. But in my flag trader program, we can literally automate the entire process of the big money footprints by filtering literally the entire universe of US stocks in one little click. Kind of looks like this button here. And there's also the training and the tools to support and to help you start generating that consistent profitability as well. And literally you can do this very quickly because, as you can already see, it's a very neat, efficient piece of knowledge that you need. It's not reams and reams and reams. And in literally a few days, and I guess with MetaStock folks, literally in a few days or sooner, you can add to your knowledge and focus and then be consistent in a very short space of time, and yet still not be completely controlled by trading. You can have time to do all the things you really like doing outside trading. Now here's how it kind of feels. You can log into the members area on a laptop, on a desktop, on a mobile device, especially like a tablet. It's nice. Do it with a cup of coffee or something. Then you check what we call our fast filters. Literally one button. These fast filters will reveal stocks that are exhibiting big money footprints. One button, done. You then pick the best looking setup subject to the training that you've received. And the training is very neat and efficient. It's not like hours and hours and hours. And then you do that. Now, this is one of the things we do is innovate a lot. And this was David, who says, I'm blown away by all the constant and continuous updates, developments in ongoing ways, making the system more intuitive. That's a big thing, and easier to use. I love you guys, but of course you know that. So that's kind of obviously feedback that we get, and we never stop innovating. There's an old expression, innovate or die. We don't want to die, we want to innovate. And of course you find a stock that exhibits big money footprints, and then that's the kind of one that you kind of like and then trade. So again, big money footprints, quick move up there. Brian says, sure, it's been a good day. I love the OVI big money footprints, etc., etc. I was just having some Twitter chat with Brian there. And there's Pat again. Look what she did with these stocks, turned $3,800 into $33,000 and starting with that small account. This is all big money footprint type stuff. So this is kind of what it looks like. We've still got to cover the scarce information, so we are going to save the best till last. But what Flag Trader consists of is the automation of these big money footprint stocks. It has a value of 1997. We have done for you watch lists with a 1997 value. What this does is with one button, you go straight to the watch list of big money footprint stocks, and we mix and match them as well. Sometimes you have 4 of them, sometimes you have 3 of them, and you can change, you can adjust which levels you're looking at, which key levels you're looking at. Then you have the bite-sized training videos. Now, what I mean by this is that some courses think it's wonderful to give you 100 hours of training. I don't. This is about 8.5 hours of training. You can do it in a day. Okay, if you're taking your time, you can do it in 2 days, maybe 3. But bite-sized training videos, beautifully organized, so you can go just to the part that you want. It includes also our 4-step simple trade plan that will prevent you from profits becoming losses. You'll stop that awful habit that so many traders have. Okay, this 4-step trade plan will give you complete control of how you enter, when you enter, and how you exit trades as well. We have live Q&A sessions and priority support. Our support is, MetaStock support is amazing. And we like to think that we are like-minded with MetaStock in that as well. We care, and MetaStock cares, and this is what makes us such great sort of partners. But here's a little exchange. Again, it's on Twitter. Thanks to your team for your hard work. Thanks for your diligence and persistence, exemplary follow-up, etc. I had a difficult day yesterday, but it was straightened out within minutes of reporting it to support. That's the kind of thing that we like to try and achieve all the time. Now, the total value of this is over $8,000, and with normal retail price, if you go on the website to try and get it from our site, it is $3,997. But for MetaStock today, it is just $997, and we still have to talk about scarce information. So with Roger, scarce information, what transformed his retirement life in his own words, I'm telling you, it is scarce information. That's what changed his life. Why do I get paid these sums? You know, 73,000, 122,000, 105,000, 44,000, because of scarce information. Why do we consistently outperform over years with automated systems? You know, it's systems for institutions, because of scarce information. And again, this year, not just 1 year, but over and over again. What were my professors talking about in my MBA when they talked about the options traders? They're talking about scarce information. And literally, I talked about it would take years and billions of rows of market data, quantitative analysts, programmers, servers, all that stuff. It would cost millions. Well, I talked about that. It would be that way as I was banging my head against the brick wall. And guess what? It was. It's exactly that. This is exactly what happened to me over the next many years. It took all of those things. How did Roger transform his retirement? Using scarce information. Okay, scarce information is a key. What's my patent all about? This patent you see here, it's about scarce information. And that scarce information is embodied in my indicator called the Options Volatility Indicator, or OVI for short. Let me show you how it works. So you have a chart here of overstock going down and going up. Now, when the OVI, which is an indicator that goes from -1 to +1, so it's either positive or negative, when it's in the red zone, then we would hope to see a stock that's moving down and we're looking at a bearish situation. When it's in the blue positive zone, we would be looking for a stock that's going up. And then we can have choices from that point. So red for bearish, blue for bullish. So as the stock is going down here from overstock, you know, down from 22 all the way down to 10, that's a halving of price. What would we expect the OVI to be, red or blue? Well, logic would just say red, wouldn't it? And largely it was red. Similarly, when the stock price then doubles from 10 to 20 and more, what would we expect the OVI to be, red or blue? Well, we'd kind of say, flip a coin, say blue, right? And sure enough, it's blue. Now, what it's showing you is what hidden money is betting on, because this patent means that no one else can see it. It's only us that can see this activity. And in fact, when we looked at across the board, the OVI has improved performance by around 71%. Imagine if that's you, improving your performance by 71% and more in many cases as well, when you know how to use it. So with Chloe, her win rate before she was using this in the right way was 40%. 4 out of 10 trades were winners. Now, 7.6 out of 10, 76% win rate. That is more than a 71% improvement. With Kyle, a retiree in Florida, his win rate was only 3 out of 10 before he started to do this. Now it became 8 out of 10. And his big thing is that, you know, he's not traveling around the world, but now his trading profits were more than his Social Security check. That was what it transformed for him. So again, better than 71% there. So if we look at Livungo from earlier, you remember the big money footprints that we had before, the 3 of them, the big volume, the big move, and the cross and hold the key level. But now look at the chart with the benefit of the OVI that was staring at you all the time. It's thick blue. Scarce information. Only we can see that. Doesn't it look easy now? You think, yeah, there's big money hanging around this place. And there sure was. And that then tees up a trading plan for us to be profitable with. The same with Perk and Elmer, 11% in 7 days. The same with Tractor Supply. The same with Roku, but in the opposite direction. Because look, the OVI here is red, and the other big money footprints are also there. The same with Amazon. The same with Altimmune as well, 100% in 6 days. The same with Kirkland's, again, it was a penny stock, and even then it was doing it there. And you see the big money footprints and evidence, the volume, the hidden money, the cross and hold, and the big moves, 100% in 6 days, which became even better because it became 640% in 2 months, from 1.5 all the way up to $12, $13. It went up even more, actually, 1,222%. It's now around 25, 30 odd dollars as well. Pretty good stuff. Here's Leg Mason. Leg Mason exhibiting 4 big money footprints: the volume, the hidden money, cross and hold, and the big move. And guess what happens that next? It becomes a takeover. Okay, 34% in 6 weeks. The big money footprints are all there. So very quickly do a case study. We've got only a few minutes of these 3 ladies and how they actually did more than triple. They more like 10x. Now, important to understand, we only look for 1 or 2 setups. Here's like a flag-like setup, and here's like a consolidation after a pullback-like setup. That's pretty much all we really look for. And again, less is more. Chloe only chooses from about 35, 40 stocks, specializes in a small number of stocks, takes profits quickly and early, or at least protects her profits quickly and early. About 20% of Pat's trades were with Apple. Lots of trades on Apple, but Apple. She likes Apple. She waits for Apple to do the right thing. And they hugely limit their risk, and they very much keep it simple. Remember what I talked about earlier. Now, this was Chloe wrote to me in October 2018. She only just started properly within June. And she says, thanks for the one-to-one. I was really struggling. Helped me grow my trading account by 78%. My winning probability is now 72%. And then a couple of years later, she then says, well, here's what I started with, $3,000. Here's what it is now, $45,830, return 1,400%. So pretty decent case study. Started with 3,000, ended up, or has now got over 45,000. Pat, win rate 66%, bit lower, but only trades 1.28 trades a week. Average win about 20%. Profit factor, if you put a coin into the Pat machine, lose $1, you get 2.19 back. And she says, look, blah, 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 I stopped trading after the options workshop, at which point I decided this works, and today my account stands at $33,000. Started with $3,800, now at $33,000 in 9 months. So these are the kind of trades that that Chloe's done. Profit of 33% with options, so modest profits here with the big money footprints. And Advanced Micro, there's 41% she made there, and then there's Marriott. Again, you'll see the charts all look pretty much identical, and that's great because she's specializing. That's the beauty. You can specialize. What does that mean? You're going to save oodles of time. You're going to become a specialist, like you get a professional kicker in American football, or a striker in football, or a goalkeeper. You specialize, and that's where the money is made. Quick demo to find the best setups in just a few minutes. I then know that Jeff's going to want to ask me questions. This can all be done manually. I mean, you can literally choose from the S&P 500. You can save a watch list either on paper or on some kind of program in Excel or something that meet the criteria for what a big stock might look like, top 1,000 or something like that. You can then check the charts manually to see if it's forming the big money footprints with every indicator there. You can include the OVI in your analysis if you have access to the OVI. You can also include that. And then you can, if you've learned my trading plan, you can execute that for safe entry and to protect your profits. Now, there is a quicker way. You can cut the learning curve by using technology to find the optimal big money footprints just with a couple of clicks. Literally one click will allow you to trade safely, to find the opportunities, to enable you to scale your account, and having the perfect OVI and big money footprint set up right from the off. And then you can manage the trade, knowing my trading plan for safety and low risk. Exactly what I teach in Flag Trader, to make sure that when you make a profit, you don't then give it away, that you protect that profit, doesn't become a loser. So intuitive software on any device, whether it's a mobile or tablet or laptop or Mac or desktop, or doesn't really matter what. And you can access all the optimal setups in literally just one click. The big money, the aggression, the key levels, the OVI, all there in literally a click. Now, this is kind of what it feels like. You're going to focus on growing your small account. Whatever a small account means to you, grow it. Grow your investments. Proprietary blend of big money footprints for proven massive odds in your favor. So you're going to focus on these big money footprints. Follow where the money's going. Instant access to the hottest list of consistently profitable stocks through specific watch lists we've prepared for you. You can do this anywhere, anytime, any device. Specialize, but you can still profit in different market conditions as well. specialize, become a master. A bit like Kate. Kate shorted the market during the COVID collapse from last year, but again, it was the big money footprints that were doing it. Crossed and held key levels, all the other things were there. She generated over $100,000 with a trade on puts on the indices then. And you can join also the 10x, the 3x and the 10x club of successful flag traders, and get personal guidance from one of my top coaches to help you achieve your goals, because your goals are important to you. That's what we're interested in as well, what your goals are. And of course, unlimited support from my team of traders who are there to help you. And if I know you've got good experience with MetaStock, and we kind of follow the same example as those guys as well. Now, in November 2020, General Electric appears in your watch list or filter search. You go, yeah, I like the look of that. That's it there. Looks pretty cool. Big money footprints all there. Nice and neat and tidy. I like that. And then it goes. Entry at $8.05, went up to $13 without pausing for breath. Profit 61% without options. With options, a lot more. You trade with my safe trading plan, having confirmed that General Electric, yes, indeed, it has the big money footprints. They're all there in evidence as well. So you can do it in one trade if you like. This is Vince, who has a 7 out of 10 win ratio, $34,000 on one trade. This is Henry, who says he made over $38,000 of profits from 3 trades. Wrote me a nice little thing there in our ticket there. This is what the quants say. This is what those eggheads say. They say using institutional standards of financial modeling, the OVI stands up to rigorous scrutiny as a valuable, logical, robust indicator, highly valuable for broad market sentiment and identifying individual stocks as well. And again, remember our equity curve. Again, real stuff here. This is us, and this is the other market, the S&P benchmark. This is Bernard, a newbie to us, reports that he's making, he actually says, almost feels unfair or like cheating. Increases confidence, learn to take my profits. That's part of the trading plan. Downside risk feels very low. And I've been holding many stocks, most of which were up at least 70%, but I had one that was up over 550. So the trading plan shows you how to ride a trend as well without the benefit of hindsight. What do MetaStock members say who've got it? Well, this is Steve, and he says, I've been with MetaStock for over 25 years. The OVI is a great tool that gives you an edge with options and stocks. And he has a 7 out of 10 win ratio, and he uses the both together. So that's the perfect combination. Again, it's simple steps. You log in, you do your filters with a couple of clicks, literally a click, and then you choose which ones are optimal. If there are, and if they're not, you just wait for another sunnier day. And again, you can do this anywhere, anytime. Here are a few trades, all with big money footprints. Boeing went up, Halliburton up. They all look the same, don't they? Interesting that. Chubb, loved that one. And then BXP as well. All big money footprint stocks, all nice movers in the right market circumstances. So here's what it looks, just show you the automated software for big money stocks. Remember, the big word here is automated, to find those big money stocks, proprietary blend of filters, 1997 value. The done for you watch list. This is just one click and you go straight in there, 1997. Bite-sized video training. It's about 8.5 hours, but organized into nice bite-sized areas so you can go and get the right bit of information at the right time at the right place for you. But also included in that is our 4-step trade plan that will help you protect your profits and trade safely. We have live Q&A sessions, live trading sessions, and priority support, 1164 value. You've seen those comments from earlier. But we have bonuses as well. So the first bonus is the OVI is wrapped into all the automated software. So the scarce information filters are there for you. 1997 value. Remember, it's patented. No one else has it, and no one else can have it either. You also will get a personal one-to-one coaching session with one of my coaches, 1494 value, although potentially even more, because this was the session that I gave Chloe. You're going to have a similar session with one of my coaches, and this is why we have to limit this to 25 seats, because of that personal nature of it. You'll also remember that on one or two of those charts, I said the catalyst to some of these moves that then made the setup was earnings. Well, guess what? We've got an earnings strategy exactly for that. Earnings comes, there's a pop. We want a particular strategy which blends into all this beautifully. We have the ultimate earnings blueprint, 497 value if you do it now, and also bonus 4. Well, who wouldn't want to follow what Chloe's done? Get her 14x watch list. That's a 597 value as well. So total value here is 12,737. Normally, if you go onto our site, you will find it there at 3997. That's if you want to do it that way. Or MetaStock, because we're friends and because I love them so much and they always bend my arm, it's a 997 special for you literally today. If you do it today, you'll also get this little booklet that I created as well, Growth Secrets for Small Trading Accounts as well, only for today. When you have enrolled, you will book your session with your coach. Now it could be me, or it could be Chloe, it could be Glenn. Well, hopefully it won't be this guy because he's a bit naughty, and this guy's just really cute. The way to go and get this is obi.to/big money. I forgot to put that in earlier. I will put it in the chat now, or maybe Jeff can do that. It's www.obi.to/big money. Let me just type it in for you now. www.obi.to/big money. And that will get you in there. If there is a guarantee, we stand by everything that we do. And it's not one of these fake, phony guarantees. It's a 30-day guarantee, full cash refund, no quibble, no catches. If you don't like it, if it's not for you, we don't want to disturb you. So obi.to/big money. I will tell you one thing, hardly anyone ever asks for a refund. But if you want one, we will give it to you and we will not complain at all. Here's what would happen if you went the wrong way about it. You would find it for $3,997 on this shopping cart. But for you, with a 25-seat limit tonight, is $9,979. I know I'm running out of time. This is Mike in Minneapolis, just riding another big money footprint, 150% winner there. Again, it was an earnings one. Remember the earnings blueprint? That was what he was doing. And of course, you got Steve, a big player here, 53,600%. There's Vinny again, 7 out of 10 win ratio, 34,000. So, one trade can make all the difference. There's Doug with an 8 out of 10 win ratio, 412% profit. Learned how to go along with the trend there. 8 out of 10 also for Kyle. I told you about him earlier. There's the community. There's the link, obi.to/big money. I'll finish with one thing on the dot, and that is this. Most people, or many people, seem to do these motivational quotes. I don't, because that's not what I'm into. I'm into numbers, and this is what this is. This is not a stock, TWYS, but it is much more important than that, and that is this. Trade what you see. That's what it means. TWYS, trade what we see. What do I mean by that? Well, here's what I mean. Number one, we look, what do we see, for example? Well, we see big money. So we want to trade that. We see aggressive money. Yes, we want to trade that. We see key levels being broken and held. Yes, we like that. And we see scarce information. Uniquely, we see scarce information. Remember, no one else sees that. That is the OVI. It is proprietary, it is patented, and it is scarce information. And it is important. So we have all those things. That's what TWYS means. That's me today. I hope that I haven't overrun too badly. Jeff, take it on. And thank you. And thank you guys. I love MetaStock people. By the way, whenever we have MetaStock people at my events, they are always the top of the class. They ask the tough questions. I love them. So, we'd love to see more of you guys.
We had a couple questions. FR says, I got in late and I missed what the OVI indicator is. And then we had a couple other people asking, what is the OVI? I don't think, what does OVI stand for?
Well, it stands for Options Volatility Indicator. What it shows is option sentiment on an individual stock. So it's showing you parameters that just, you could look at an option chain and you still won't get to the OVI. What the OVI is showing you, what is likely to be position building activity in options, bullish or bearish, including pricing, implied volatility, including open interest, and including option volume, and other factors that all go into options data. So it is an enormous database that we have to actually analyze every single night to do every stock with that. And what it shows you is what the leverage players are doing, but what we want to see, and the whole point of the big money footprints is I don't care what is going on with hedging. I'm not that interested in that. I want to see where the action is, where the position building is, because that's where I'm more likely, in the right circumstances, to get a good move and to get more probability. And that's what shows time and time again with all types of analysis on this, whether it's from the automated side or what we call the guided discretionary side, which is what we're doing here. So it's showing you something that just isn't available elsewhere, and that's why it is successfully patented.
And we did have a question I think is good from Teresa. She wanted to know if it works with UK stocks.
No,
Okay,
Only US, because we need the liquidity in options. We need there to be liquid options, and you can only get that with US equities. So my accent should be an American accent like Jeff's, because that's kind of what all we do. Again, specialize. We specialize. So with UK
I have an accent.
Well, to me, you do.
I'm just kidding. Couple of things. Love the presentation. It's very comprehensive. Your presentation is really appreciated. A couple of people asked this. I'm glad you asked it again, Ram. Is this a one-time payment or is it an annual payment?
It is it is annual, but you are grandfathered in. So once you're in at this level, if you keep doing, then you stay at this level. You don't go back up to the 3997. So that's the beauty of doing this. Is like it's almost like you get an option, and if you don't like it, you get a refund. But if you do like it, you're in at this low level, and that's what people like to do. It's a good incentive.
Right. We have some questions. Somebody wants to show it on the Mac. I'm going to do that after I've actually ready to actually show it on the MetaStock. So I'll go ahead and cover that. Great job today, Guy. I appreciate it. And we'll see you at the next one.
Well, yeah, and also let's just catch up as well, because I know we're all busy, but we must say hello.
Absolutely. Definitely.
It's been a while, because Hunter's been my guy. He's been my homeboy. Now you're back to being my homeboy again.
Yep, that's true. All right, it's good to see you.
Thanks,
You're
mate.
looking great. Somebody
Thanks,
says you don't age, but I think that's true.
Well, no, I'm doing this thing called Wild Fit, and so I've lost a lot of weight, and I'm really. But the thing is, we're talking to institutions right now. We're setting up a fund. We've actually got one, and we're going kind of big leagues. So I have to be kind of there with it. I can't. I have to be fit.
All right. Thank you, Guy. Well, I'll talk to you soon.
Bye-bye.
Bye. All right. Guy Cohen, everybody. He does such a good job. And I will show you this on MetaStock. I remember flying to London. He showed me the OVI. I was like, we'd have to have this on MetaStock. So basically put it together. Let me go ahead and change the presenter over to me. Okay. We'll go ahead and show my screen. Hopefully get this out of the way a little bit. Move. Okay. All right. And I just want to ask a question, because it's kind of showing up a little bit weird to me. Can you guys all see my screen? You should be able to see OVI traders included. Just let me know. Just say thank you. Maybe Greg, you can chime in if you could. Just let me know that you're seeing my screen and not a big, huge picture of me, which is what I'm seeing right now. All right. Yeah, thanks. A little too fast there, but that's okay. That's cool. All right. Thank you, Camille. Tom? Sanjay says, yes, I can see it. Teresa says, yes, thank you. Thank you. I hope you're enjoying the class. I promised to show how this looks on MetaStock, and I am a man of my word. Going to go ahead and show it to you. What we did is we were able to pull all of the OVA values into MetaStock. And so if you're an OVI club member and you have access to the OVI information as part of that club, you'll be able to pull the OVI indicator into MetaStock. You'll be able to do scans on it. You'll be able to do indicators on it, et cetera, et cetera, et cetera. And they did a full integration. So as long as you're looking at a optionable US stock, you'll be able to see the OVI values. It'll be pulled in automatically for you. And it works very, very well. So, and it kind of gives you some advice here. Right here, just to we do incorporate the commentary. Of course, it's got scanning, so you can scan and build a list of all the stocks that are OVI positive or OVI negative. You can incorporate that into your other scans. It works very, very well for that. And I'm glad I talked to Kai into letting us do this. But right here, what we've got, and I believe there's a lot of people about what platforms it works with. If you're a Traders Club member, you'll go up to, and you can log into their website, and it will show you the OVI values, and it has a pretty good charting engine. But I believe we're the only trading platform that actually has access to the OVI values. So with MetaStock, you can go in, you can get the OVI indicators, you can run the scans, you can combine them with your other scans, and it works very, very well. So just to kind of give you an idea, we're looking right here on Apple. Somebody had mentioned Apple. I pulled it up. The OVI has been bullish for 4 days. Over the last 50 days, the OVI riding has been bullish 33 times and bear 70 times. Strong OVI readings are persistently positive or negative are often indicative of a persistent trend in the underlying stock. And as such, the OVI can be used as an indicator of likely direction. Gives you a really good summary of it, kind of gives you some information. And it is a full integration. We're running a little bit long right now, but we'd include the OVI indicator, the OVI volume. You have the OVI negative, OVI positive. You've got the expert advisor and a template. And it does a very, very good part of this. It is part of Guy's OVI private club membership. So you'll get that as part of it too. We actually provide it. If you have OVI private club membership already, and you're already a member of Guy Cohen, you can actually get this add-on totally for free. It just requires the OVI private club membership. But his private club membership includes weekly webinars from Guy, a dashboard that's actually really, really cool, video updates, his blog, a reversal trend finder, watch lists, the paper trading app, a total array of educational videos. And if you want, you can actually just subscribe to OVI Traders Club. You can do that through us. It's $197 per month. And what we've done is we've made an arrangement with Guy. If you pay for a month of the OVI Traders Club, you can get your second month for free. Okay, that includes all of the full access to his website, the private club part of his website. It includes the add-on and the integration to MetaStock. And if you want to get that set up, you can give us a call at 800-882-3040. You can visit us online at metastock.com/saleschat, or you can go to metastock.com/conf-promo. So that'll be there for you. Okay. I do want to say thank you to Stocks and Commodities for sponsoring today's event. They do a great job. We really do appreciate them sponsoring the event today. So the other thing that I do want to mention before I get started with my presentation is our premium conference. The premium conference is going to be going on tomorrow. We're going to have three great speakers. Steve Bigelow, who kicked off our conference a couple of days ago, Jeff Tompkins, who spoke this morning, and Vince Vora, who spoke yesterday morning. These are really, really good speakers. They're going to talk about, Steve's going to share his top-ranked candlestick signals. Jeff Tompkins is going to talk about finding the high probability trade setups. Vince Vora is going to talk about his trend lines and his technical formations. All of these sessions are going to be 90 minutes in length. It's going to be basically $450 for all of them. We're going to kick it off tomorrow at 10 a.m. Eastern. Sign up. You'll love it. We did the premium sessions last time. I got lots of really good feedback. I want you to join me for just one more day. So 800-882-3040. You can also chat online at metastock.com/saleschat to take advantage of that. So anyway, there you go. I hope you come tomorrow. I think it'll be, these guys are great. I've learned some of my best trading lessons from these three guys. So there you go. Now we're going to talk about me. Go ahead.
Before we
yes.
get into you, aren't you due for a door prize or something?
A what?
A door prize.
I know. Yeah. Yes. Don't ask that. I need to pull the list. I need to pull the list, and I haven't done it. And we will do a door prize. Right, and we'll do a door prize after every speaker after after the next speaker, because I need to go in, pull the list. I wasn't. I tried to do that earlier. Yeah.
Okay.
And I should have been doing, but I will tell you this: we have a lot of door prizes to give away today.
Awesome. Can I?
Scott Go says,
this? What is the?
Sure.
Which bear is the most condescending?
Which bear is the most condescending? I do not know.
It's a pan, duh.
I thought I broke your microphone this morning.
It's a website. Yeah. Hey, I just want to take a second to introduce Mr. Jeffrey Gibby, who has been with the company now for 20,000 years, which is weird because it's only like 30 years old. Jeff is definitely one of our veteran members of MetaStock, and he's been around a long, long time. and he's well loved amongst our MetaStock community and a great presenter. Anything else I should say, Jeff? Oh, he has a great dog and a fantastic family and chickens.
The dog is, yeah, I do have about 8 chickens too.
Yeah, I'll have to find a picture of a snow wolf.
Yeah, do that.
He's your presentation.
Yeah, that's fine. Why don't you give me a number between about 1 and 10,000? I pulled the list while you were talking.
Is this okay? I'm sorry, I didn't mean to.
We're ready. I just keep forgetting because I've been trying to keep everything rolling today, and I keep forgetting. I'm going, I need to pull this list. So 1 and 10,000, pick a number.
8,562.
Okay. And the prize that I'm going to do, just for easy. Yeah. Why don't you talk a little bit, Greg, about what they've won? I'm going to give them 3 months of MetaStock real time, and I'm going to give them 3 months of Zenith. So go ahead and give us an elevator pitch of exactly what that is.
MetaStock real time is our proprietary premium software aimed at real-time traders. RT stands for real time. It includes the ability to backtest questions. Everyone should be asking themselves, what should I trade? How to get into a trade? When should I get out of a trade? How do I test my trades? How do I scan the market? It also includes Zenith, which is, in addition to being an amazing data feed for MetaStock, it also is its own amazing platform that is very useful. And to find folks at Refinitiv spent billions of dollars researching. Is that good, Jeff?
Oh, I couldn't have done better
Xfinity
myself.
had nothing to do with.
Yeah.
Nothing at all.
Yeah. Okay. All right. Just a quick question. Mona says she can't hear me and that I'm frozen. Can you guys see me and can you guys hear me?
I'm thinking that's on Mona's end because our test computer shows you're looking just great, beautiful as ever.
Okay. All right. The lucky winner of that prize, MetaStock Real Time, as well as the MetaStock Zenith, that has nothing to do with the Comcast Corporation, but it has a retail value of, let's see, about $1,300, $1,250 if the math in my head is right. You're going to Thomas P in the USA. You're going to get that. Thomas P, I'll send you an email with your 6 months. And Greg, thank you for getting me off my butt and making me pull the list.
Well, thank you for being yourself and keep on being yourself.
All right.
Changing.
Let's go.
Have a great presentation. Break a leg. I'll let you go now.
All right. Thanks. All right. There we go. We go ahead and get started a little bit here. What time have we got? Oh, we'll do okay. We'll do okay. My name is Jeff Gibby, as you probably know. I want to tell you a little bit about me, but not too much. We won't go too far into that. Jeff Gibby. I was born here in the Utah area back in about 20-something years ago. I had a friend that was working at a company called MetaStock, and they're like, you should get a job here. And I did get a job here. It took a little bit of trying, but I actually got a job in inside sales. And that was 24 years ago. Next year, I'll be here 25 years. So maybe I'll get a new lawn chair or something. But I worked for about a decade in inside sales. That was a good opportunity for me. I didn't know anything about the market. I learned all about stocks and options as I started. And I did enjoy selling. People would call in. We'd talk a little bit about how they're trading, what they're looking to improve about the trading that they're doing, all that kind of good stuff. And that would have been 1997 when I started. So we were a part of Reuters at that time. I did that for the better part of a decade. And from there, I moved on to our business development team. That's where I met a lot of the people that are talking today, like Steve Big, or that are talking for these 3 days. We'd go in and I'd talk to people that I really respect in the market, like Steve Bigelow, like Jeff Tompkins, like Vince Fora, like the people, like really everybody. But I've learned a lot doing that. We'd go in and we'd kind of work, we'd do a lot of training. We'd work to set up a lot of these add-ons that we're talking about. And it was a very, very good opportunity. 4 years ago, I was put in charge of the sales team, and I've been doing that ever since, and that's good. They run the sales team can pretty much have a really good sales team. If you talk to them, you'll absolutely love them. They're very good. They're very friendly, and they manage themselves. They do a really, really good job, which is good because I'm still handling all of the business partnerships as well. So it's been a good opportunity for me. I've loved to work at MetaStock. I realize I'm giving my life biography here, but it's been a good company to work for. There's been some pointers on the screen. When I started, we were part of Thomson Reuters. So about 7 years ago now, we bought ourselves back from Reuters. We've been our own independent company. And for those of you that have been with us for a while, you'll notice that there's been a real increase in the last 7 years about stuff that we're releasing. You know, the last version had the new quote center and the option scope, and just been a ton of stuff that we've been able to do because we're able to focus really on the development of what MetaStock is and what we want to do. And so it's an exciting time to be here. The stuff that we're working on for the next versions are awesome as well. So we still did manage to keep a really good relationship with Thomson Reuters, who's now Refinitiv. And that's been advantageous for us as well because, you know, you can look at MetaStock and you can analyze any market pretty much in the world. There's hundreds of exchanges that they cover. They have foreign exchange, anything that you want to follow. But I think bottom line, let's wrap up here because we're 20 minutes in. I realize I haven't been talking about this for 20 minutes, but it's a great company to work for. It's a company I've been proud to represent. I love the people here. I love the fact that Stephanie will send around support surveys, and Stephanie's our support manager. And a lot of times for the whole week, everybody that's talked to us support gave us a top grade. We'll get 100%. That's not unusual. And so it's a very, very good company to work for. One of the things that I'm especially proud of, and I try and talk about, is not a slide here, but there's supposed to be a slide right here that has our little award from Stocks and Commodities that we've won 28 years in a row. I'm very proud of that. I'm surprised that my slide's not there, but that's okay. We like to talk about that. And I hope, I know certainly for me, I've been trading for a while, been doing very well lately, and I wouldn't trade without MetaStock. MetaStock's a huge part of that. So there you go. There's a little bit of history on us. And we did have a question about MetaStock working on a Mac that I meant to talk about. The answer is yes, we do work on a Macintosh, but it is a Windows-based product. So if you want to use it with a Macintosh, actually Greg, our marketing guy, video guy, he actually uses it on his Mac to take a lot of pictures. It works very well on the Intel latest generation Macs, but does require that you install Windows though. So, and Parallels or Boot Camp or something along those lines. So if you are interested in using MetaStock on a Mac, give us a call. We'll give you some advice about it. 800-882-3040. What I'm going to talk about today is the hidden gems of MetaStock. So, a couple days ago, we had Scott Brown, the owner of MetaStock, talk about the forecaster and the patented technology that has. He did a really good job. Yesterday, hopefully you saw Kelly Clement talked about system testing and scanning and how to use the real power tools in MetaStock to identify the right trades at the right time. Today, I'm going to take a little bit of a funner approach. I'm going to take some of the symbols you might be interested in looking at today, and I'm going to show you three of my favorite things in MetaStock if we have time. So, spoiler alert, it'll probably be two of my favorite things in MetaStock. So, just some of the systems that are built in, and MetaStock is huge. One of the things that I say about MetaStock is it's a huge software program. We've been working on it for probably 30 plus years now, right? And we've been rated 28 times #1, and we've been adding new features and adding new systems and things like that. So we'd never really cover everything in MetaStock. And that's, I think, one of the advantages MetaStock has. it's a software program that isn't something that has just a few bells and whistles or a couple moving averages and that you grow quickly out of. You can create anything you want to in MetaStock, any type of a scan, indicator, system test. Anyway, it's a very, very versatile tool. And as a versatile tool, the more you use it, the better you get at it, the more you understand how the tools operate, the better it's going to work for. I guess what I'm saying is it's not a tool you're going to grow out of, but a tool that's going to grow with you. So in any case, let's talk about the two or three things in MetaStock that I like the most. I call them the hidden gems in MetaStock, and then we'll get on with the day. So the first thing I want to talk about, and somebody took an Apple trade. Who was it that took an Apple trade earlier? That you mentioned it in the chat. And I was like, oh, I'm going to show you based on RMO. So anyway, just mention that again. Michael says the whole MetaStock team is tops, helpful, knowledgeable, super easy, and professional to work with. And took an Apple trade because of the first methodology I'm going to show you today. Now, I'm not recommending you buy an Apple, but I'm going to show you one of my favorite methodologies in MetaStock. It's a trend following methodology that's built around trend identification, trading with the trend, et cetera, et cetera, et cetera. We haven't really had a lot of experts talk about how like the trend is your friend or befriend the trend or rising tide lifts all boats over the last couple of days, maybe because it's a little bit of a cliche. But what I want to do is actually kind of talk about a trend following system. And this is actually the very first system that I traded my own money with. And it's a system that's called the Rahul Mohinder oscillator. So Rahul Mohinder, if you know the company well, is a partner of ours in India. He's a good friend of mine. He does a really, really good job. He does a lot of training for us. He also trains people how to trade in India, and that's the primary focus that he has. They've had him on CNBC in India. They've had him on CNN in India. He has about 4 or 5 offices in India. And the origin of kind of RMO and the reason we have it in MetaStock is about, I'm going to say 13 or 14 years ago now. He was in our office and we asked him to show us what he was teaching people how to do in India. And we really took a liking to it. We actually ended up paying for the rights to the Rahul Mohinder oscillator. We gave him some money, and it's been included as part of MetaStock since like MetaStock 10 or 11. It's been a really long time that we've actually been including the RMO with Indicate in MetaStock. The reason I like to show it to you is listed here on the screen. It's fairly easy to understand. It's objective, so it's not subjective at all. It employs solid money management, and it works on a lot of different instruments. And that's important because what I usually do is I'll say, okay, I'll go into, lately everything's online, and so everything that we're doing online. But there was a time before the plague that's affecting the world where we go from country to country and we talk to people about MetaStock, and we'd be like, what are you following? What do you want to look at? What are the stocks that you're interested in? We'd pull up a bunch of charts, and they would actually most of the time work. I'd say it doesn't work on every stock. The RMO doesn't, but it works. I'm confident enough in the RMO that we're going to look at it with the stocks you're interested in. It would be really easy for me to pull up stocks that have perfect RMO trading examples and say, hey, look, it works really, really well every time. Right? But what I like to do is actually I like to I think it's more authentic. It's a little bit more interactive if we look at it on the stocks you're interested in. So if you've been listening, give me some stocks. Let's look at some stocks today, and I'll show you how we are going to basically do this. So, and how the RMO works. Michael, welcome. Michael, welcome from New Zealand. I just saw your message there. Scott says, I really like the Logan Connor system as well. And that's also included in MetaStock as well. There's a Pepsi pump underway. All right, I need to see more symbols coming in, guys, or this demo is going to be real short. All right. So since this is a trend following system, the first thing that we're going to do is we want to be able to identify the trend, right? We can't trade with the trend unless we identify it. And when we start to talk about where are the symbols, can you guys hear me? MTU on Frankfurt. Okay, we'll look for that. Uber. Okay. All right. There we go. There we go. Cisco. Okay, that's an interesting one. Okay. We'll look at a few of these. So the first thing we want to do is identify the primary or the prevailing trend. Okay, so if we want to be able to trade with the trend, identifying what that trend is going to be very, very important. Okay, and so that's what we're going to do, basically with a bunch of different charts. Let me just go ahead and close. Now I'm getting symbols. Okay, all right, good. Thank you guys for the symbols. Otherwise, we'd just look at Apple with Ann. Okay, and I think that is actually enough. There's a good number of symbols, and we have a finite amount of time here, about 30 minutes. So what I'm going to do here is I'm going to go in, and we're going to look at MTU, if I can find it on the Frankfurt exchange. MTU, since I'm not sure what that is, do you happen to know what the country code is for Frankfurt? I think I'm looking for a G. I'm not, let's see, MTU. There's a BA, L, and an SI. And they're all different as well. I might just jump that one, unless you can tell me what the exchange is. I'm pretty sure we have it, but I'm not finding it fairly quickly. So let's go ahead and kind of, if you know what the exchange is, let me know. TRLY, TLRY, okay? You had to excuse me, I'm blind in this eye and I can't see out of this eye. So those are both things that happen. We'll go ahead and do TLRY. We'll do the QQQ. We'll do the CSCO. And we'll do DBX. And I'm not sure, I haven't looked at DBX for a minute, so let me go ahead and pull up the symbol. And it's Dropbox. Oh, I just barely used Dropbox just today. I love Dropbox. I didn't know they were traded. Maybe I'll have to look at buying them. So we've got TLRY, QQQ, Cisco, and DBX. And that's probably what we'll be able to look at very quickly. What I'm going to do here is where it says we're going to open up a chart. What I'm going to do is I'm going to apply a template, and that'll just apply the indicators, the expert advisor, and stuff like that. The template that I want to apply is going to be the RMO trade model. So we'll just scroll down here until we find RMO trade model, okay? And that'll apply all the indicators. We're going to look at these on a daily basis. So let's go ahead. MTU Aero is from Germany. Also, if I don't get your chart for whatever reason, say we won't have time, our sales guys will be happy to pull charts for you and send you these. I'll explain the rules for you so you kind of understand what they look like, and they'll send them over to you. I'm just going to go ahead and we'll go ahead and take a bit of a broader look at these charts, and we'll go with the one I like the best in terms of explaining all of the rules. Let's look at Cisco, I think. And the reason that I chose that one is it's been bullish for a long time. We've been in a really good trend for a little bit. We do have a little bit of chop right here, but this will be a good example for me to show kind of the rules, how they work, and how they're structured. Okay. All right. First thing we want to do, because we're trading with the trend, is we want to be able to identify the trend. Okay. When I start to talk about trends with Rahul's stuff, I'm going to talk about the primary trend, the intermediate trend, and the short-term trend. Okay. Primary is a long-term. Intermediate is kind of in the middle, intermediate, and then short-term would be short-term. So the long-term, if I say primary, short-term, I mean short-term. And the first thing that we're going to look at is the primary or the long-term trend. Okay. The way I'm going to read the long-term trend, and remember, I said this is completely objective. So if I explain it to you well, you'll be able to understand and be able to get to the same conclusion. So we're not making a lot of guessworks here. Okay. So right here, the first thing that we're going to look at with Cisco is this green indicator that's called the Rahul-Mohinder oscillator. Okay. You'll notice that right now, this is an indicator, it's green. It's always green. You're also going to notice that it's above 0. I'm going to put a 0 line on here. Okay. And again, this is objective. It's also very, very simple. One of the things Rahul likes to do is keep things very, very simple. The simpler things can be, the easier they are to understand, and the easier they are to execute on. Now, the way you read this indicator is very simple. If it's above 0, Cisco is bullish, long term. If it's below 0, Cisco is bearish, short term. And you can even see that if I go back to the chart, that it's going to say right here, while it's below this 0 line, that RMO is bearish. Okay, if it's up above 0, then it's going to be in the bullish zone. Now, Rahul is very specific about this. Size of how far above 0 it is, or the size and the shape of it does not matter. What we want to do is we want to be able to say, okay, looking at this chart, this chart is bullish right now. Okay, long term is bullish. It's been bullish ever since it went above 0. Very, very simple. Okay, so what does that mean? If a stock is bullish, if it's in a bullish zone, you're allowed to buy. Okay, you're not allowed to go short, and it's not a trigger to enter. Okay, so just because it goes from bearish to bullish doesn't mean you're going to buy it right there on the spot. There's other things that we want to, there's 3 steps here. It's just you're allowed to buy. Okay, if it's below 0, like it was right here, then it's in a bearish zone and you're not allowed to go short, or you're not allowed to go long, but you can go short. So you just reverse the rules. Okay, right now we don't have it. So if I was looking at Cisco today, it's bullish. Okay, and it's been bullish. If I highlight over here to where the date is, it's been bullish pretty much since November. Okay, so from in November 12th, it went from bearish to bullish long term. It's risen in price from about 38 to about 60, 52 right now. Okay, so during that time where we've had this rise, the whole time we're only going to be looking to take long positions. Okay, we're not going to be looking to go short. And you can see right now we're already looking to kind of put the odds in our favor, because if the stock is rising in price, why would we want to be trading against that? Okay, so step 1, identify the primary trend. It's either bullish, meaning it's above 0, or it's bearish, meaning it's below 0. Okay, very simple, very objective, easy to read. Okay, the next couple of indicators, the next thing that we're going to look at is the short-term trend. Okay, and I do prefer to look at this slightly different. One of the things I can do with MetaStock that makes things pretty easy is if I want to look at something a little bit different, I can just double click on it. And I'm going to change this blue thing to a line. I just prefer that look and that style. I'm also going to add a 0 line real quick with my horizontal line tool. Okay, and what I want to talk about right now isn't the blue line, but I want to talk about the purple line. So this is the purple line, or the, I don't know, whatever color you want to call this, the purplish line. But everybody keeps telling me exactly what color this is. I keep forgetting, so it's not important. What we want to do though is this is measuring the short-term trend, and you'll notice because it's looking at a shorter time period, it's a lot more erratic. It's more likely to go up above 0 and below 0. It acts faster. It's faster to respond to price changes. Okay. The way we read this particular indicator is exactly the same as we read the RMO. We're just looking at short term instead of long term. So if it's above 0, you're bullish. If it's down below 0, you're bearish. It's very, very easy to read. Okay. We even identify when this is above 0 we start to kind of paint the bars blue for bullish. Okay. When it's down below 0, like it is right here, you'll notice the bars turn red. Okay, when it's down below 0, like it is right here, you'll notice that the bars start to turn red. Okay, the rule for this is very simple too. Okay, if our short-term trend is bullish and our long-term trend, or our primary trend, is also bullish, we're allowed to buy. Okay, we're not allowed to go short, and it's still not a trigger to get into the market. Okay, so if I'm looking at Cisco today, we're always looking at the current bar, right? If I'm looking at Cisco today, I can see that we're bullish long-term. I can see that we're bullish short-term, and I know that we're allowed to buy. We might just show RMO today. I'm just looking at the time down here at the bottom of the chart. And if I can just show you one thing, and it's something that's helpful for you, that's okay with me too. Okay, so bullish long-term, bullish short-term, we're still allowed to buy. Okay. The third step, and again, we haven't bought anything yet, right? We're just looking at kind of what the weather is forecasting, what things are doing, and that kind of stuff. That's what we're looking for in a chart. The third thing that we want to do is, obviously, if we're bullish long-term and if we're bullish short-term, we want to be able to identify your entry opportunity. We want to be able to identify the stop. Okay, and to do that, Rahul has a very, very specific method to do that. We're going to look at these set of indicators, the short-term trend, the purple line, and what you might have guessed already is our medium-term trend, which is the blue line on this chart. Now, what we're not looking at the blue line to determine if intermediate turn is bullish or bearish. That doesn't matter. What we're looking at the blue line for is to identify important changes of direction or changes of momentum or changes of force in the marketplace. So what I mean by that is if we're looking back here and we're just looking at the trend, let's ignore the chart for a minute. The trend went, the short-term trend went really bearish real quick, right? It crossed down below the medium-term trend right here, okay? And then it crossed up above it right here, okay? All right. Very specific. We had a bit of a quick direction change. There's a change of momentum or a change of force. And the way that we measure that is when the short-term trend crosses down below, that's a bearish change of force. When it crosses up above, it's a bullish change of force. When that happens on a chart, you'll notice that we put an arrow on the chart. This was your bearish shift in direction or your shift of momentum or your shift of force. This was your bullish, okay? Now, if we're looking at the chart right here and we see that bearish shift of force, well, we're going to refer to step 1 and step 2. We're bullish long-term. We're still bullish short-term, so we're not going to trade it. We're going to wait until things get bearish. We're looking at this as a pullback right now at best, okay? But if we're looking at it a couple of days later, actually, I say a couple of days, this was 216. This was 3.9, so that's almost a month later. But if we're looking at this, we've had kind of this bit of a shakeout, and we see the direction shifting back to the bulls. Well, if we're looking at this buy signal here, it's happening in a bullish zone, and our both long-term and short-term. In other words, we have an RMO bullish here. We have a short-term bullish with the blue bars here. So that's the kind of trade we would take. This we would ignore unless it got bullish long-term and bearish long-term and bearish short-term. In the case of this bit of a pullback, this may pull you out on a stop, which we'll see as I kind of explain more of the entry rules for it. But we would ignore this until everything started to show bearish. The same thing is true back here, where I'm going to actually start to kind of show you how this trades, okay? If we're looking here and we all of a sudden we get this buy signal that comes up on the chart, okay? Well, we look at the chart, we're bearish long-term and we're bearish short-term. We're not convinced yet. We don't want to buy. We're never going to buy at the bottom with this system because we're following the trend. The trend's kind of fallen here, all right? And so until we see some confidence in the way that this is going, we're going to wait. Okay, and that's the third rule. Like, we want everything to match up, and then we're going to start to trade. One of my favorite technicians in the market is a guy by the name of Robert Dill, who's retired. But we would travel all over the country. And one of the things that he always said to me that has kind of stuck with me, maybe because he was the son of a preacher and a really good talker. I mean, he would talk technical analysis like it was at church. He was a really good talker, but he would always say, bulls will make money, bears will make money, but pigs will get slaughtered. And that always kind of stuck with me. When you're trading a trend following system, you're going to be following the trend. Our goal is going to be to take as big of pieces out of these trends as we can, but we're not going to be trying to call the bottom and the top. We're just going to be looking to follow the trend and let the stock tell us what we want to be doing. Okay. All right, here we go. Let's go over just a little bit here. Okay. And you'll notice here, let's just kind of go from this point forward. Okay. 1141. I'm going to need to get a little bit faster here, but right here we went to where the bullish short term. Okay. So we finally cross up above 0. Okay. But we're still bearish long term, so we're not going to do anything yet. It wasn't until right about here where you had your buy signal, and then you went bullish long term, and you went bullish short term. So everything kind of matches up right on this bar, right where I've drawn the level. Okay. When this happens, you can take a trade. This is where you're allowed to take a trade. Okay. Now, Rocco is very specific about what he wants you to do here. I'm going to do my best to paraphrase what he's doing. But in a nutshell, what I'm going to do is I'm going to take my horizontal line tool in MetaStock. I'm going to look at the high for right now, or the current bar, the bar I'm looking to buy on. I'm going to look at that high and the high before. I'm going to draw a horizontal line right across the top. Okay. The next thing I'm going to do, and there's a couple of different ways Rahul teaches. You could look at the low for the last couple of days, like the low here, and you'd put a stop level here. I don't really prefer that way. I like another method that he talks. I'm a little bit more of a relaxed trader. What I look for is a recent support area. The way I define that support area is I use a pivot low. So if I look back here, what I'm looking for is my most recent pivot low. If you don't know what a pivot low is, what you're looking for is just a low that's surrounded by two higher lows. So you'll see this low here. This low is slightly higher, and this low is way higher. So this is my most recent pivot low. This is where I'm going to put in a stop loss if I take my trade. Okay, and looking at the value there, I'm going to call that $38.25. Okay, that's where my stop loss is going to be if I trade it. What I have this other line here for is I want just one more confirmation that this thing is going to go up. Okay, it set a new high, which you could call a pivot high. You could call that a resistance area. I want it to break that zone, and when it does, that's where I'm going to trade. So you'll notice there's just a couple pennies right there between difference, but my entry price is going to be $42.68. Okay, so I know if I buy this thing, it's going to be at 42.68 or so, right? And if I get out of it, it's going to be at 38.25. Okay. I'm not basing on these entry prices about kind of like what I want to pay for it, right? I'm not putting my stop loss at what I can afford to lose with the stock. I'm looking at where the price is telling me is going to happen and using the break of this support level or the break of this resistance level to buy and this support area to sell. Okay, so everything's really, really specific. I know before I get into this trade that I'm going to buy as close to 42.68 as I can. I know if I get into the trade, if it goes down below 38.25, I'm going to go ahead and get out of this trade as close to 38.25 as I can. What does that tell me? Well, I'd make you answer it, but I'm running out of time. It tells me what the risk is. Okay, and that risk is based on what the chart is doing, because I don't think the market cares how much you can afford to lose. It doesn't respond. That's not in their variables. But the market does understand where support and resistance is because people respect support and resistance. So in any case, I digress. Okay, so here is where we decided to buy, right? But if we count forward in days, we're very patiently waiting to see if this continues to pull back or starts to break out. Okay, and it pulls back 1, 2, 3, 4, 5. A good 6 days, almost a week later, we finally buy into Cisco. And we buy in. Looks like we probably would have gotten in either at the high of this bar. Yeah, we could have gotten in here at 42.68 during the day. Okay. And then immediately what we do is we put in our stop loss. Okay. Going to go ahead and move forward just a little bit. Okay. And then here, stock starts to go up. We're fairly happy. Here we get that shift of momentum, which is indicated because we have a sell signal. That just means that the momentum is starting to shift back from the bears to the bulls, and we're likely to have a pullback. We're not going to act on this unless we go bearish long term or bearish short term, and bearish short term. So we just take a note of that. We start to pay a little bit of a closer attention. Cisco pulls back a little bit as it does right here, stalls. Our support level holds, and what we get is a new shift of momentum to the downside or to the upside, okay? Which you see right here. Here is that shift of momentum. Now, when this happens, there's a couple things you can do. One thing that you should always do, and something that is optional that I never do, okay? The first thing that you should always do is move up your stop, okay? We came down here, we tested this level, we've set a new support area. That's where we want our stop. And the way I'm going to look at that is I'm going to look for a pivot low. Okay, so here's a low surrounded by two higher lows. That's where I'm going to put my stop. Now, if I get out of the trade, I'm going to lock in profit instead of guarantee a loss, right? and then we just kind of hold on. Here we have a bit of a shift of a momentum to the downside. It goes sideways for a while. We're still making money. We don't hit our stop. We have that shift of momentum, shift of direction. We could buy more. I never do that. I always buy at the first how many I want. But we have to move our stop. And so I'm going to move my stop here. Okay. And this should be very, very easy. Like I kind of mentioned, I would rather trying to show you one thing that works well and show it well, as opposed to just showing you a bunch of stuff. So we come up here, we get bearish long-term, we get bearish short-term. We stop out. We did get out of this particular trade right here when it kind of penetrated this stop loss at 44.20. Okay. Was that a winning trade for us? Yeah, we got in at like 30. We got in at not 38, but at 42. We got out at 44. Not a huge winner, but we did make some money. We were wrong. It started to get strong again, and that's okay. Here we had another opportunity to buy. We would have structured another trade, and we'd still be long on that trade. So if I was going to structure this trade out really quick, what I would do is I would put my buy level right here. This is where you got the buy signal. This is the high. I would have bought above that high. Probably put my stop loss right here. Okay, bought back in, and we'd still be making money off of this upside move. We'd still know what our loss is, and it's a very non-sexy way to trade. Like, it's kind of boring, actually. Are we bullish? Yeah. Are we bearish? This trading shouldn't be that exciting, I don't think. I don't really, if I want excitement, I would go to the amusement park. For trading, what we want to do is we want to trade in with such an amount of money that we can afford to lose it. And we want to be able to kind of take advantage of upward moves, move our stop loss in a methodical way, not be trying to guess what's going to happen because of like coronavirus or stimulus payments, or let's let the chart tell us what we're doing. And the RMO system is a really, really good methodology to do that. So, and it does a great job of it. Here we would have gotten in at 42. This would have been some profitable trades. Not too sexy. There hasn't been a huge movement up on, what are we looking at, Cisco right now? But this whole time we're bullish. This whole time we haven't been taking short positions. We've only been taking long positions. And by doing so and trading in the direction of the trend, the idea and the goal is for us to help put the odds in our favor. Okay, we'll look at a couple of these real quick, but I really am out of time. But hopefully that kind of gives you the idea of what you're doing. Dropbox, looks like Dropbox, we've been bullish for, Dropbox has been choppy. If I was looking at this chart and I was thinking about trading it with RMO, I'd probably kick it out. But we have been bullish on RMO from 18 to, where is it now, 27? I can't really, again, blind. Can't see, but 18 to 27 during this last move up we've had, it's been pretty good. Okay, let's look at a couple, one or two of the other ones. Qs, Qs, the Qs. We've been bullish, like we even back in March 23rd. Do you remember? I'm sure all of you remember what happened back in March of 2020. And February of 2020 and April of 2020. But right here, we bottomed out in the coronavirus bottoms right here. What was it? The exact day was 3/23 is where we set our bottom. How interesting that, and I'm not going to say this is going to happen every time. A couple of days later, 3/25, we started to be bullish long term on the Qs. Since 3/23/25, we've, if you're looking at the Qs, you're only, on a daily basis at least, right? You're only looking to take long positions. And have we had a bit of a market recovery? A little bit, just a little bit since then. So, and my argument is by trading in the direction of the trend, it's going to be helpful for you. Okay. Let's see. Do we have a time to look at Tilray? Tilray. Yeah, it doesn't work all the time. Tilray, we have, actually, this is a huge momentum stock. So let's kind of zoom in to kind of where we went from bearish to bullish here. Tilray is kind of one of those ones. Steve talks a little bit. There's definitely a lot of upside here. I don't think RMO is your best way on a daily basis. It's the best way to capture this because you'd still have a stop loss unless you're kind of using this exit swing signal. to get out, you would have started to trail a stop right here on that. But you might want to be looking at a shorter time frame. Steve talked a little bit about looking at a shorter time frame when things start to move parabolic in his session he did a couple of days ago. Tilray is a good example of why it might be a good idea to look. Overall, if we're just following the rules that I taught you, you'd be making money in Tilray, but you would have left a lot on the table. One of the rules that he uses, it does involve this exit swing signal number 1, where if it goes up above this blue line and back down below, you start to implement a stop loss. That would be something you'd want to do when something starts to move exponentially. So, all right, there you go. FSEC says, I'm sorry, never mind you when you can't find it. This is just to learn. So the stock doesn't matter. Hopefully that was helpful for you. We'd be happy to pull the stock for you. I know there's a lot of people that, thank you for the audience participation. I know that there was quite a people that put in stocks. We'd be more than happy to pull any stocks for you. Just get in touch with us at metastock.com/saleschat. Okay. Arun says, please add batch save or save session when terminal is so bad. This is helpful. I'm not sure what you're saying, but I'm going to read that again in just a second. But I think it's just advice. So Arun says, change to the 240 minute, bro. Let's see what the bullish is about the daily. And Rahul does talk quite a bit about the 240 minute chart, which is the 4-hour chart, which you totally can do, bro. So I appreciate the feedback. So Shanti wants to know, do the arrows show up end of day or do they show up real time? They will show up during the day. You need to be a little bit careful about that though, because remember the arrows are just from that cross of the intermediate and the short term. So if you get a cross in the morning, let's say that the stock, you have a bullish cross because the stock shoots up like this in the morning or something, right? And then in the afternoon it goes back. That arrow could disappear in the afternoon after the price because it's based on the close price. So it will appear during the day. I would recommend, or during the bar, I would recommend you wait till kind of close to the end of the bar to make sure it doesn't go away. Okay, good question. Thank you. And yes, it's available. This RMO we've included. Samshi says, is this included for all MetaStock subscribers? As long as you own MetaStock 10 or later, it's going to be included for you. We've included it for free in every version of MetaStock since version 10. Okay, there are some other things I wanted to show you about like the Haguro method. Luckily, we had a bunch of extra time yesterday, and I showed my third favorite thing yesterday. If we have extra time today, like if one of the presentations goes short, which I don't anticipate, I'll show you Haguro a little bit. If I had to show you one thing, RMO would be it. So if you use MetaStock already, play with it. It's a great little system. The reason I like to show it to you as a new MetaStock member is I want to give you, because Scott already showed the forecaster, Kelly showed the system tester, but I want to give you something, and those are great tools. MetaStock's a fantastic toolbox. I like showing RMO for all the reasons I listed earlier. It's objective. It's not subjective. It shows you all the stuff. And of course, you can also scan for things. So if you want to scan on the RMO, there's built-in explorations for that as well. And so there you go. Sorry I didn't get to show you the Haguro. There's some great stories behind that as well. I think I spent that time actually showing the OVI, and that's fine. The OVI is a cool story too. So we do have the two versions of MetaStock. So we've got MetaStock RT. That stands for MetaStock Real Time. It's $250 per month. The way that our extended trial works is if you pay for a month, you get the second and the third month for free as part of the offers today. Okay, that MetaStock Real Time will include MetaStock Real Time. It also includes a product that we call MetaStock Zenith. Zenith is a product that Reuters, or actually Thomson Reuters, spent about $1 billion designing. It's now part of, they call it Refinitiv because it was actually bought by Blackstone, and then Blackstone sold it to London. That sale is still pending, but they sold it to the London Stock Exchange. But if you're not familiar with like Refinitiv, it is one of the best source of this institutional news and data. That's primarily what they do. They spent $1 billion designing a platform. We call it Zenith. They have thousands of reporters, 2,000, if I remember right, in over 200 different news bureaus that feed information in it. If you like news and if you trade on news, or if you really like good data when you're doing analysis, Refinitiv is the place to get it. And that platform that they spent $1 billion on creating is included in this $250 a month. Also, the MetaStock real-time is included in this $250 a month. So there are some different ways to do it. Like if you decide you like MetaStock, most people purchase it, and then that way they just have to pay for the data feed. But what I want you to do is I want you to just try it. It'll pay for itself if it's helpful for you in finding better trade opportunities. So if you pay for the first month, we'll give you the second and the third month for free. And that'll include MetaStock. It'll include MetaStock real-time. It'll also include all of the data as well as the news for the region that you're interested in. Okay. The other option is our MetaStock DC option. That does not include Zenith, but it includes our MetaStock package. Everything we've pretty much showed you over 3 days. It's $69 a month here in the US. If you buy the first month, you can get the second and third month for free. That's going to bring your per month cost to less than $20 per month. So again, try it. You like it. You like being able to scan the whole markets and find good trades. So buy 1 month, we'll get 2 for free. That'll include MetaStock, the latest version that says 16. I need to update my slide. The 17 is what we're doing now. We'll include the data region of your choice. So if you're in North America, you'll probably want the North American data. The other options are Europe, Middle East, and Africa, and Asia Pacific. So whatever region you're interested in will help you get set up for that. We're going to have what we call our white glove installation. We'll have one of our support reps actually call you. They'll help you with any problems that you have in installation. They'll show you around the program. They'll answer any questions you've got, and they'll make sure you have a good working knowledge of it. And we'll also give you a training course that you can go through online. It's called the Unleash the Power of MetaStock. It basically includes like how do you run RMO, how to do scanning, how to do system testing, how to do forecasting. And it's a bunch of modules that you can go through at your own pace to help you understand and use the tool of MetaStock. Because quite frankly, it's been rated #1 for 28 years in a row because a lot of you that are watching me today are using it and that you keep voting for us. But I believe the reason that you vote for us is not because you like us. I mean, I think we're pretty likable. I think it's because it offers tools that, like me, help you trade every day and help you make better trades. And I hope that it's helpful for you. I hope you try it. I love it. Give us a call, 800-882-3040. You can chat online with us at metastock.com/saleschat, and we'll help you get set up. I did include my email address right here. If you email me, I'll be happy to answer it. Give me a day or two. Like I have a lot of email right now, but answering them is when I'm not talking, actually. But you're welcome to give me a call at jeffrey.gibby or an email at jeffrey.gibby@metastock.com. So Arun says, wishing you a good night from Russia. Thanks, Arun. Thanks for all the good feedback. I'm going to go back and read through it. You had a lot of really good stuff there in the YouTube channel. Good video session, RMO Rocks. I agree. Maybe we'll rename the stream to say RMO Rocks. Anyway, I think that, how'd I do? Oh, perfect. All right. So do try it out. 800-882-3040, metastock.com/saleschat. You too can find out why MetaStock's been rated. Sometimes I go into television mode, but you too can find out why MetaStock was rated #1 28 years straight. 800-882-3040. So there you go. Real quick shout out to our sponsor, Stocks and Commodities Magazine. Thank you very much, Stocks and Commodities, for sponsoring today's event. And if you registered, you get a month. If you pay for a month of MetaStock, we'll actually give you 5 months. And if you spend $300 or more, you'll get 2 years as a subscription as part of it today. So do want to say that as well. We just talked a lot about MetaStock. And what I'm going to do real quick is we're going to bring John Osborn on. I'm going to do this a little bit differently because we're going to give away a prize here. And so I'm going to have John helping me with that. John, can you turn on your microphone? I'm going to put you on the spot.
Are you going to have me pick a number between
Yeah.
1 and what, 1 million?
Like 10,800.
Let's go with 7654.
7654. Okay, give me just a second. Okay.
And I assume I can't win, right?
No. No. But if you want to come, I'll let you come.
All right.
Okay, Rick Young. Rick. Oh, I'm not supposed to say last names. Rick Y. From Canada, you have won. What did you win? Well, I'm glad you asked. We're going to give you access to the premium classes tomorrow with Steve Bigelow, Jeff Tompkins, and Vince Vora. I will send you information on how to claim that. And, or not how to claim it. I'm just going to send you the instructions on how to get into it. You're going to be our guest. I hope you can make it. If not, we'll make it available as a recording for you. Steve Bigelow, Jeff Tompkins, and Vince Vora are going to be doing some specials. Some paid sessions, if you would, tomorrow, and you won the prize. So in that case, John, let me introduce you, and we'll let you go.
All right.
John is great. He's actually a programmer, and you wouldn't guess it because he is a really good presenter as well. He's going to talk a lot about kind of the methodologies that they've developed up over at Microquant with their Basecamp trading. For the last couple of years, they've developed both value charts and trender into MetaStock. John did most of, I think, all of the work on it. We did a little bit of helping on our end to tie things in with MetaStock, but John, you did a great job. And I don't, it's pretty uncommon to have a programmer that can present as well as you do. And so, and I don't mean that in a, I have all kinds of respect for programmers. It's just, those two skill sets don't usually go hand in hand. So you do a great job. I want to welcome you to the conference today, and I'm going to turn the time over to you. Let's go ahead and change the presentation over to you too.
All right.
Okay.
And let me pick the right screen here. This one looks correct. And do you see a screen that says MQ Trender Pro 2.0?
It's coming through, and we hear you great. I'm going to get out of the way.
All right. Well, thank you, Jeff. Jeff does such a great job at running this conference. It's so hard. He's doing this 3 days in a row, and he's on day 3 as if it were day 1. So all kinds of energy. And he's got day 4 coming up, I understand now. And congratulations to Rick Y, right? I think it was Rick from our friends up in Canada there. So congratulations on winning that presentation pass for tomorrow. It's a really good prize. So glad you got that prize. Once again, I'm John Osborn, and thanks, Jeff, for that generous and embarrassing a little bit. If I did have a web screen, I'd probably be red right now. But I would say I want to tell you about an indicator that we have that I think is finally going to be something for those of you who used to be like me, one of those people who are tired about reading about everybody else's success and hearing about other traders that are successful when it seemed like I couldn't make it work, and it was very frustrating. And I think if you are going to hang in here with me today, you're going to find out that you can maybe today become the hero of your own story instead of listening to everybody else's. And I want you to think as if today is the day that you can make that finally change for you, and the day that you make the decision so you can be the hero of your own stories. You can make it happen. Now, we're going to be talking about trading. So I want to say that trading or investing does carry a high level of risk, of course, and we love that risk because that's how we make money. And for that reason, it's not suitable for all persons. Remember, there's always a chance of losing, just like there's a chance to make money in the market. So make sure you're trading and you're profitable in simulation before you start trading with real money. That's a great way to prove that you understand it and that the system's working for you. Now, of course, CFTC Rule 4.41 is past performance is not necessarily indicative of future results. I know you've heard that before. And yes, the examples we show are hypothetical. Your results are going to vary. I hope your results do better than mine. That's how I want them to vary for you. Now, what we're going to show you today is a tool that Basecamp Trading's instructors use every single day in their trading and in many different ways. And it's one of our most useful and important indicators that we have in Basecamp Trading. In fact, one of our best traders says that it's his most important tool of all. Now, here's another picture of me, John Osborn, not so stoic in that jacket there. And that's with my little dog. And he might introduce himself at some point. He's a trading dog. All of us at Basecamp Trading seem to have a dog that sits by our side when we're trading. And you can see some of my history there. I've been trading for well over 20 years now. And I've been working with Basecamp Trading for 6 of those years, most recently. And I occasionally at BCT will take over as the room host in all 3 of our trading rooms. Our trading rooms are focused on futures, another one's on stocks and options. And you have a second one that's on a mix of the 2. And I cover almost all the strategies that we have available at BCT. I'm also, as Jeff was saying, the creator of some of our best-selling indicators at BCT. And I did create the MetaStock version you're going to see demonstrated here today. Now, we're really excited to share this with you today. I'm really excited to be able to present it to you because as you're going to see, this MTP2 indicator that we're going to talk about today can make a huge difference in your trading. And that's true whether you're new to trading or if you're a seasoned trader. And it's the reason why it's being heavily used in our trading rooms and our trading now. And some of you may not be aware of who BCT is or Basecamp Trading. We have another name that you might also have not heard of, if I say it funny, but we're also known as a company called MicroQuant. That's like the parent company of Basecamp Trading. And by the way, that's why our indicators start with an MQ for MicroQuant. The picture you see here is an in-person meeting that we had. It was last held in Raleigh, North Carolina. Our trading rooms hosts are in here among a lot of our students, and they're wearing the gray shirts here. You might notice some, if you're a Basecamp Trading follower, you might recognize some of the people wearing the gray shirts here. Now, we've consulted with multi-billion-dollar funds as well as thousands of traders around the world whose experience ranges all the way from beginners, brand new to trading and don't know what a stock is, to advanced traders and even hedge fund managers. And we've helped traders go from consistently losing money to running their own funds in some cases. We've even done that with some hedge funds. We've taken some of our technology and our tools, applied them to hedge funds that were basically hemorrhaging money and turned them into profitables. So we're really excited to share our tools with you. We're eager to help more people and yourself become the successful trader that you've been dreaming of. And it sounds corny to say that, but it is about finding that dream. That's why you're here, and that's why you want to learn how to trade. And we are a trading and technology and education company. So we have patented trading technology, and we've been featured on all those big names at the bottom down there. Now, I want to start out by assessing yourself where you are in your trading. I'd like to ask you, and you don't have to answer it or type it in, but think about where you are in your trading. And the big thing is to ask is, are you consistently making money? And how are you doing with your trading right now? And are the tools that you're using now, not so much MetaStock, because MetaStock is there, we know it works, it's a great tool, but are you finding the tools that are add-ons and things doing what you want them to do? Are they working for you? And it might be that these tools are great tools, but for some reason they just don't work for the way that your style is. And that's okay. You got to find the right match and what your strategies are, etc. And it's important that your tools are working for you. Just like if you're doing any job, the tools are so important. A fundamental question would be, is your account up so far this year? And is it where you want it to be? Because you know what? The market's been up. The market is up quite a bit so far this year. We're hitting all-time highs. So I hope that your account is at least up, if not more than that. Now, some of the questions, and because we know trading is something that a lot of people want to learn how to do, but it's something that doesn't come naturally to a lot of people. So many traders struggle and they run into roadblocks and that are hard to get around, and that hurts. And it's not because you're not working hard enough or spending enough money on those tools and courses. I know we've all spent lots of money on tools and courses. Sometimes it's not a matter of having that big pile of tools, but rather that small set of the right tools that will help you achieve your goals, ones that you're going to use. And sometimes the tools aren't easy enough to use or use correctly, and they don't give you the confidence to take trades. The important thing is you want to be able to sit in front of your computer, rub your hands together and say, I'm ready to start trading, and be confident in every trade you take. And if you're not doing that, if you're not feeling that, then you're missing something in your trading. In fact, you might even be secretly worried that your capital is disappearing because you haven't really been doing a good job at this. And that's a scary feeling because your capital is important. That's your employees. That's how you're going to make money. So you need to make sure that you're not losing that capital. You want to make sure that your capital is increasing. And the other thing that can happen, and I suffer from this as well, we call this the shiny object syndrome sometime, is that we are possibly flipping from one strategy to another, trying to make trading work while we continue to lose more and more money and spend more money on tools. And what we're missing is the tools that are going to fit us. Okay? Now, unfortunately, that hurts when that happens. Here's an example of what it's like when trading doesn't work out for you. And some of you might be able to relate to this. And you can see right here, we've got a pretty good start where we're moving higher. We gapped up right here. And then we're like chasing this or thinking about, I want to get into this trade. Now, this happens to be Amazon. Doesn't really matter what trade it is or what time frame it's on, just a chart pattern here where we got a double top and a pullback. And we say, all right, this is a great spot to finally get in because I'm expecting this market to continue this way. So finally, I get the opportunity to buy in, especially after this big jump. So what do? Immediately, you jump in on a pullback, ready for this to turn around. But of course, what happens? It drops. It drops further than you expected. And you get stopped out. And you say some bad words. And that's what happens. We've all been here. That's part of trading. Sometimes it goes against you. But maybe this wasn't the best spot to get in, even though it was a pullback. Right? So then you're in it for a while longer. Or you're watching it for a while longer, and you're still thinking this thing's going to go up. But when you finally do get some kind of a signal, you're afraid to jump back in again because you got burned the last time. And you think, if I jump in now, it's just going to drop more. If I jump in now, it's going to drop more. And then what happens? You miss on the entry that would have been a great opportunity, and off it goes without you. And then you feel even worse. What does this feel like? Right? It feels like the market is out to get you, right? It feels like somebody, and most beginning traders, and I know I did, say things like, wow, it's like the market knew I got in right there and purposely went against me to take me out of my stop, right? Unfortunately, this is what happens. We get afraid to trade. And then when the setup occurs and you want to take it, you're afraid to take it and you miss out. Now, that's just one of the examples where trades seem to go against us. And it's almost as if that market knows we got in and wants to get us out. So I feel that this happens. I'm sure some of you can relate to that. And it's not just about that one example I just showed about being on the wrong side of the mountain. It seems at sometimes like anytime you get into a trade that looks promising, you have it turn against you, and then you like skip the next entry and the cycle continues because it's hard to have the confidence to continue when you take a loss, especially multiple losses in a row. And like I said, it feels like the market's against you and it hurts. And it turns out that, and some of you know this, that the pain of losing hurts more than the pleasure from winning. And these are the kind of feelings that make you want to give up. Now, I know that each of you have experienced some feelings of this, or I would guess that at least most of you. I know I did. And I expected trading to be glamorous and much more glamorous than it came out to be in the beginning. And a lot of people will wipe out an entire account, and that hurts. And you get that feeling where you're about to give up. And you know what? They say you have to hit rock bottom almost before you can turn things around sometimes. And it turns out that eventually you'll find out, and hopefully sooner than later, what the real problem is. And almost all traders experience this feeling. All long-term successful traders have experienced the same thing. In reality, the market isn't against us. In fact, the market doesn't even know you're there. The market's much bigger than any retail trader is, right? The truth is, they couldn't be bothered with us. It's just a matter of bad timing. And the problem is that we don't know how to listen to the market. That is, experienced long-term successful traders have gotten to figure out that the market wasn't out to get them. It was that the market was telling them, they just didn't know how to see it or hear it. And that's a problem. And it wasn't that you didn't try and you just didn't know what to look at. And you got so distracted by other things that you missed out on what the market was telling them. And what they needed was one thing really, and that was something or someone to show them what to watch, what to listen to so they could act. Now, I want you to imagine if you feel that pain from, unfortunately, taking losses, what it would feel like if you had the ability to know what to look for and to hear what the market's telling us. And you'd be able to anticipate market direction and timing, and you'd be entering trades not just with accuracy and reason, but with the confidence, the energy, the enthusiasm. And finally, you're going to feel confident and in control of what's happening with the market. And there's nothing more entertaining. When I run the trading room now and I can call out and say, all right, watch for this stock to rise to this point, and it's going to pause when it gets there. Don't be surprised if it comes back, retests, and then runs higher. It's such a confidence builder when you just watch it play out, when you finally start to see that. And that comes from experience and tools to be able to help you do that. So imagine if you had a tool and a skill that could give you that complete confidence in your trading, where you trust your tools and you trust your analysis and you developed instinct and you're consistently pulling out profits and every day, every week, and you're seeing your account rise. This is something you deserve. And I know you've put in the time, and I know you've invested in the tools and the training, and I know you want this to happen because you're here. It's just the last piece of the puzzle that can make all the difference. And it all comes down to this one thing. And it's a fundamental that you already know. And Jeff just said in the last hour, this is a cliche, and I agree, the trend is your friend. And the thing is, though, it's not enough to just say the trend is your friend. That's great. But what's really important is being able to understand how to take that concept and see how it can make a difference in your trading. That's what can make a difference. Okay, it needs to be revealed to us in a way we can use it, where we can recognize it, and more importantly, act on it. All right, so we want to be able to identify the points where trend changes so we can act on it. Not just know we're bullish or bearish, but we want to know where it changes. So let me tell you how Trender Pro, we have several names for this indicator because we reference it so much. We call it MQ Trender Pro 2.0 or Trender Pro or TP2 or MTP2. They're all names for this tool. And this tool, MTP2, can completely change your trading. And I can say that because I've seen it help so many people do exactly that. Now get ready, because you're going to learn about how this tool can begin to understand help you begin to understand how to look at your charts in a new way, something that you've been missing, so you can gain the confidence. Now you're going to learn how MTP2 acts like a GPS guidance system right on top of your charts. It's going to give you the path towards profits in your charts. It is like having Google Maps giving you directions right on your charts. And I'm going to show you how MTP2 can drastically improve your entries and your exits by giving you the underlying market trend and the crossover points to give you that direction with precise exit and entry points. And I'm going to show you how you can have that confidence, like I said, to be able to stay in your trades longer. And you're going to find out that made a huge difference for one of our key traders. And I'll show you something near the end about what he accomplished. This means bigger gains from each and every one of your trades you take. And when you stay in the trade longer, you're also benefiting that you're not getting chopped up, getting in and out, in and out. You're staying in the trade where you've already got a gain, so you're not going back to risk losing. You're not risk losing your capital. You might risk a little bit of your gains that you've gotten, but you won't. You'll still be seeing your account rising even if you stay in the trade longer and longer. And that's one of the most exciting things about MTP2. Now, what does this indicator do for you? Well, I'm going to show you why you're going to want this tool. And I'm going to make it easy for you to see how it's going to help you be a better and more profitable trader. And like I said, it's already done that for many of our customers. And this is not a new indicator. It's been updated, but it's got some more history, and I'll talk about that in a second. But by the end of this presentation, you should have a pretty good idea if it's a good fit for you, and then how to take the next steps. And if for those of you who say, yes, I'm ready to go, you're ready. But if you don't want to jump in today, that's okay, but still pay attention here, because I think you're going to be able to see some things and learn some things that could make a difference in your trading today. Now, MTP2 is going to help you by mapping out the entries and exits right on the charts, just like a GPS. And you can see in the background here, I've got directions from Los Angeles through Denver on up to Chicago off screen here. And it's kind of like when we are charting, you kind of want the directions of how to go left, right, etc. That's what we're going to find in what MTP2 can do for you. We're going to do that with simple color coding so you can instantly recognize the direction and those points where it changes. That's just going to be simple, logical color coding to help you immediately see it. You'll know in an instant what to do. And like I keep saying, you're going to be able to stay in your winning positions longer and keep you from getting in bad trades so you can maximize your profits. And I've shown down here is that one of the big problems people have in trading is the fear to act. And when you have confidence in your tools, that makes it so you can approach your fear and conquer it. It's a fear buster. Just like if you're using Google Maps, it lets you drive somewhere that you're not quite familiar with because you know you got tools you can trust that's going to get you where you want to go. And MTP2 can give you that guidance that gives you the confidence you can take your trades further. So let's talk a little bit more about how it does this. It lets you see Trender Pro in a new way. And we wanted to simplify how all of this works because it's a pretty complex thing to analyze a chart. And I thought that looking at it like a GPS is very helpful. So when you have directions from Google Maps or your car, whichever, you get simple directions that know where you're going. It'll tell you turn left, go straight, turn right, etc. Well, just like the GPS system, Trender Pro will give us the signals. When we're green, it's going to indicate that we're bullish. When it's blue, we're neutral. You stay sideways. And if we're bearish, it'll be red and show you it's time to trend lower. The core point behind MTP2 is that it helps you simplify your trading so you can easily make the decision to get in a trade or out of a trade, and when you just don't want to trade at all. And after all, isn't that what it all boils down to, is getting in, out, and on the sidelines? Now, we also have some special color codings that are beyond just this green, blue, and red. We can detect when a market is starting to get extended with some special color codings, and that's kind of like a careful where we might be turning ahead signal. And we do that with a gray color, showing that we've extended. And that doesn't mean that we're going to jump out of a trade. A strong one can continue well beyond the gray point. And we'll show you how that works. So we don't just jump out of a trade when it's extended, but rather we tighten our stop, take partial profits. We wouldn't necessarily jump into a new trade when we're extended, but it means that we're going to stay in it as long as we can. And then there's another color that we use. This is our trailed stop indication, and that's kind of almost like a mile marker post. It indicates the trend is pausing and perhaps even reversing. And with these, we use these pauses as an opportunity to trail our stops. So when we're watching our market move up, the trailed stop indications let us move our stop below that golden bar, is what we call them because they're yellow. And that lets you mark on the chart a point where you're going to take profits if the market turns against you. If it continues on, well, we just let it run until we get another golden bar. Okay, and we let yellow just identify those pullbacks and our trailed stops. Now, all of these colors work automatically right on your chart. Like I said, it's like having Google Maps overlaid right in your chart to help you show you where you're going. So let me show you how it's going to work. And I know these are big claims. And taking a fundamental axiom like the trend is your friend and encoding that in a tool that's easy to use can be a game changer. It's like using your GPS. But in fact, like I said before, one of BCT's best traders credits his success to this indicator. And part of that is because it makes it easy for traders to avoid the choppy areas. We increase our confidence along with our win-loss and reward risk ratios, and we don't have to trade the wrong side of the mountain, like I said. Now let's go back to that example we looked at in the beginning. This was the wrong side of the mountain, by the way. In other words, when we get into a trade, we want to be on the right side of the mountain as it's rising, not on the wrong side of the mountain. If you remember, we got in here and it gapped down and we got stopped out here. That's where we had our expletive. And then it went sideways, right? Only to give us a signal right here that would have been useful to take. Now I'm going to turn on effectively Google Maps here. We're going to turn on MTP2, and I'll switch between them a couple times here so you can see it. This is the regular chart with just your green and red bars, and then here is the color coding. Okay. Now remember when we wanted to jump into this trade right here, this would have been the entry point that we jumped in when we didn't have the information from Trender Pro. And Trender Pro had already told us we got extended. Remember I said that, yes, green is bullish, but we got extended. And we said, don't take new trades at that point. In fact, we pulled back and got a golden bar, which is almost like saying uncle. And that was right at the point in that example where we jumped in. And of course, it dropped. Okay, it had one more green gasp and then it leveled out. And in fact, around this point, when we got stopped out, there's our trading dog. At this point, when we got stopped out, it was actually giving us a signal to enter short, right? Because we got this red signal. Remember, green means bullish, blue is neutral, and red is bearish. And that could have been a profitable trade, depending on the time frame that's involved here. That could have been a nice gain with us putting a stop above here and hitting target down here. Then we went to neutral again. And remember, we were a little afraid to take a trade right here because we were gun shy. Well, what's interesting is right here, MTP2 went back into green mode. This was our neutral to bullish status right here, and it says jump in, and that was done right before it took off again. And there's some other things on this chart that are aligning nicely. Like some of you might recognize an inverted head and shoulder right here with a neckline break right through here at the same point. The indicator doesn't look for that. It just has a lot of advantages in its timing to be able to detect that kind of activity. And this was a great entry, and you can see it went from here. Okay, so now this is what it's like to have Google Maps overlaid or GPS routing right on top of your chart. Now, how does it do this? Well, I can't go into the details, but I will say that Trender Pro is full of microquant technology, and it brings together several different key trading indicators that we use and we sell separately into consideration when it determines trend and colors the bars. Okay, so it's going to use different parts of those technologies in different situations. For example, it may pull from momentum or price action or linear regression or adaptive moving averages, or maybe comparing bar extremes, looking at candlestick patterns, opens and closes, or any of all of those things. And in fact, there's 49 different states that the indicator calculations can be in, 49. And those are what drive our accurate results. Now, it's adaptive in that it uses different filters to determine the bias. And by looking at these different factors, we can accommodate accurate trend identification across almost every type of market situation. And by using these adaptive filters, we can measure the current market in all those different ways and score them. So let's say, for example, there's 10 out of 12 filters are active, we might be strongly bullish. And if 7 out of 12, we might be neutral to bullish. If we're only 4 of them, we might be neutral. It's a little more complicated than that, but that's the idea behind it. And that's how it works. Now, all of this complexity is going on in the background, but what it presents to you is easy to learn, easy to understand, and simple to act on. And it all boils down to the simple color codings that you've seen. So it's easy to use, and there's little question about what to do when. I mean, you can, just from the presentation today, you're almost going to have enough to just use it right out of the box. In fact, I think most people would be able to just go ahead out of intuitively looking at the colors and being able to act and rely on it. Now, as I mentioned, this indicator isn't brand new. We've been updating it, and there's new versions, but we've been using it now since 2014. Right, and this, so I think if I did the calculations right, we're going on 8 years now. And this that we have today is the 3rd generation of this important tool. And we've got a long track record of success and a lot of happy traders. And it's still one of our best sellers. So the MTP2 now that you're getting has been helping traders for many years already. It's just been getting better and better with each new version. And the version that we have now has more intelligence, gives us better trend resolution, and new features that we've added just in the past year. Plus, this latest version takes advantage of features that MetaStock provides, and these features only exist on the MetaStock platform, not on other platforms that we have this indicator for. So it's a great time to be getting MTP2 right now. We've got all the bells and whistles plugged in from MetaStock, and we're really happy to be able to bring this tool to you. Now, here's a bit more about what's new in the 3rd generation. And our goal was to increase its effectiveness without making it complex. We wanted to keep it simple. So the fundamental purpose of Trender Pro is to reveal the underlying trend, and that's still the same, but we wanted to enhance its accuracy and give a little more resolution. So we've added 2 new transitional colors to distinguish between slight and strong trend. This way you can tell when trend is exceptionally strong versus just getting started. And this is like, are you taking a left in your directions, or are you just bearing left, right? So as far as the GPS. So MTP2 now includes a neutral to bearish color and a neutral to bullish color. If you notice, they're still red and green. So really, it's still green, blue, and red. We just have 2 different shades of red and 2 different shades of green. We also still have the extended colors, but now we just allow you to change the bullish and bearish colors in case you wanted to distinguish between the 2, and some of our traders do. And we give the same ability for the golden bars. Okay, so just a little more flexibility, but a lot more functionality built into the tool. Okay, and the extended part is pretty new as well. So we've scratched the surface so far on the basics of how Trender Pro works. I want to dive in a little deeper and give you even more of an idea about the power and the automation that it provides. So let's talk about how you would use this. And I'd like to point out that many traders, they struggle with staying in a trade that's been running for a while. They get nervous about, they have profits. So if you jump into a trade, let's say that you jump in right here, okay, and you start this trade and you get to right about here, and you say, okay, I got above this part. And traders who are nervous and they see this gain, they start to say, oh, I better take profits now. And they're more willing to take their profits early than they are letting it run. In fact, they'll let their stop go all the way to its stop without even pausing and hesitating or waiting early. They'll let that happen, but they'll cut off their winners right away. That's a huge problem for many traders. And it's something that Trender Pro can help with, because as long as you stay green, you can stay in the trade. Okay, now here's a pullback that we had on a golden bar. But I'm going to tell you some rules about the golden bar in just a moment, and you're going to see that is the trailing stop. So we could take our trailed stop and move it right here in this trade, and we stay in and hang on for the ride. Move up again, get our trailed stop, hang in for the ride, go again. Okay, get our trailed stop, hang on for the ride, and boom, we're out here. So instead of getting out back here, we get out way up here. And that's how you can have the confidence to stay in the trade longer, because you're getting a clear message from MTP2 that the trend is rising and strongly rising. And you have the ability to just hang in there with it. And this is one of the reasons why this indicator is so popular, because it lets you take a small winner and turn it into a big winner. And you get rid of all the churn and the risk that you have with entering into a brand new trade when your risk is the highest. Okay, I hope that makes sense to you guys. It's really useful to be able to get a trade that you just stay in, rather than keeping going on and on, getting in and out of trades. Okay, I'll just checking questions real quick there. Let me just keep moving on here. So now I want to share with you some more things about this golden bar, because this is a cool feature. And we know how trend colors work, at least have an introduction to that. Let's review what the golden bar does. So they're trailed stop bars. And then what we do is we optionally, you don't have to do it, but you can optionally place a stop beyond the bar. So like an example that I just showed you, we could place a stop below the bar. And then the further away you put that, the more likely you're going to stay in, because you're giving it more room. And as you get new golden bars, we keep improving the stop on each golden bar. In other words, every time we get a golden bar, we move it up a little more. Now, here's the powerful rule that I love to use. This is a great way to manage whether you get out of a golden bar or stay in it. And that is, you look what happens at the bar that closes after the golden bar. So you get the golden bar, and then you watch the next bar. If the next bar closes against you, and I mean close against you, then you exit the trade. Otherwise, hang on for the ride. Okay, it's that simple. So here's an example here. Okay, we moved higher. This might look familiar here. Here was the the golden bar, and then we closed lower. So we would be out at this point. Okay, here we have a golden bar. Okay, and by the way, you might notice this is the same breakout we saw earlier. This is that inverted head and shoulder. Okay, with the entry point right here. So we jump in when it's green. Here's our first golden bar. Now, your stop would go below here. What is this bar right here? This one opened here and closed up here. So it closed higher. So the bar that followed the golden bar closed higher. That means stay in if you want to follow that rule. And what happened? Up we went. Then we got another golden bar. Okay, we can trail our stop up to that point. Okay, and then what do? We look at the next bar that follows it, and this bar closed higher. So we stay in, and we continue to stay in the trade. And look at this, it just took off. So instead of getting afraid because we pulled back a little bit or went sideways, the fact that it was still green gives us the confidence just to stay in. Okay. Now here's a recent chart of Google on the weekly chart. You can see the strength of the market and the fact that we've been strongly bullish since all the way back to last fall. Right? We've got some signals together, and you can see every time we got a golden bar, we closed higher, and that's allowed us to trail our stop higher, but also stay in the trade. We'd still be in this trade, and that's a great example of using the golden bar. Now, the extended bars are another thing. This is showing us when a market's extended. That's when a chart's getting too far along. It doesn't mean jump out of the trade. It does mean we don't want to get into any new trades that are extended, but we want to be ready to exit so we could take partial profits, we could tighten our stops, and the key thing is we want to preserve our gains. But don't jump out, let it run, because sometimes it'll keep running. Here's an example. This is, I believe this is Apple. You can see we got extended right here. Okay, so when we get extended, we wouldn't jump into any new trades, but now we tighten our stop, maybe take partial profits, and then wait it out. Okay, then we got another run higher here, and this time we stayed extended for a long time. I want to make sure you know we can stay extended for a while, and that's okay. That means the market's really moving. It's still green underneath here. And then we got our golden bars, and this time we got so extended, that was it. So if we had taken partial profits in here, it would have been near the top. And then our trailed stop would have been here. We would have been out by this point. Okay, but this tells us that the run is getting a little extended, and it's using internal technology to determine that. And it's a really cool feature. Now, we can make it even better by adding some of that other technology that we talked about. And I wanted to say, first of all, MTP2 can be used on its own. So you don't need these extra things, but we threw them in anyways because we like to use them in our trading for other reasons. You get MQ momentum, which is an indicator you'll see on pretty much every single chart we use at Basecamp Trading. That chart, this indicator alone, we sell for $300, $297, and that's going to be included with Trender Pro for MetaStock. And I'm going to tell you a little bit more about that. Plus, you get the MQ trend technology built into the ribbon, and that divides the market into bullish and bearish zones. So these are the underlying longer-term trend bias that we have on the charts. Now, what does MQ momentum give us? It gives us insight into the momentum behind price, and we do that by having two different lines. And this looks a lot like MACD, and it acts like MACD, but it is like a Ferrari compared to MACD. It is more responsive. And when you buy MTP2, and if you do pick it up today, you'll get a user guide which explains a little bit more how to use this so you can take advantage of it. But we have a fast line, a slow line. These tell us the speed and the direction, both on a longer term and a shorter term view. And then we can identify the power of the market by looking at our histograms. Here's how we use these. You can see right here at point A, what we like to do is look at just for a moment, just look at the white line and look at the way that we have pivots on the white line. So focus on pivots. So we have a higher high, a higher low, a higher high. Well, if we have that alignment here that's bullish, it's going to give us the confidence, like right here, that we're going to rise, which we did, and we were able to get a nice rise here. Now, when the market turns lower, we see that MQ momentum is dropping pretty aggressively here. So in this case, at point number 1, you can see we pulled back and then tried to run higher, Well, this we could tell was a false break because look how our momentum is still dropping, and look at the red indications that we're bearish. So we knew at this point that this was probably not going to reverse and go higher, and that would help us stay in our bearish trade. Okay, so when they're aligned, we can focus on where the market's going. It's almost like MQ momentum is the crystal ball in addition to our Trender Pro. Plus, it can tell us divergence. And here's an example of divergence where price is lower here, but our fast line is higher. See, this pivot right here is higher than this pivot. So this was giving us a heads up that this market, even though it was putting in new lows, was done moving lower, and it was going to reverse and go higher right at the point where it put that new low in. So pretty cool stuff when you learn how to use it. And then when we use that information along with Trender Pro, we get a really powerful combination that can help us get those key entry points. And so we can see here price was falling pretty strongly, and you might have thought, wow, look, this is going to keep going. But momentum was telling us, careful, momentum is kind of dying out here. And you can see we started to get some signals almost immediately that it was going to die out. We had a golden bar right here, and it closed against us. So we would have been out right there just from Trender Pro alone. But MQ momentum would have given us the confidence by around here that we'd be able to probably start to capitalize on our gains there. And don't forget the ribbon that's running in the background as a triple check to make sure we identify our transition points. Let me just keep moving here. We wanted to make it even easier to use MTP2. So one of the things we added using the amazing technology that's built into MetaStock are the trading signals. So you can see right here, we've got our trading signals. Here's a long entry just before we switched over to being bullish and strongly bullish. We changed on the trend. MQ trend was telling us right here we were bullish. Here's our golden bars and signals identifying the golden bars. Here was a golden bar that we could have exited here, but right away back in again for another gain, etc. Okay, so it's nice to have the signals that MetaStock provides. And I know a lot of you like to use the Expert Advisor. That's got that's built in, so you get the Trender Pro 2 explanation for every bar. Along with the signals. If there's a signal, it'll explain that. And if there's any trend status, it'll explain that. We also include the searching tools. These are, we have 8 explorations, 4 bullish, 4 bearish, and we get searches that will find brand new entries. Also surges where we go right from being neutral to strongly bullish or strongly bearish. And then we have searches that are not only breakouts on MTP2, but also they're breaking out of the recent highs of the market or the recent lows of the market. So we have a breakout about a week or a breakout of half a month. These are really powerful searches to scan through and find good trading candidates to consider for your entries. Plus you get a user guide which explains any answers that you want or questions that you have about that. And we provide support if you have any questions that aren't answered by any of this stuff. These are all the things you get with it, including some layouts and some other components. Again, everything's customizable as far as colors. You can turn alerts on and off. Really nice that the way that MetaStock sets that up so we can do that. So just a couple more things. Even if you already know how to trade, I wanted to show that how useful Trender Pro can be. And this right here is an example of using Trender Pro in combination with what we call a micro uptrend. This is a micro uptrend that we drew right here where price was dropping. Then we had a mini up move, which we draw with the trend line. Notice how we were bearish coming into this. And then as we made our mini uptrend or micro uptrend, we changed to blue and then bullish. And then we approached our trend line. And normally we'd look to take a short on a break of this line. Well, look how Trender Pro gave us the confidence that it was going to change over because it went from being bullish back to neutral. And right at this point, it changed to red, just as we were crossing through. It also gave us a signal with a short entry. And did that work out? Sure did. Okay, so it can help us in other ways that you trade, whether it's a pattern like a triangle or pennant breakout or an inverted head and shoulder, whichever pattern you use, you can get a confirmation from MTP2 to help you feel more confident that it's going to work out. Plus, in our layouts, I mentioned that you have a bunch of different layouts. One of the things we like to do is use what we call multi-time frame analysis, and then try to get multi-time frame confluence, meaning that we're looking for a bullishness on the higher time frame while we're trading bullishly on the trading time frame. So if we're bullish on our weekly, that's going to give us more success or more likelihood of success if we're taking a bullish trade on our daily chart. So we try to get trades that are combined in that way. And MQ Momentum can even give us information on that as well. Okay, I can show some sample charts here. If you guys are interested, we can walk through some examples here. I want to be conscious of time. We got about 13 minutes left here. I did capture a couple of trades. One was this Tesla trade, which I thought was interesting. And this is just as of a few days ago. And what's interesting here is how Tesla was bullish all through here. We got extended by 1 bar, and that was it. We kind of went sideways from there. We stayed bullish, but we were no longer extended. And you can see momentum at that point started to die out. We even changed to red on MQ Momentum. We got something called a 1 green finger, which is a bearish indication. We got something called a bearish inflection, which is another thing that we use. And we eased into a neutral status until we broke the bottom of this double bottom here. And then we shifted into bearishness right when we were getting a short entry signal from MTP2. And we did move lower. Right here.
Sean,
oh, go ahead.
Oh, I don't know if it's a good time to break in for a question from YouTube.
Sure.
Damien was hoping you could compare the difference between MQ Momentum and MACD a little.
Sure. I don't know if I'm comfortable bringing MACD up in here to show them side by side. You can tune MACD to look pretty close to MQ Momentum if you use similar parameters. But there's a reason why we use MQ Momentum, and that is it uses a different algorithm and being able to generate the fast line. Because I don't know if you know much about the way this indicator works, but the only thing it generates is this white line. And that's true with MACD as well. This dotted line is an average it's a moving average of the white line. And then the histograms are generated by the difference between those two. So what's important is what's generated on this white line. And the white line that's generated by MQ Momentum is slightly more responsive than MACD is. And that gives us an edge. So when you're looking at MACD, you'll eventually pick up the same information. We'll be a few bars ahead of you with MQ Momentum, and that's the difference. And to the novice eye, you might put the two side by side and say, hey, they're not that much different. But you know that little bit of an edge, knowing a few bars ahead, makes all the difference sometimes. Plus, the way that we display it is actually easier to read. And we use these histograms a lot. We use them for things like what we call bull and bear flags, which are different than what you'd expect that they are. We use them, like I said, for inflections and some other things like no returns, and they're important to us. And there are times when MACD, even tuned to similar settings, won't show those. And that's why MQ Momentum is critical for us. It gives us a subtle and performance edge. It's like a Ferrari versus, say, a really nice Toyota is a good way of looking at it. And I'd rather trade with a Ferrari. Does that help?
Great answer. Yeah, that was great. Thank you. I appreciate you letting me break in there.
Oh, no problem at all. Yeah, I was looking for questions, and I was looking for questions from people who are still here. You want to see false signals too? I see another question, but let me just finish what I was saying here about Tesla. Right here, I was looking at Tesla and I was saying, boy, Tesla just got upgraded. And this was like over the weekend, I think it was. And I went to look at the chart here on Tesla, and I'm very thankful for MTP2 because it kept me out of the trade. And here's why: is I was hoping to jump in on that upgrade news, and what I found was that Trender Pro said, yeah, okay, we'll not be red anymore. We'll give you a blue, but it wasn't green. It wasn't get in. We didn't get a signal to get in. Okay, so I waited till the next day. And yeah, we got moved up again, but we still were only neutral. And it turns out that Tesla, although it got an upgrade, it really didn't help it all that much. And if I switch to the live chart right now, and I think I have it up, let me see. Look what happened. Okay. Now, had I gone with the news alone, which was the upgrade, and everyone's saying, "Oh, it's going to be great," I would have jumped in here, and I'd probably be sweating this out now because I probably would have got in and taken some heat right now. But see, MTP2 is keeping me on the sidelines, and even though MQ Momentum is saying, "Hey, there's a good chance here," MTP2 said, "You know what? It's not ready yet." And I thank MTP2 for keeping me out of that trade. So sometimes an indicator is more helpful in that it keeps you out of the trade rather than putting you in it. And you can see Tesla's on its way down today. And again, I might have jumped into this based on the upgrade and some other things that looked promising. MTP2 saved me. So pretty cool stuff. I do want to close here or answer any other questions that people might have by pointing out that Gary, who is our Renko trading instructor, he trades futures primarily. He is the one who has said MQ Trender Pro 2.0 is the most important and most useful indicator in his trading toolbox. And I questioned that when he first said it, but he had a really good reason. And that was because it gave him the confidence to stay in trades longer. And let me show you what he did. He was a student at Basecamp Trading, and he started trading and brought in, I think this was like a year or two ago, probably 2 years ago. In June, he brought in $810, which is positive, not remarkable, but he kept doing his system, and you can see what happened. In a couple of months, he was up $5,000. Now he's making $1,000 a week. Then in September, he rose by $12,000. Now he's making $2,500 a week. In October, he improved on that. In November, he improved on it. In fact, if you didn't see this, hopefully you'd be impressed by going from making $800 a month to $22,000 a month in a matter of 6 months here. But what was crazy is that what he had done was built a system that relied on Trender Pro and taken advantage of every bit of movement. And when it came time for the crude market, and this is mostly he was doing this in crude futures, the crude market was highly volatile this month. So he took his same system that he had been growing here, and it just went crazy. And it let him stay in crazy long trades, like $30,000 wins in a single trade, because the market just went crazy. And MTP2 didn't steer him wrong. It steered him to the profits, and he was able to stay in the trades. Now, I don't think he's done this again, but neither has crude. Crude hasn't been as volatile as it was. But Gary is somebody who can trade every single day. I've been watching him for months and months trading, and he has a one contract account that he trades separately. And every day he makes more than $1,000 in that account trading futures on one lots. Okay, and he thinks that Trender Pro is the reason why he's successful. And this is Gary Edwards. You can join our trading rooms. He's in there every morning, 8 to 12, showing how he trades. Really amazing stuff, and that's what this tool can do. So if you want GPS on your charts, you can go ahead and get our tool, MQ Trender Pro, with the MetaStock add-ons. You get all the benefits of MetaStock, and you get MTP2. And finally, when the stock market is trying to scream at us or even just whisper to us, we can finally hear it, and now you can profit. And yes, we're making trend our friend. So Jeff, I don't know if there's some more questions. I'm happy to answer some more, or if you guys want to look at FANG stocks or anything, we can take a look at other markets.
We did have a question from GM. He said he bought MQ Pro already, and is there an upgrade? And what I wanted to say is, if you bought the MetaStock version of Trender, you'll have 2.0. If he didn't buy it from MetaStock, is there a place he can kind of reach out to you guys about that?
Yes, you can email us at support@basecamptrading.com, or go to basecamptrading.com and see our contact information there. But if you bought MTP2 before, we only started selling it earlier in 2020. So if you already have that there, you're using the current version. I think we did, Jeff, didn't we make one change where we relaxed some of the restrictions that were in one of the searches, and I think we dropped a $5 minimum requirement. So that would be one change.
But that was a free update too. So if you're if you got it really, really early on, like within a month or two of release, I think. You can go up and download a new version. And if you're not sure, just go download it. You'll get the newest version. So yeah.
Yep. So yeah, you have the newest version.
Shanti wants to know real quickly if you can look at AMKR.
AMKR. I was going to look at any stock but that one.
Oh,
I'm just kidding. AMKR. Okay. AMKR. Amcor. Oh, it's looking strong. All right. So first of all, and I haven't looked at this before. I don't know anything about this at all. But if I was going to trade this based on just technicals, I mean, look at the strength on the weekly. We broke out of this triple top over here, and we're just soaring right now, especially whatever happened on this bar right here. We consolidated in that for a bit, but look what's happened right here. We broke out of that consolidation. This is strongly bullish, meaning that there's more room for this to run. And we're seeing that reflected here. Here's that consolidation that we saw on the weekly. You can see your golden bars kicking in. You might have gotten taken out right here. You would have had another entry right there. So you could have started new from this point and be riding that one up still. Okay, this one might have taken you out.
That one's not whispering. It doesn't look like.
What's that?
That one is not whispering.
No, this one is screaming. This one's like you can't misinterpret this one. This is just go, go, go.
Now, just to be clear, though, we're not recommending you go buy it. We're just saying it's not whispering.
Yeah. So it's muffled scream. How's that?
One more real quick. We don't have actually a lot of time to do this, but VIAC. And while you're doing that, Casper's wants to know if you can do this in any time frame.
Yep, any time frame. In fact, we give you then the layouts, we give you a triple time frame, which gives you monthly, weekly, daily, and you can switch it to whatever time frame you want. It'll work on whatever time frames you want, as well as like you go down to 2 minutes or whatever other time charts you want. We use them on Renko, and that's what Gary does. Gary likes to trade with a synthetic chart type called the Renko charts. They work great there. Dave uses them on 30-second charts to be able to look for exit points on one of his trading systems, his trading strategies that people love. So we use it in a lot of different ways, and it'll work on all those charts. It's one of the most flexible things. Not everything will work on Renko charts. This one does. DIAC.
V is in victory. I think it's Viacom, but I might be wrong on that one.
Oh, VIAC.
Mm-hmm.
Yeah, that took a big hit. Let's see how that's doing. That's a good question. I own Viacom. I just bought it on this drop here, for not because of MTP2, but because of the fact that it got such of a kill. Now look what happened here. What's interesting is we were getting a warning early before that happened. Okay, so remember when I told you that you've got the gray being extended. That's already screaming at us here saying, hey, be careful because we are now beyond where that market probably would normally go. And yes, we went beyond it here, then we recovered for a little bit and see how it jumps and then we go sideways for a bit and it jumps and we go sideways for a bit. That means it was able to recover a little bit. But here we got extremely extended. And that was a point where hopefully you're tightening up your stops and saving your profits. And when this happened here, you might have gotten dropped out. By here, you should have been dropped out because you took a big loss, and now we're already into red. So it's pretty quick at switching over, and we did get a short entry on this bar, right at the start of this one.
We're out of time. Shanti wants to know what's the price of MQ Trender. I'll cover that. John, thank you. For those of you that had symbols that you want to look at, send them to us. Just go to metastock.com/sales chat. We'd be happy to email you some symbols and some charts and that kind of stuff. So, John, I want to say thank you for your time today. Good to see you.
You are very welcome.
And I better get moving.
Okay.
Thanks, John.
All right.
All right. Very good. Okay. Now I've got started with a whisper song in my head because we said whisper. I don't know. Just happened. Okay. Let's go ahead and show this right here. So there's the box for the MQ Trender Pro. And John does a really good job of talking about it. It does include like all the explorations, the indicators. It has good commentary, all the things that I require that we have in there for a good MetaStock add-on. It has the cost on it, to answer your question. And thank you, Shanti, for asking. It's a one-time cost. So normally it goes for $1,500, $1,495. Here at the event, we're going to do $995. We're going to do a money-back guarantee on that so you can evaluate it, make sure you're happy with it. The returns are very low on this. People really like it. And you saw that for yourself. It's very, very clear in terms of giving you the clear entry and exit signals. But we will give you a 30-day money-back guarantee. If you need a copy of MetaStock, we'll give you that as part of your purchase as a subscription trial. So give us a call. We'll help you get set up. 800-882-3040, metastock.com/sales chat, or metastock.com/conf for conference, conf promo. So there you go. And it's good. People really, really do try it out. The worst thing that could happen is you could get your money back. It's got a money back guarantee on it. So in any case, there you go. Let me go ahead and turn the lights on real quick here. There we go. Roll into flame. Greg, I'm going to ask you for a little bit of audience participation right now. I just want you to pick a number for me. We're going to give away a valuable prize. So if you could.
What are the parameters of this number?
Anywhere between 1 and 10,696. 2,062. Shall I talk about what this person is going to win?
I think you should.
All right. So this person is going to be the lucky winner of a subscription to the Joe Duffy Keypoint daily video newsletter. This is an emerging
video newsletter. You're not giving that away.
Yes. Actually, the price looks pretty cool. I might just put myself on the list. This is an emerging newsletter product. Joe creates a video every day. He created it last year, and it's done very well for them. It's only actually cost $299 a month, but he goes through and gives a daily video newsletter. So it's $348 value. And Joe did a really good job yesterday with his presentation. Let's figure out who person number 2062 is real quick so we can tell you who won that one.
I have no idea where that number came from.
Well,
I usually it's like, I think 42 I gave you the other day. That's from
well, I wish I didn't have to do this so much. You could have picked one a little bit closer. Just kidding.
I didn't go higher the other day.
Angela S. In the USA. Email address starts with Angel. That's about us. Angela, I'm going to get you subscribed to that. You'll get an email from Joe Duffy's company, TradeWinds. They'll send that information out to you. Congratulations for winning.
Congratulations.
So, thanks, and thank you for the help, Greg. Mike's all, I'm here. You don't have to be present to win. But if you're on YouTube, you do have to register to win. If you're in GoToWebinar like you are, you could win. You could win. So in any case, a special shout out to Stocks and Commodities, our sponsor. We love Stocks and Commodities. Just for registering, in addition to being eligible for the prize, you'll get a free issue of Stocks and Commodities, which is amazing. So we're going to go ahead and move on to Ryan Jones. Ryan Jones is going to be here he's been in the MetaStock chat room a number of times. He's done dude, getting loopy. He's done some talks for us before. He's going to be talking about position sizing. He does a good job. I want you to welcome him. Say hello, everybody, to Ryan. Ryan, how are you doing?
I'm doing all right. How are you doing, Jeff?
Good. I'm glad. There's always a little bit. If there's a little bit of a delay, I'm like, is the mic gonna work? But yeah, we can hear you great.
Right.
And I just sent the screen share over.
Yep. So let me. Can you see my screen?
Let's see. I don't see it.
Let me see here. We're gonna. There we go.
I see a bunch of trees.
So how about that? All right, perfect. Well, that's not what it should be showing.
Oh, okay. So do you know?
Although that is it's a very nice screen.
Is that your backyard? No, if you go to the go to
I wish.
go to underneath the show screen. Oh, okay. Yeah. Now we see the non-expanded view of your PowerPoint.
Perfect. So it seems like there's a bit of a delay. So if I'm switching slides here, hopefully that's not the case. So we'll see.
Okay. It takes it usually is pretty real time. It does take a second to load for everybody.
All right. Well, I'm doing great. Glad to be here. A lot to cover
All right.
today.
I'm going to get out of your way.
All right. All right. Hi, everyone. Again, my name is Ryan Jones. I appreciate being here. I am going to present something a little bit different today. And in fact, what I'm going to present can actually be used with every single other presenter that was on here. I'm one of the few people that can say that. You can use my stuff with anything else that you are using when it comes to compounding. It is very, very, very important. And so I'm going to start today, and I'm going to basically divide my presentation into two pieces. Now, you can use my stuff with everyone else's. Gentleman that just got through presenting, for example, you can absolutely use this on that, and it's amazing what it will do. But for those that maybe don't know where to start with this, I'm going to give you something to start with as well. So I'm not just going to give you the compounding aspect. I am going to give you something to start with. And so I'm going to divide my presentation into two parts. And the major part is the compounding, and then the minor part is more practical application of that compounding. So with this presentation being divided into two parts, the first is achieving geometric growth. That's the major piece of what I want to show today. And then the second piece is a low risk weekly option strategy. And I'm not going to go into a lot of detail on that one. I'll explain why at the end of the presentation, but it allows you something that you can test the waters with, if you will. And you're going to find that it is incredibly powerful when you combine these two things, the geometric growth calculations and algorithm with a low risk strategy. It doesn't have to be a low risk option strategy. It can be a low risk strategy of anything. Nonetheless, let's get into the main piece of it. There's one decision that is made by every single trader every single time they enter a trade. Every single trader, every single time they get into a trade, they make this decision. And unfortunately, it is the most important decision that you're going to make. And I say unfortunately because most traders don't make that decision with a lot of thought or a lot of research or a lot of understanding of what the ramifications of that decision is. In fact, it is one of the least understood decisions that a trader makes when he's getting involved in the markets. And screwing up this decision, which most traders do, unfortunately, can easily cost you tens of thousands, if not hundreds of thousands of dollars over time, if not millions. I'm being conservative here on how important this number is over the long run. So what is this decision? This decision is trade size. That is the crux behind compounding. That is the number one determining factor of your success in trading. And a lot of traders don't believe that when they first hear it. But I've been in the industry for over 30 years, and I know for a fact that most traders don't have a clue what the far-reaching, unsurpassed ramifications are of not understanding this critical piece of information. Trade size is the most important decision that you can make when it comes to your long-term success in trading. It literally drives everything. And this is where there's a disconnect. A lot of traders don't realize just how much the trade size decision really drives everything. So what I'm going to do is I'm going to prove this to you. I'm going to prove that A, most traders don't realize the importance of it, and B, I want to show you how important it is. And I'm going to do that through a game. We're going to play a game together. It's a game that every single one of you would play if it were possible. If they offered this game in Las Vegas, man, we would all be going there and cramming into the place that offered the game. All right, so we're going to play it online. Unfortunately, we're not going to use real money, but we'll just play along here. So what I'm going to do is I'm going to flip a coin in the air 100 times. Actually, I'm not going to actually physically flip a coin in the air 100 times. We're going to assume that I did. But this is part of the game. I'm going to flip a coin in the air 100 times. And every time the coin lands heads up, you're going to win $2 for every $1 you bet on the flip of the coin. Okay, so you're going to win $2 for every $1 you bet on the flip of the coin if it lands heads up. If it lands tails up, you're actually going to lose $1 for every $1 you bet on that flip of the coin. Okay, so heads up, you win $2. Tails up, you lose $1. That's the game. Really simple. Now, along about now, I hear sometimes from newbies out there, well, this isn't trading. This can't possibly represent anything. This is not trading. And Jeff, your mic is on, by the way.
Muted.
Nonetheless, this is the game that we're going to play. And what I'm going to do is I'm going to give you $100 to bet with. And we're going to rig the game to ensure that you win by assuming that the coin is going to land heads up 50% of the time and tails up 50% of the time. All right, so again, this is not trading. No, it's not. And I'll get to that here in a second. Okay, so you have $100. We're going to play the game. The coin is going to be flipped 100 times. It's going to land up 50 times, heads up 50 times, and it's going to land tails up 50 times. So if you were to bet $1 on every flip of the coin, your $100 would turn into $150 after 100 flips. But being the savvy investor that you are, there's no way that you're going to come into this game and play with a $100 account and only risk $1 on the flip of the coin, right? Because it's a no-lose situation. So being that the game is rigged in your favor, your job is to grow your $100 as much as possible after the 100 flips of the coin. That's your job. There is no other job. Everything else is done for you. Your job is to grow the $100 as much as you can within 100 flips of the coin. Now, obviously, if we already know it's going to land 50 times heads up and 50 times tails up, we already know that you can't risk everything on the first flip, right? Or everything on any flip, because it could land tails up and you could wipe your account out, right? So obviously that's not it. So the question is how much of your account, how much of the $100 are you going to risk on that first flip of the coin? Now, remember, I said every single trader, every time they get into a trade, they make a trade size decision. Well, this is your trade size decision. Now, be honest. How many of you have a clue as to where to even start to figure out how much to bet on each flip of the coin in order to maximize the return after 100 flips? How many of you have a clue where to start? What math calculation to use, what anything to use, if your goal is to maximize that account? Most of you don't, and that's all right. Don't worry, you're not alone. Like I said, most traders don't, because it's not something that the industry focuses on. So I'm going to help you out here, and I'm going to do it by making this a multiple choice quiz. Okay, here's the multiple choice. Here are the multiple choices that you're going to get. How much of your $100 are you going to bet on the first flip of the coin? And here are your choices. 10% of your account, 25% of your account, 40%, or 51%. Okay, this is the only 4 choices you've got. Now, again, this is a no-lose situation where the game is rigged in your favor. So which one will grow your account the most after 100 flips? Now, how does this work? Well, 10% of your account, if you start off with $100, just to make sure everybody's on the same page, you're going to risk $10 on your very first flip. If you win $20. Your account goes to $120. You then take 10% of your new account balance, which is $120, and you risk 10% of that on the next flip of the coin, and if it's which is $12. If that turns out to be a heads up, then you're going to win $24. And if it turns out to be a tails up, then you're going to lose $12, right? And you just keep going along that path. Okay, so I want you to go ahead and pick one. Okay, in fact, throw it in the questions box just so that I know everybody's committing. Throw your, and again, if I didn't say it already, this is the most important presentation you'll ever hear in trading. So I would strongly encourage you to participate in this. Choose one, commit to one, and even if it's just a guess. Okay, all right. So 10% of your account on each flip of the coin turns $100 after 100 flips of the coin into what? Okay, if you chose 10%, what do you think your $100 grows into after 100 flips? Any guesses? Any guesses? Some of you may have seen it. $4,700. $4,700. So you take 10% of your account and you invest that 10% on every flip of the coin, win, lose, or draw. After 100 flips, it grows into $4,700. That's crazy. All right, so 25% of your account on each flip of the coin turns $100 after 100 flips of the coin into what? What do you think this is going to do? All right, so if the first one grew it to $4,700, what do you think this one's going to be? Yeah, how about this? How about $36,100? $36,100. And oh, by the way, it doesn't matter which order, based on what we're doing today, it doesn't matter which order those wins and losses come in. You can suffer all 50 losses at the same first, followed by all 50 wins. You can suffer all 50, or you can go through all 50 wins first, followed by all 50 losses, or you can alternate win, loss, win, loss, win, loss, win, loss, win, loss. And it doesn't matter, the number is going to come out the same in this particular example. Okay, so this is absolutely phenomenal. All right, so we're going in the right direction. This is a no-lose situation, so it's got to get better, right? 40% of your account on each flip of the coin turns $100 after 100 flips of the coin into what? How about $4,700 again? So now we're going the wrong way. We started at $4,700 with 10%. We moved up to $36,000 with 25%. And now at 40%, we're actually going the wrong way. So here's the question. What do you think 51% of your account on each flip of the coin turns $100 after 100 flips into? And I see that some of you chose 51%, by the way, right? And so here's what happens. Your $100 actually loses money. Your $100 drops to $33. You lose money. You turned a no-lose situation into a losing situation. With what? Was it the strategy? Nope. It was the trade size. And I see this over and over and over and over again. Either they're trading too small of a trade size, they're not compounding, or they're not compounding efficiently, or they are going berserk with their trade size and not realizing that one solid drawdown will wipe their account out. I've seen it so many times I can't even tell you. So how does someone lose money in a no-lose situation? It is trade size. And it's not just trade size, it's not understanding trade size. Trade size is important, understanding it is important. There are shortcuts. You don't have to understand it as long as you understand how it works. But the whole trading world has you focused on how to pick the next ballistic stock, or on market direction, or on finding the holy grail trading strategy in order to make it big. And don't get me wrong, okay? You need a trading strategy. That's why I said you can use any of these trading strategies that have been presented in this conference. And as long as you know how to apply the proper money management trading strategy, you're going to maximize the profits of that. And I'm going to make this statement, and it is what it is. I can take anyone's strategy. I don't care what it is. I don't care, as long as it makes money. I can take anyone's strategy and I can beat them with their own strategy. I can blow them away with their own strategy because of trade size. Anyone presenting here, if they're not applying proper trade size, they are leaving a ton of money on the account, on the table. So it's not that it's not important, it's that it's the wrong initial focus. The whole trading world, ever since I started, which was 1987, that's how long I've been doing this. The whole world since I've started has always had you focus on picking stocks or picking direction or finding a holy grail strategy. That's how you're going to make it big, but that is not how you're going to make it big. In fact, focusing first on the strategy has the tail wagging the dog. And people may disagree with me. That's fine. It's a freedom of speech here. That's fine. They can disagree. But focusing first on the strategy has the tail wagging the dog. And I'm telling you right now, the only realistic shot that you have at becoming $1 million trader is to understand trade size. Now, again, that doesn't mean that somebody hasn't or didn't. I know some people got real lucky with the recent GameStop I'll call it a fiasco. And there were some millionaires made. But what's the probability of that happening? I mean, really. Or, for example, you get into a stock and you write it up for 5, 6, 7 years. Get across here. So lower risk strategies actually compound more efficiently than higher risk strategies, even if it doesn't make as much money. Okay, so on a low risk strategy, and when I say low risk, I mean really low. So we're talking like an option strategy where you absolutely can't risk more than $100 on a trade or something like that, $150 on a trade. But did you know that if you can average just $10 a week on a $5,000 account with a low risk strategy, then after 5 years that grows into $40,000? And that's not an if, that's math. Right? That's like the coin flip that we were approaching. That may not be exact because there are some variances in there with regards to how the algorithm works out. But if you average $10 a week in a low risk strategy, you will grow your account geometrically, and it's going to be, if not 40,000, close to 40,000 or over 40,000. It's going to be really, really close at $25 a week. All right, and now we're talking some realistic numbers here. How many of you think that if you put your mind to it, you could average $25 a week, and that's it in trading with a low risk strategy? Well, that $25, if it's a low risk strategy, can compound into $215,000 after just 5 years. Okay, I want you to do the math real quick. What is $25 a week after 1 year? Right, 52 weeks in the year, $1,300. What is that after 5 years? That's $6,500 in profits. No one's going to trade that, right? Somebody sees a $25 a week strategy and like, I'm going to die before I make back anything, right, at $25 a week. But when you add compounding to it, it blows every single stock out of the water over time. If you got lucky and you were to pick the single best performing stock over the next 5 years, $25 a week in a low risk strategy compounded properly will blow it away. Okay, $50 a week, and you're talking about almost $1 million after 5 years. So are you getting the gist of this? If you increase a little bit on the average weekly, the compounding effects of that long term are astronomical. This requires your attention. This demands your attention to pay attention to trade size. $75 a week, you're looking at growing a $5,000 account to 1.9 million. This is like too good to be true type stuff. But if you can average that in a low risk strategy, it is math. It is simple math. And $100 a week, you're looking at compounding to $3.4 million at that point. So if you can find a low risk, high probability strategy that can just produce $20 a week and compound it over 5 years, you'll grow your account more than if you bought $5,000 worth of Netflix at $10 a share and wrote it to $380 a share, which this is how that would have worked out had you done it. Right, 5,000 in Netflix grew into 188,000 in 6 years. Now, how many of you did this? How many of you bought something not like $5,000 worth of Netflix and grew it to $188,000 in 5 years, or anything even close to that? A few of you may have done something like that. Most don't. Most haven't. And most, for the most part, the only way to do it is through low risk compounding. So compounding $20 a week for 6 years grows $5,000 into approximately $195,000. It beats the Netflix approach, right? So what is the probability of you being able to generate an average of $20 a week, let's say, if you put your mind to it and you say, okay, that's now the goal. $20 a week is now the goal. However it happens, as long as it's low risk, that's now the goal. How many of you think you can do that versus finding the next Netflix and writing it up for 6 years? Right? It's a no-brainer between the two. If you're not confident of your ability to do something like that, then I think the $20 a week is probably the route to go. Okay, now I said that it dictates which is better, right? Strategy 1 here is $20 of profits per year on average. That's been the track record with a $7,000 expected drawdown. So at some point during the year, you can expect a $7,000 drawdown. Or strategy 2, which is only $2,400 profits per year with an average expected drawdown of about $500 to occur at some point during the year. Which one of these strategies would you trade? Well, some of you are saying, well, $7,000 drawdown, I'm not going to trade that one. So this one is an easy one if you only have a small account, right? But which one is better, right? If you could trade if you had enough money to trade strategy 1 or strategy 2, which would you trade? And so let me show you what the compounding does with these. So strategy 1 has $20,000 of profits a year with $7,000 expected drawdown. That turns into $1.4 million after 5 years of proper compounding. And let me back up for just a second. There are a lot of ways to compound, and there are a lot of different things that you have to take into account. At the end of this, I'm going to give you an actual compounding table. But if you're trading something, it's definitely something that you're going to want to learn and understand in order to how to properly apply it to whatever strategy it is that you're trading. There is no one answer fits all type deal with compounding. You have to take into account the risk. You have to take into account the drawdown. You have to take into account the average drawdown. And then it becomes easy. Once you understand how it interacts with those two things, it becomes much more simple in applying it. Nonetheless, with that particular strategy, taking into account a $7,000 drawdown, it grows into 1.4 million after 5 years in compounding. Now, I know that there are a few people that provided presentations here that can probably do better than that, right? They can do better than 20,000 in profits a year with a $7,000 type drawdown. And so if they're not trading with proper compounding, they are leaving a lot of money on the table. All right, so that's strategy 1. Now let's take a look at strategy 2. What does it do if you compound it? Well, it grows into $288,000 after 5 years in compounding. And again, if you don't compound, that's basically $2,500 a year, right? So you're looking at about $12,500, $12,100 after 5 years in profits, non-compounded. So the compounding actually turns the $12,000 in profits into $288,000 in profits. That is astronomical. That is the power of compounding. So which is better here? Well, still, strategy 1 is, obviously making more money at 1.4 million. But what I want to do is I want to equalize the risk now. I want to equalize the risk of strategy 2 to the risk of strategy 1. So if you've got enough money to trade strategy 1, you can afford the $7,000 drawdown, you have no problem, et cetera, et cetera. Then which strategy would you want to trade? Well, if you equalize strategy 2 to the drawdown of strategy 1, then at that point, if you apply the proper compounding, you're talking about 4.1 million after 5 years in compounding with strategy 2. And what that means is basically you start trading with a trade size of 14. And that's not what I'm recommending doing. I'm just talking about comparing strategies and understanding how the compounding affects different types of strategies. This is why I say that the compounding actually dictates which strategy you want to trade and moves you into the right strategy, right? So compounding actually helps you determine which strategies you want in your portfolio, which strategies you don't want, which strategies are going to be less performing or better performing, more bang for your buck, better compounding, more efficient, et cetera, et cetera. That's why I say that choosing the strategy first or focusing on the strategy first is actually the tail wagging the dog, because it's the compounding that's going to determine which is the better strategy. And so you need to focus on compounding. When you understand compounding, you then will be steered to maybe a better strategy for your particular circumstances. So low risk strategies are better even when profits are lower. And really, that's a simplified statement. It's really a ratio of the expected drawdown to the profits and a probability of that expected drawdown. And that goes into some weeds that I really don't want to go into just now, because I do want to get to the second part of this and discuss the actual compounding table behind this. So some of you are saying, oh, you know what, this is great. I really don't have a strategy, so it's premature, et cetera, et cetera. Well, it's not. If I were to point a brand new trader and say, this is what you need to do. You need to learn this, go step by step, learn the first thing, then the second thing, then the third thing, then the fourth thing, and give them a curriculum, if you will. Money management or compounding, trade size algorithms, understanding that would be the number one thing on the list. And it would be number one, it would be the first thing, because of what I just showed you. It will dictate the strategies that you are looking at. And it will actually help you magnify the value of some of these strategies when you're looking at them, as opposed to just the net profit over the course of however many years in the drawdown. So low risk strategies are better even when profits are lower, because the compounding is more efficient. Okay, so that brings me to part 2 of this. And part 2 is based on a low risk, high probability weekly option strategy that's designed to average between $25 and $75 a week. That's it. We're going back to, if you set your mind to it, which would be easier, to figure out the next ballistic stock over the next 5 years, or to make an average of $25 a week in a low risk strategy, right? So what I'm going to do is I'm going to focus on that for just a minute, in case you don't have anything else, or in case you want to get your feet in the water a little bit without a high risk strategy, because maybe you don't understand the compounding yet, et cetera, et cetera. So we're going to cover that, and I call it my 100K option play. And honestly, I don't care what you're trading. You should probably consider trading this anyway. But it's a simple, low risk, high probability weekly option strategy that is designed to average $25 to $75 a week. And the reason that we focus on it is because of the compounding, not because it's this great, unbelievable strategy. I probably wouldn't even think twice about trading it if it weren't for compounding. So that's, again, that just underscores the value of the compounding. So why do I call it the 100K option play? Well, because if you combine this $25 to $50 to $75 a week, and you combine it with the compounding plan, it is possible to generate as much as $100,000 quote unquote salary, if you will, in your first year in just 5 minutes a week. That's why I say everybody probably should consider this anyway. Even if you don't trade it, you should probably look into it, because the compounding combined with this, it doesn't take any money. It doesn't take any, it takes a little bit, but it doesn't take any time. It's simple to implement, and it can create a scenario where you're actually generating some weekly income and growing it to a significant quote unquote salary, if you will. So imagine working 5 minutes a week at a job and getting paid $100,000 after a year. Okay, take a few minutes to think about the implications of this, if you don't mind. Again, I want to bring this down into the practical reality of why it's important to focus on compounding. We just came out of a pandemic where millions lost their jobs, unfortunately. Many were with no income, no prospects of income, no way to pay the bills, and uncertainty rules every aspect of their life. If you're one of those unfortunate few, it is a sad situation, no question about it. But if you're one of the fortunate who were able to keep their jobs, that doesn't mean that your income is secure in the future, right? The pandemic set a new precedent of how the world will react to future threats, real or perceived. We have set a new precedent. It matters not what you believe about the reaction and policies that have been put into place during the pandemic. And there are a lot of opinions. I've got my opinions. I'm sure you have your opinions. None of these matter at this point. The only things that matter is the standard that was set. And the facts that are that a lot of people lost their jobs. And a lot of people didn't have a means for a second income, or any income for that matter. And if something similar happens again in the future, we now have been warned. We know how the world is going to react. We've been told this is the new standard, and it threatens everyone's potential livelihood. Everyone's. I don't care who you are. If you survived this last round, who knows if it happens again in a year or in 2 years or 5 years or whatever the case is. It's out there. It's possible. And it's never been more important because of this to have the ability to generate income outside of employment. I think everybody would agree here. Never has it been more important to have to rely on someone else, or to not have to rely on someone else, the economy, the government, or anyone for your financial well-being. Never has it been more important than it is right now to learn what I'm about to show you with regard to the combination of this strategy and the compounding. So my 100K option play is based on simple math and simple probabilities. And when I say it's simple, I explain everything in about a 5-page ebook. So that's how simple it is. In fact, within 10 minutes of getting this thing, you're going to be able to take your first trade within about 10 minutes. For most of you. If you've never traded an option before, then that's another story. But if you have any experience trading options, you can literally take the first trade in about 10 minutes. And it's not gambling. We're not trying to pick the next ballistic stock. We're not trying to pick direction even. And best of all, we're not risking a lot of money on these trades. It is, again, low risk, and I want to focus on the low risk because that is what is best with the compounding. So the last trade, just to kind of give you an idea of what we're trying to achieve with this thing. The last trade produced a closed out annualized return. It was only a week long. So you take the return and you multiply it by 52. And that gives you the annualized return, right? So the last trade produced about it says $2,100. It's 2,100% annualized return. The trade before that was 1,700% annualized return. The trade before that was something like 1,400. The trade before that was 2,900. Right? These are the types of annualized returns that are produced with this thing because of the small risk and the gain, the consistent weekly gain that is possible with these trades. And the best thing about this right now is that there's one stock. That's it. Well, actually, it's not just it, but you don't need more than one. There's one stock right now that is providing some unbelievable short-term, low-risk opportunities with this strategy. And it is the same stock that I gave the examples of the annualized returns. Now, it's not the only stock that can be applied, but right now it's the best one. In fact, we've been playing it for almost a year, and it is absolutely unbelievable what we've been able to pull out of this thing. It's the best stock on the board right now with what we're trying to do, and it's the one I suggest going ahead and getting started with. And there's no guarantee that this opportunity in this specific stock will last another year. In fact, it could go away anytime. It could end the trade I'm in right now could end, and that'd be my last trade in this particular stock with this particular strategy. So I don't know that it's going to continue, but while it does continue, while it is available, I want to be able to maximize it as much as I possibly can with the compounding. And so on the flip side of that, if the stock does go away, if you understand how the strategy works, and you'll understand how it works. There are other stocks that can take the place of this one should it no longer be available, right? So we're not absolutely locked into this one single stock. But if you're going to start and you want to start with one to get your feet wet, again, that's the one to start with. And it's the one that we have been focusing on for quite some time. So if you're looking to reach potentially a 100K salary by the end of the first year, what you need to have is about $5,000 to $7,500 in your account. You can actually start with less than that. And I'm going to get to an actual compounding table here in a second, and I'll show you why. But if you want to get to a 100K salary by the end of your first year, that's what you'll need in the account. You can start with less, but it's going to take you a little longer to reach that quote-unquote 100K salary type level. And I'm speaking in these terms because I want you to think about this as a type of job. I want you to approach it as a job or a business for that matter, because that's really what trading is. If it shouldn't be a hobby, it needs to be approached from a business-like stance. And so you can start off with less. In fact, I'm going to show you how you can start off with just $1,500. If you want to start taking this trade, you can start off with just $1,500 in your account. And here's how it works. You take one trade either every week or every other week, or sometimes it combines. So sometimes instead of a 1-week trade, it might be a 2-week trade, or sometimes it might be a 10-day trade or a 7-day trade, or whatever the case is. But what you're going to do is you're going to put on a very specific trade every week. The same trade, the same type of trade, and the trade ends and you put on the same trade again. So it's very repetitive, and again, doesn't take very long, like 5 minutes. And with these trades, the goal is to create consistent, high probability weekly income that can then be compounded. That is the goal. Compounding. That's why I'm trading this. Again, if compounding didn't exist, I probably wouldn't even give this approach a second thought. I'd be out looking for the best ballistic stock, right? So, but it is this very specific strategy combined with this very specific stock combined with my very specific and powerful compounding strategy that gives you the ability to create that kind of growth your first year with very, very, very low risk starting capital, right? And again, 5 to 10 minutes each week. So what I want to do is I want to talk about the actual compounding plan. I told you I was going to give it to you. I was going to give you specifics. The example that we were talking about with regard to the coin flipping example, that should not be used in trading. Let me repeat that. The coin flip example, the compounding approach that we use for that example is for illustrative purposes only. It is not to be used. Every strategy needs its own compounding approach, okay? Which is really simple to figure out once you understand the mechanics of it. Like literally within 30 seconds of you looking at a strategy, once you understand how money management works and compounding on real life trading works, it literally takes like 30 seconds to know how you're going to compound a strategy by looking at the statistics within the strategy. All right, so here's an exact compounding table that you can use with this particular strategy, the 100K option play, starting with one stock, one trade a week on average. Okay, this is with $1,500 in the account, and what we're doing is we're implementing a very low risk option spread, and we're going to start with one spread. That's the trade size. You can see here in the middle column. The account size, beginning account size is 1,500. All right, now what we're going to do is as the account grows, we're going to increase our trade size, and as the account decreases, we're going to lower our trade size. And this is the column in the table that will follow. If we get to $1,575, so $75 in closed profits, that's all we need to increase our trade size from 1 to 2 in this example. If we get to $1,725, then we'll go from 2 to 3 on the next trade. So this is closed account size. At $1,950, the account goes to $1,950. We'll increase our trade size on the next trade to 4, et cetera, et cetera, et cetera. So you follow this. If you can average about $35 to $40 a week, that's it, $35 to $40 a week. Look at the weeks column here. If you can average $35 to $40 a week, this is about the time frame that it's going to require that you increase your trade size. So it's going to happen about once every 2 weeks if you're able to average that. Again, it's not going to be exact. There's going to be weeks where you make $100 and then the next week you don't make anything, or a week where you make $75 and the next week you make $20, or something like that, or you lose $50. Right? It's a low risk. Each of the trades are low risk. Nonetheless, you'll be going about this process, and at the end of 52 weeks, you'll be at a unit size or a spread size of 27 and an account size of $27,825. That's about 1 year if you start with a one lot. Okay, everybody understand? Now, if you go, let's say you get to $10,500 and you trade 16, and you end up losing, let's say, $100 per spread. Well, that's $1,600. So you drop $1,600. You'll go below $93.75, but you'll still be above $83.25. Excuse me, which means that you'll go to 14. So you'll actually drop from 16 to 14. And then as you re-increase, you'll increase your trade size again. So there's a protection mode in there, because obviously nothing's guaranteed, right? You want You want to make sure that you protect yourself if all of a sudden your strategy breaks or whatever the case is. So it's built into the table, if you will. But this is trading starting with $1 and the $1,500 account. Now you can start with a $5,000 account and actually start with 5 spreads if you want. And then you increase by 5. So you go from 5 to 10 to 15 to 20 to 25, et cetera, et cetera. And here is that same compounding by starting with 5 lots or 5 spreads and increasing based on a $5,000 account. You're going to increase from 5 to 10 at 53.75. Okay. And then you're going to go from 10 to 15 at 61.25, and then from 15 to 20 at 72.50, et cetera, et cetera. Now, when people are first introduced to something like this, their complaint is usually the same. Not that they reach that, not that they actually experience it, but when they start thinking about it and they start looking at it and they start doing the math, et cetera, et cetera. Let's say you get to $76,000, okay, in your account, and you're now up to 100 lots, and your next trade is a loss. Well, that's a $10,000 loss if it's a loss of $100. And most of the time, the losses on this particular strategy are going to be less than $100. In fact, it's going to be rare that you ever suffer a loss of 150. It could happen, but that's going to be really rare. And $100 is my average loss, and there's not a whole lot of them, but the average loss is somewhere around like $40 or $50. And I trade multiple stocks with this particular strategy. And so you get to this point, let's say you suffer a $100 loss. You're talking about a $10,000 drop. And you're like, oh man, I went from 76,000 to 66,000. And so at 66,000, now I'm trading 90. What if you take another loss at that point? Well, that's another $9,000. So you go down to 51,000. You're like, oh, wow. I just went on 2 trades from 76,000 to 50,000. Well, part of that is based on the probability of losses. And as you're going to see with this particular strategy, the probability of multiple losses, especially multiple maximum losses, very, very small because of the mathematical approach that we're taking with this particular strategy and how it's set up. And so that's the first, that's usually the first objection, if you will, when people see something like this, you're like, well, I can't imagine going from 76,000 to 50,000. And so I always come back with, well, let me ask you a question. Would you rather risk $50,000 of a $100,000 account or $1,000 of a $2,000 account? Right? Right. It's all about perspective. So I added a table here so that you understand this a little bit better. If you don't compound, compounding will put you in a different risk level, if you will. You're not going to start off, and let me back up here. If you have a $100,000 account, you do not start off with 115 lots. Okay, this is only if you have proven yourself and proven the strategy works and is making money. That's the only reason you should ever be trading like a trade size of that amount. Even if you have $1 million account, you should start with a very small trade size and make it prove itself before you increase. There's plenty of room for growth, right? So going back to this, I want you to look at the 5-year profits without compounding and compare it to the compounding. Okay, look at the $1,950 after 1 year, excuse me. After 1 year, $1,950 in profits of non-compounding versus $27,000 in compounding after compounding, right? So let's say you take a $100 loss on the next trade. You get out here, you're at $1,950. Would you rather risk $100 on $1,950 profit or $2,700 on a $27,000 profit, right? That's really the question that you have to ask yourself. So it's all about proper perspective and understanding that, and also knowing that this is not a table that is showing you where to start your trade size. That is absolutely a critical error that a lot of traders make and think, okay, well, I have $100,000, so I'll just go to the $100,000 level here and start with 150. No, you can't do that. That is a massive, massive, massive mistake. You don't want to do that. Okay. All right. So following the exact compounding table that I showed you right here and extending it another year just gets better. In fact, if things go well after the first year, by the end of year 2, you're talking about going through that same process. You could be up another $200,000 on top of the first $200,000. This is the power of compounding low risk option trades. It is simple math. And what I'm going to do, again, I did not want to start this presentation and start going into the strategy because I wouldn't have time to finish. So what I'm going to do is I'm going to give you the stock that's producing these consistent weekly returns. I'm going to give you the exact strategy that I use to take advantage of, and I'm going to give you the compounding table. It's included in all of this, and I'm going to do it for free. It's worth a lot of money, especially if you compound it, right? But I'm going to do it for free because the compounding is so important. I want to give you something to start with. And so just go to 100k.paydaystocks.com, 100k.paydaystocks.com, and you can access the ebook that contains everything in it, absolutely free, including the compounding table. And there are different ways to compound. You can be aggressive or conservative, right? And so that one is just a slightly more conservative compounding table. But go to 100k.paydaystocks.com. You'll get it for free. And it's in an ebook, and it contains everything that I've described. There's no cost to you. There's no gotchas. Everything is in there. Literally within 10 minutes, you're going to be able to take your first trade, or within 10 minutes of the market opening, you'll be able to take your first trade and begin your journey on this. All right. So I crammed a lot in there. I've got a lot of traders that have been trading this, and they've done really well. Here's one from Steve out of Florida. He took his first 100K option play. This was several months ago, actually. But he cleared $335, 2,619% annualized return. And he did it just by going through the 100K option play report, which is what I'm giving to you today. So go grab it and then start learning money management. That's my suggestion. All right, let's take a look, see if we have any questions. Let's see. Is it really possible to only have $100 loss? $100 loss per. $100 loss per. Can you put the compounding table back up? Yep, I sure can. So here, I'll give you the 5. This is the 5 lot. So if you start with a $5,000, so you can take a look at that. Let's see here. Yep, I've got some YouTube videos out there. You can search me on YouTube. All right. You see any other questions there, Jeff?
In YouTube, we had somebody asking a little bit earlier about which stock you were looking at. But I'll let you address that a little bit.
Yeah. I would just go to 100K payday stocks, and it actually gives the stock that I use in that strategy.
Okay. And Tom said how much. William wants to know what your success rate is, or what is the success rate?
The success rate is on average about 70 to 75%, but the risks are absolutely limited, very small, and so you're not going to ever take a huge hit with this thing.
And Tom wants to know what the capital investment is for each lot.
Generally no more than $150, whatever the risk is. And
All right.
and oftentimes the risk is actually less than that. That's kind of like the maximum.
Jeffrey, who has a very nice first name, says very interesting concept and a very thank you for sharing. Emmanuel says, I love these
You
webinars
bet. My pleasure.
that MetaStock. Oh, thank you, Emmanuel. All right. Emmanuel says, I love these webinars that MetaStock has put forth. There's always something new to learn. Thank you. And thank you for providing something a little bit different today. Brian?
You bet. I appreciate you having me, Jeff. Appreciate you having me.
Let's see. Let me go ahead and it looks like somebody's having a hard time grabbing the website. Let me help them out a little bit. Teresa says a question you can kind of answer while I do that. Am I the grantor of the option? How can I limit my losses?
The strategy
Unmuted.
See, I really don't have time to go into the strategy, so that's why I put it in the ebook. It's
Okay.
all explained in the ebook.
Here, in case that we're having some issue, it seems like with some of the Infusionsoft links today.
You can't put 100k.paydaystocks.com into YouTube. It won't redirect properly. So I put the redirected link in YouTube, so people can just click on that. Or if they type 100k.paydaystocks.com into the browser, that will direct them directly there. But I'm not able to put that link the way it is into YouTube.
It seems like GoToWebinar is having a similar issue too. So there's the completely.
Yeah. So
expanded.
if you
go ahead. Fred,
the HTTPS // will do it.
Yeah, I just put that link in the chat, so you guys should be able to do that. Or that's
perfect.
probably the easiest way to do it.
Yep.
So, let's see. Williams wants to know what is the cost of the service. So this is actually just free, right?
Yeah, it's free. Yeah, it's absolutely free. I literally give you the whole. I mean, you can literally start doing it right now without paying anything.
Jenna says, "I enjoyed your compounding lesson."
Great,
Jenna
thanks.
says, "Can I get the
appreciate
PowerPoint?" We don't have access to all of the PowerPoints, but I'm going to go ahead and paste the. You can go up to the YouTube channel, and we have all of the recordings. Well, I started my YouTube video on top of me. That's always disconcerting. Okay, there you go. There's the play links to see any of the recording playback. All right. Download the book without any problem. I'm glad you got it. Tom says, so that's a very interesting way to look at compounding. So, all right, very good. Thank you. As Lisa said. Thank you very much.
All right.
Good to have you here.
Thanks, Jeffy.
Appreciate
I appreciate it. Anytime.
All right. Thank you. Okay. Go ahead and do that. Go ahead and do this. All right. Let's go ahead and kind of get restructured or reset up right here. And let me go ahead and make me the presenter. Show my screen. And we can talk about stocks and commodities and their special offer for MetaStock. So do want to say thank you for Stocks and Commodities for sponsoring the event. I've talked about them for 23, 24 times now in a row. But they do a great job. It's a great magazine. You'll get a free issue as long as you registered. If you're on YouTube watching today, go ahead and register. And the link is there, and Greg will send it again, and et cetera, et cetera, et cetera. Do want to kind of mention that we are doing, for anybody that wants to, we're doing a special extended trial for MetaStock. You can go in and pay for a month of MetaStock. You'll get our award-winning software program for 3 months for the cost of one. We've won Stocks and Commodities Reader's Choice for 28 years in a row. We've talked all about it today. So you can scan markets, test trading ideas, do forecasting, get real-time alerts. All of that starts at about $69 a month. Try it. You're going to like it. Metastock.com/conf promo. Give us a call. We're waiting to kind of help you answer any questions you've got. Get set up 800-882-3040. And you can also visit us at metastock.com/sales chat. Our Kevin is going to come in here, and I'm going to have him turn on his microphone a little bit early because I'm going to have him help me do the next giveaway. Kevin, how are you doing today?
Great, Jeff. Thanks.
Good. We can hear you, just so you know. I'm going to leave your high school picture up for a second.
Appreciate that, Jeff.
Can you pick a number between 1 and 10,600?
How about 6,431?
Yeah, you know we're giving away a prize, right?
Yeah. What's our prize this time?
Today, this prize is going to be Todd Horowitz's Monday night strategy call. He didn't, so Bubba or Todd spoke yesterday. He does a really good job. He's going to have a strategy call with you, and you're going to be invited as long as your number is the number that Kevin just gave me. Let me find out on the spreadsheet, and we'll figure out who won. And while I did do that, and bear with me here, because I am going to talk and type at the same time. We will see if I can walk and chew gum at the same time. Kevin Nelson is a person that used to work at MetaStock. He was a sales manager when I started. I talk about him as being the only person that ever hired me as a job for MetaStock that we have speak, but that's actually not true. Scott actually hired me in MetaStock for a promotion one time. He is somebody that I did have to convince to hire me. I called him I think it was about 8 or 10 times before he was like, this guy would probably sell some MetaStock before he actually did hire me. So there you go. Kevin is a nice guy, though. I love Kevin. He's very knowledgeable in the software. He really knows MetaStock inside and out. And he was a really good boss. Definitely in the top 10.
Thanks, Jeff. I really appreciate that. Oh.
All right, we're almost there. Let's see. The winner of the prize is Roger W. In the USA. Roger W. I'll be dropping you an email to. Actually, you'll be reached out by Bubba Horowitz directly to kind of get that prize. So I will drop you, give him your information, have him get out to you in terms of collecting that. In all seriousness, Kevin is great. LearnMetaStock.com is great. It's very successful. I would recommend it for anybody that really wants to use MetaStock well. So Kevin, thank you for the help. Let's go ahead and make you the presenter here.
Okay, good. Thanks, Jeff. I really appreciate it. Yeah, Jeff was obviously a great sales rep, and what an asset he turned out to be for MetaStock, to say the least. And talk about a hardworking guy. Oh my God. I mean, he of course has put all these presenters together, and very impressive here, to say the least. I mean, quite the job he's done since. But anyway, thank you very much for having me. And following Ryan, and I was just going to say real quick, Ryan's presentation, man, that got me fired up. I'll tell you what, I'm going to definitely check that out. That's for sure. I'm obviously not doing it correctly because that was some pretty impressive numbers, to say the least. So anyway, all right. So here's our game plan for today. Again, as Jeff said, my name's Kevin Nelson. I'm with a company called LearnMetaStock.com. I worked for MetaStock for about 15 years. And in 2008, I left the company and I started a training company where the only thing I do is help MetaStock customers get whatever it is that they want out of their MetaStock program. And we do it through the LearnMetaStock.com website. Now, I'll tell you more about our website later on, at the end of today's presentation, because what I really want to do is I just want to jump straight into it at this point. What I'm going to do today is we're going to be talking about the Explorer. And the nice thing about the Explorer, this is probably my favorite power tool inside the MetaStock program, probably just because of the versatility of this thing. This thing is absolutely amazing. And I know you've seen little bits and pieces in the last couple of days. I know Jeff has shown a number of different explorations, and a lot of the different add-ons have explorations built into them. The purpose of the Explorer, of course, is to allow you to go out and search or scan based on any type of technical criteria that you can imagine. But what we do at Learn MetaStock is we really help you learn the tools to whatever degree it is that you want to learn it. So maybe some of you are just kind of want to get a feel for it about how to run it with the add-ons and so forth, and that's fine. And for others, they really want to dive into it and they want to learn everything about it and they want to create their own and so forth. And like I say, we can help you in a number of different ways. So what I've got planned for you today is I've got a number of different things we're going to be covering. So I'm going to actually show you how to create your own exploration from scratch. And this is my favorite way to teach the Explorer, because what this really does is it really kind of teaches you the nuts and bolts of the Explorer. And one of the first things we're going to do is we're going to take and make sure that your data is good. And as you can imagine, if your data is wrong, everything else is out the window. So I'm going to show you a real quick, easy way to check to make sure your data is good. And number two, what we're going to do is we're going to identify either a bullish or bearish type of condition. There's a lot of different ways that we can use this to identify bullish and bearish conditions, but I'm going to show you a real simple way to do that. And then we're going to incorporate what's called the filter. Excuse me. And the filter is really the key to the Explorer. The filter is what allows you to weed out those securities that don't meet the whatever it is that you're interested in. So you find that very selective group of securities that meet the criteria that you are interested in. And again, this filter is really the key to it. So we'll spend some time with that. And one of the better examples I'll have with you or have for this is actually working with volume. And volume's pretty tricky, and I'll show you a number of different examples of how to incorporate that. And then we'll incorporate price into our scans. And then lastly, what I'll show you how to do is how to save your results so you can use it in other aspects of the program as well. So step one, let's talk a little bit about how to check your data and make sure that we've got good data to work with. All right, so step one, we're going to open up the Power Console. And over here on the left-hand side, we'll click on the Explorer. And what we're going to do again is we're going to create an exploration from scratch. So to do that, what you're going to do up here at the very top is you're just going to right-click up at the very top and you're going to choose New Exploration. And this is going to open up what's called the editor, the exploration editor. And this is where we can create anything that we want. Now, I know we've got a lot of people here in the room that don't have MetaStock or who are new to MetaStock. And we've got a number of people that have been running MetaStock for years and so forth. So it's kind of all over the board. My topic today is going to be a little bit more advanced, but you know, I'll try to go as slowly as I can. And more importantly, if you have questions, make sure and send us a message there in the chat window. And I'll be more than happy to try to help you at the end of the presentation. So to get started, what we're going to do is we're going to name our exploration. And the one thing that I typically do whenever I'm creating a system, an exploration, whatever, is I put a wildcard at the very beginning of the name. And I typically use an exclamation point. And by doing that, what that does is that'll, every time I write a formula and I start off with an exclamation point in the name, all my formulas and systems and explorations will all get stored together. Makes it a lot easier to find. Because when you open up the Explorer, for example, you'll find that there's a ton of different explorations already built into it. And one of the things that you'll want to do to kind of get up to speed is go and try a lot of these different explorations. Just click on them and run them and so forth. But if you're creating your own, I find it really simple, or a really good way is to put all my formulas together so I can find them quickly. So I'm just going to give this a name. We'll call this the Explorer class. Okay, and then now here inside the notes field, you can enter any type of notes that you want about the system. And then where you enter in your formulas, and this is in this section down here at the bottom. You'll see you've got a filter tab here. Then you've got 12 different tabs here, A through L, where you can put in different formulas or different criteria that you might be looking for. So what we're going to do to get started is we're going to start with tab A right here. And what happens is when you run the scan, each one of these is going to come up with a column of data for whatever you put into it. So the nice thing about these tabs is that you can rename these to whatever you want to make it more descriptive. So for tab A, for example, the way that you rename them is you double click directly on the tab letter, and then you type in whatever it is that you want. So in this case, what I want to do is I want to type in a tab name of date, because I want to know what the day is of the security that we're scanning on. Now, inside this box here is where we enter in our formula. Now, again, I know we've got people that are new to MetaStock and so forth, but just kind of bear with me. But we can put in just about any type of technical criteria that we can imagine. But for this one, what I wanted to do is I wanted to return back the last day of information that the security was scanned on. So what you'll find inside of any of the power tools inside of MetaStock is reference to different different formulas. And in this case, down here in the lower right-hand corner is this button, which is called Functions. And this will open up what's called the functions or the library of the different formulas. Over here on the left-hand side, you'll find all the different types of categories or how they have them categorized. And what's really nice about that, let's say, for example, you've been watching a lot of presenters using candlesticks, and maybe you want to create a scan based off of a candlestick. Well, you could go to the candlestick section, and then you could choose whatever type of pattern it is that might be of interest to you. So maybe you want to find a doji, for example, or a hanging man, or whatever the case may be. But this is how you get started with it. You can literally just paste these right into your formulas, and it'll go out and search for you. So that's what we're going to do, is we're going to go back up over here to the left-hand side, and I'm going to click on this tab over here on the left, which is called the date and time. The one that I'm interested in loading is this first one, which is called day of month. And then what's important, down here at the bottom, make sure that you put a check mark in both of these boxes and click on OK, and that'll paste it right in there for you. Now, the hint for you here is that whenever you paste in a formula, and it says the name of the formula with an open and closed parenthesis, what that means is that the formula has everything that it needs in order for it to be calculated. So in other words, you don't have to put anything else in here. This is a complete formula right here, just called day of month, open and close parenthesis. So that one we're going to leave just like it is, as it is. And then for tab B, what I want to put here is I want to see the closing price of the security. So I'm going to double click on B, and we'll go ahead and rename that to close. And then for our formula here, I want it to return back the closing price. So I'm just going to put in the word close, for example. Okay, so we'll click on OK. And so we've got our first exploration right here. And you'll see it's right here at the very top, called the Explorer class. So I'm going to select it. And then down here at the bottom, I'll choose the database that I want to run on. In this case, I've got a group of securities here underneath this group called Index Constituents. And inside of this folder, I've got another folder called Dow Jones Industrial. So there's 30 stocks inside of this folder. So I'll put a check mark in that box. So that'll select all 30 stocks. Now, over here on the right-hand side, this is basically what it's going to do when it runs its scan. First of all, it's going to load 1,250 records. You can figure about 250 trading days in a year. So 1,250 records is going to give us about 5 years of time. And then you can also be specific on what day that you want to scan through. So what I'm going to do for this example is I'm going to tell it to use the current exchange date and time so it gets the most recent price that it can. I'll tell it to run on daily data. And if you want to run it on other time frames, you can see that you can run it on intraday data or longer time frames and so forth. And you can even create custom ones as well. So again, this is where it really goes off into another area. But if you were so inclined to create 2-day bars or 3-day bars or whatever the case may be, you can create your own type of analysis that way as well. But once we've got that set up, and down here, this will tell us what scan we're going to run, which is called the Explorer class. We'll click on the Start Exploration, and that'll begin the process. Now, the first time that you run this, what this is going to do, of course, it's going to load the data. In case it's going to load back 5 years of historical data on each one of those securities. And for this first scan, all we're going to have it return back is the last date that it found on that security and then the closing price. So when it's finished, you'll see our securities are over here on the left-hand side. They're listed alphabetically. And then we've got a column called date. And each date or each security has a number 7 in it. And this is what we're looking for. This is your real quick safety check. And that is, it's, as you'll find, as you start running more and more scans, it's really, really simple to make the mistake of putting in the wrong ending date or scanning through a date that you had set up before or whatever the case may be. But by putting in a date field like this, I know very, very quickly that if I see another number other than the one that I'm looking for, which in this case is 7, I know I either have a problem with that security or I've just selected the wrong ones, period, right? And then the next column of data, of course, is called the close, which is the closing price of the security followed by the symbol. All of these columns, if you click on them, of course, you can set up or you can sort on them as well. So, for example, there's Cisco, which is the lowest price security, and on the other side of the coin is United Health at $365. So again, whatever you want to do at that point. But that's just a real quick tip just to make sure that you've got the data correct, or the database that you're going to be scanning on is by putting in that day of month there in your scan there. So now once we've got that kind of figured out, the next thing what we're going to do is we're going to create or identify if the securities are generally bullish or bearish, and then we'll go from there. Now, to identify if a security is bullish or bearish, let's first go ahead and just open up a chart. And a chart that I look at a lot, for example, I look at the different indexes, and this, of course, is the ETF for the NASDAQ Composite, which is a symbol of QQQ.O. And as you can see here on this chart, we got just a standard bar chart, and then this red line that's going through it is just a moving average. And if I hover directly over that moving average, you can see it's a 50-period simple moving average. And then down here at the bottom, this is our volume. And on top of that, we've got another line. If I hover over that, you'll see that that's a 20-period simple moving average. Okay. So now to identify trends, either up or down or whatever, again, we can do this in a lot of different ways, but for this example, we're going to keep it really simple. And all we're going to say is that if this security, for example, is above that moving average, we're going to call that bullish. And if that security closes below that moving average, we're just going to call that bearish. And again, we're just going to be looking for general situations, right? So to do that, let's go ahead and add that to our scan. So I'll go ahead and open up our Explorer here again, and we'll open it up. And now what I'm going to do is I'm going to go over here to column C, for example. And for this one, I'm going to go ahead and name this one bullish. Because what I want to do for this example is I want to identify securities where the closing price of the security is above that red line over here. So to write that formula, what I'm going to do is I'm going to identify the close is just with the word close, and I'm going to say a greater than or above its moving average. Now, again, how do you write a moving average, for example? So the easiest way to get started with this is, again, go back to your functions or your formula library. Over here on the left-hand side, I'd recommend that you just click on the All button, because this is going to give you access to everything inside of here. And as you can see, it's a massive list. I mean, there's a lot of different formulas you can choose from. But here's a quick way. If you know what you're looking for, what you can do is you can just click in this window and then just start typing like MOV for moving average, and that'll jump you right down to that particular one. So there it is, moving average. And right here, this will give us an idea what this formula is going to look like, but I'll just go ahead and click on OK. And as you can see, it pastes it right in there for me. So here's what I was talking about before, and that is if you paste in a formula and it just has an open and close parentheses, it's not looking for any more information from you. It has everything that it needs. But in this situation, this one is looking for MOV, open parenthesis, the date array. So in other words, what do you want to create a moving average of? So in this case, we want to use it of the closing price. And for the periods, I want to make this a 50-period moving average. And then these are the different types of moving averages that we have to work with. E is exponential, S is simple, T is time series, TRI is triangular, VAR is variable, W is weighted, and VOL is volume adjusted. So as you can see, there's a lot of different types of moving averages, but I'm just going to put in the letter S for simple. So our formula is the close is greater or above its 50-period simple moving average. Okay. Now, if I've written that and if I've written it correctly, what I could do is I could just make a copy of this, and then I can make a small modification to put it on the bearish side. So now I'm going to jump over to column D right here, and I'm going to double click on it, and I'm going to call this bearish, and I'm going to paste in that formula. And what I'm going to do is I'm going to change that greater than sign to a less than sign. And now our formula reads that the close is lower or less than its 50-period moving average. So let's go ahead and run this scan. We'll click on OK, and we'll leave everything else the same. And I'll go ahead and click on Start Exploration. And this will begin the process. Now, what we've done here is we've added two more fields or two more columns of data here. It's going to identify securities that are either going to be bullish or bearish, just if the price is either above or below that moving average. Now, the difference is with this one, you can see these two columns here, is that the columns are either going to have a 1 in it or a 0. So what that means is that when you ask MetaStock a question, a yes or no, true or false type of question, by default, what it does is it comes back with a value of 1 if the answer is true, and it comes back with a value of 0 if the answer to your question is false. So very quickly, I can see everything that has a 1 in it, it met the bullish criteria, and vice versa, you'll see it has a 0 underneath the bearish. So what's nice about that is I can click on these column headings and then I can group all these things together. So here I've got all these bullish securities. I can see there's a bunch of them here. And for the bearish side, as you can see, I've only got 2 securities that are quote unquote below their moving averages. So let's take a look at them. So I'll go ahead and click on Nike. 2 different ways you can do it. You can click on the open chart over here on the right-hand side, or you can also just double click on it and that'll open it up that way as well. So we'll go ahead and close down the report and we'll take a look real quick. Here's Salesforce. You can see Salesforce, we're looking at the closing price in relation to the moving average, and you can see that's definitely below it. So I'll go ahead and close that one down. And then we've got Nike. And then same thing, it's coming back up to its moving average, but it definitely closed below it. And that's why that security came up as a bearish security there as well. All right. So now we've got a situation where we can identify securities that are quote unquote either bullish or bearish. So now let's take it to the next step and let's talk about using the filter here. The filter is really the key to the Explorer. The filter is what allows you to weed out those things that you don't want to see, so you end up with that very select list of the items that are of interest to you. So to do that, let's go ahead and jump back into the Explorer here again. And I'm going to go ahead and open it up. Now, the way that you can use the Explorer is you can actually use it a couple different ways. And looks like we have a little bit of a delay. I hope that that's not too bad, but anyway. To use a filter, you can use it actually a couple different ways. Number one is that, for example, you can grab a formula or enter a formula, for example, and go straight to the filter tab, and you can paste in that formula. And by doing this, what this will do is it'll only find securities that meet that criteria, period. And that'll work fine for you. And if you like doing it that way, no problem. That works well. What I typically do, though, there's a second way that you can use the filter as well. And you can actually identify the securities that are returning back a 1 underneath one of these other columns. So, for example, any security that comes back with a 1 underneath the bullish, I could say, go to the filter tab and I say, only give me those securities that are coming back with a value of 1 underneath column C. And by just putting in COL, which is abbreviation for column, and the letter of the column that you're interested in, which in this case is column C, it'll only come back with those securities that are returning a 1 in that exploration. So let's go ahead and do that. We'll click on OK. And then to run this one, what's important is over here on the right-hand side, you'll see that there's a box there that says use a filter. So I'll go ahead and select that use filter, and we'll click on our start exploration. And then we'll go ahead and run this one. Now, what this one is going to do is it should run through, find only those securities that are coming up with a bullish or a 1 in that bullish column. And if you sort on the bearish, you should see that everything has a 0 inside of there. And then the other thing you can look at is you can look at these tabs right here that says results. There's 28 securities that met that criteria and 2 securities that were rejected out. So Nike and Salesforce. Those are the 2 we just looked at. Hang on for just 1 sec. So once we've got that set up, again, like I say, that's my favorite way to use the filter is by actually identifying the securities, for example, that are returning back a value of 1. And the reason why I like doing it that way is that once I actually run a scan like that, then I can actually enter in other criteria, and it makes it really easy to add other criteria or remove criteria from that filter as well. All right, so let's go ahead and go back into it. Now, once we understand how that filter operates and how to use it, a really good example that I've got here for you is working with volume. Now, there's a number of different reasons why you might want to use the Explorer to begin with, but when the way that a lot of people like to use the Explorer is they like to set up their database of securities that they want to follow or trade and so forth. And a popular way to do that is to set up a database that meets the criteria you're looking for, that maybe the securities meet a certain price range, for example, or the volume has to be enough. Because one thing we want to be really careful of is that the securities have plenty of volume in what we're interested in trading. And if not, of course, we can run into some problems. So to do that, what I'm going to do here is we're going to add volume to our scan here. So I'm going to go ahead and open it back up. And I'm going to now jump over here to tab E. And we're going to name this one volume. And what I want to return for this one is just the volume for these different securities. So I'm just going to enter in the name volume. All right. Now, to run this scan, we'll go ahead and click on OK. And again, click on Start Exploration and keep everything else the same, and then just run it every time. So the other thing I want to point out too is that if you have the real-time or professional version of MetaStock and you're running a scan like what I'm doing too, you're also going to have to pay attention to whether you're trading, whether the market's open or not. Because if you have the real-time or professional version, the scan will actually try to get the most recent data that it can. So if you're looking, for example, like for volume numbers, and you're running a scan at, say, 12 o'clock Eastern time or whatever the case may be, you're not looking at complete information. So just be aware of that, because that's another thing that can kind of surprise you from time to time. But I'll go ahead and click on the volume column here. And now you can see we've got volume here. We've got 3M at, what is that, 1.4 million shares being traded today. And on the other side of the coin, we have Apple at over 82 million shares. So there's a huge range in volume here. This is just the Dow 30 stocks. So as you know, I mean, all 30 stocks inside the Dow are going to be heavily traded. But let's just say for your purposes, you're trying to build a database of securities, and you want to only include securities that are meeting a certain volume requirement, meaning they have to be over a particular level. So let me show you how we can add that to our scan. So again, let's take a look at our numbers here. The lowest scan or lowest volume is 3M at 1.5 and so forth, but then it goes up. But so for this example, let's just say hypothetically, we'll just use the number saying we only want to find securities where the volume's trading, say, 2 million shares a day, for example. So to do that, now I'm to column F. So I'm going to go ahead and rename this one VOL FLTR. The trick is with naming these column tabs like this is that you have 8 spaces to work with. So sometimes you just have to be a little creative there on the names themselves. So that's why I'm going to call it VOL FLTR. So now to identify volume being over a particular number, all we'd say is the volume is greater or above whatever number it is that you want. So in this case, let's say 2 million. So we'll go 1, 2, 3, 1, 2, 3. So volume greater than 2 million. We'll click on OK. And then what we can do now is we can go ahead and run the exploration, or the other thing we could also do is we could add that to the filter. So I'll tell you what, let's go ahead and add that particular criteria to the filter. So let's say that I now want to add securities that are meeting this criteria underneath column F to my filter. The way that you do that is just put an and sign in between them, and then say column, whatever letter it is that's of interest to you. So in this case, we want column F. So now I've got 2 different criteria. I want to see securities that are meeting the criteria underneath column C, and also securities that are meeting the criteria underneath column F. So bullish and trading over 2 million shares. So let's click on OK, and let's see what happens. So we'll go ahead and start the exploration. And again, like I say, I'm just going to keep clicking on Start Exploration every time, because again, I'm going to keep running the same scan over and over again for these examples here. All right. So now what we've got here, as you can see in our results, now we're down to 24 securities with the 6 securities being rejected. And you can see, for example, in the volume, excuse me, is that if I click on the volume here, you'll see the lowest volume security traded today, Goldman Sachs, at just over 2 million, 2,051,000 shares. And then vice versa, of course, then we've got Apple at 82 million shares. So this one barely met that minimum requirement there. So let me just point out a couple different ways that we can look at this. So let's say that we're looking for volume to be over a particular number. Well, as you know, volume can really change. I mean, it changes all the time. It changes from day to day, from minute to minute, all depending on what's going on with that security in the markets and so forth. But it's an extremely volatile indicator as far as moving up and down. So here's my word of advice, and that is, if you're looking for a particular, the security to be trading over a particular number, the thing you got to be careful of is if Goldman Sachs traded just under 2 million, that would have been kept out of the exploration or out of the results. What you might want to do instead is you might want to look at average numbers, for example, to kind of give yourself a little bit of wiggle room. So what we could do is, rather than saying the volume has to be greater than 2 million, maybe we want to say that the average volume is going to be over 2 million, for example. So to make this formula, or to modify this to say that the average volume is greater than 2 million, we're going to do a moving average of the volume. So the way that that's written is just written as MOV, open parenthesis, volume, followed by a comma, the number of periods that we want to use, and then the type of moving average, which in this case is just going to be S for simple. So in other words, this is a 20-period simple moving average of the volume, is saying that that's greater than 2 million shares. So let's go ahead and run this one. We'll go ahead and click on OK. And we'll go ahead and run it again. We'll click on our Start Exploration, and we'll see what this comes up with. But by taking a look at the average, again, what that does, it allows or gives that security room to move with those volume numbers going up and down because of the volatility of it. But when it's finished, now you'll see we're at 27 securities. And I'll click on this volume here, and you can see now 3M and Amgen are back into our list, and also Honeywell as well. And you can see that they only traded 1.4 million, 1.5, and 1.6. And previously they got weeded out, but since they've been averaging at least 2 million, they were included back in the report. So let's go ahead and check one. I'll go ahead and just double click on 3M, for example, close down the report. And now what we're looking at here, we'll take a look at the volume here. I'll kind of zoom in here, but we're looking at this volume bar right here. And you can see today it traded 1.4 million shares, but this blue line is its 20-period average. And if I hover over that, you can see that the average is actually 2.6 million. So in other words, what's happening with 3M, for whatever reason, the volume has really fallen off here this last week or so. It's trading well below its average. And this is kind of interesting. And there's a lot of different things that you want to take a look at with volume. But one thing that I'm always keep an eye on is that when a security is moving up and it kind of hits a plateau and starts trading sideways, for example, and then we see the volume starting to trade off like that and trade well below its average, that means that it might be losing some steam at this point. And there's a possibility that this thing might change direction. So again, there's a lot of different ways to interpret it, and there's a lot of different ways to use this information. But again, that's one. So that was okay. So that was 3M. So let's go ahead and jump back in there again. So that one, again, like I say, what we did there is we looked for the average volume to be over 2 million, for example. Now, another thing that might be of interest to you is you might be looking for securities that are trading above their average, like securities that, for whatever reason, the volume is spiking up, you know. Now, the reason why you might want to do this is, I'm sure if you've been trading for a while or been watching the markets, everybody has seen this happen. But a security might be trading along, you know, and everything's fine. There's no news on it, but all of a sudden the volume starts spiking up in a huge way, and we can't figure out what the heck is happening. But then afterwards, you see the price either rocket up or rocket down. And then, of course, then the news comes out and tells you what's happened after the fact. So what a lot of people like to do is they like to look for scans or run scans looking for volume above average. So let's go ahead and modify that. Let's go ahead and take that greater than 2 million out. And let's just say that we're looking for the volume to be greater than its moving average, for example. Okay, so we'll click on OK. And again, we'll run this one. We'll see if we get any hits here, and see if we have any securities here that are trading above their average today, for example. All right. And it looks like we've got one security that met that criteria, and that's Traveler. So let's go ahead and open up that one. And we'll remove this report. All right. And so here we go. Down here at the bottom, again, this blue line, of course, is its average. Travelers has been averaging 1.6 million shares. But today, for whatever was going on with Travelers, it actually traded above that average at 1,693,000 shares. So just over. But you can see these spikes here, for example. Like, look at the volume here. Look how low the volume was back here. And then you see the volume starting to spike up. And then what happens? The trailer, or the security in this case, for example, rocketed down, huge volume. And then, of course, it levels out after that. But this is the kind of thing that a lot of people are interested in finding. But learning how to use the Explorer to find these things, that's exactly what you can do. So let me give you another idea here, too. So let's say, for example, in this case, as we know, the volume can be all over the place. I mean, it can be up huge one day, down huge another day, and so forth. Let me give you another idea of what we can do. We'll open this back up. And instead of looking for the volume to be greater than its average, what we can also do is we can look for percentage changes, like the volume being up 10%, down 20%, or whatever the case may be. There's another formula inside of here that will help you do that. And let's go ahead and grab it here, for example, out of our functions library. And this particular formula that we're going to look for, in this case, I'm going to jump down to RATE. And this one is called a rate of change indicator. So what this one is going to do, I'll click on OK. This one is called a rate of change. And what this will do is allow you to see the percentage or point changes over whatever period of time that you want. So in this case, let's do a % rate of change on volume for the security over a 1 bar or 1 day difference. So to do that, we're going to replace data array with the word volume. We're going to replace periods with the number 1 because we only want to look at 1 bar going backward. And then you'll see there's a % or a $sign. The % means that, do you want to see it on a percentage level basis or a point basis? And if you want to see it on a point level basis, you use a $sign. So in this case, I'll get rid of the $sign. So our formula is rate of change, volume, 1%. And this will give us a 1 period % rate of change. So let's click on OK. And then to run this scan, I'm going to go ahead and turn off our filter because I don't want to incorporate that at this time. I'll click on our Start Exploration because what I want this one to do is I want this just to give me the percentage change of the volume bars of today's volume in relation to yesterday's volume. So now we've got a column of data here underneath our volume filter, and I'll sort on it, and you'll see that the one that is down the most today is Coca-Cola. We'll open up that security. That is down over 40%. It's 40% lower than what it was yesterday. On the other side of the coin, Procter & Gamble was up 33% over yesterday. So we'll open up that one as well. Go ahead and close down this report. So our first one, Procter & Gamble. Now what this is looking at, or what we just did, is we looked at this volume bar right here in relation to yesterday's volume bar. So in other words, this one is up, what was it, 33% higher than it was yesterday. Okay, so that'll identify that. And then vice versa, this one was Coca-Cola, and this is the one that was down 40%. And what it was looking at here is the volume of today at 9.3 million shares in relation to yesterday's volume of 15.6. So in other words, Coca-Cola's volume dropped off 40% in comparison to yesterday. So again, that particular formula there is called a rate of change, and that'll tell us percentage changes of anything that we want. So what's nice about that is once we understand how to work with that, then we could actually put in numbers, for example. And so let's say that we're looking for securities where the volume, the rate of change is greater than 10% or 20% or whatever it is that you want. You can just put that in here by saying greater than, say, 20, for example. And now we'll go ahead and incorporate that into the filter. This is going to tell us or give us securities where the percentage change of today in relation to yesterday was up at least 20%. So we'll click on OK. And then to run this scan, we need to make sure and use the filter, make sure that filter is activated. And again, click on our Start Exploration. And again, it'll rip through that data and come back and tell us the answer to that question. And this again, I mean, I just can't say enough about the Explorer. This is why I love the Explorer so much. Because once you figure out how to use this and read it and interpret it, this thing can literally go through thousands and thousands of securities and do incredibly complex calculations and tell you exactly what you're looking for. So in other words, again, now I know that, for example, each one of these securities, JP Morgan, Procter & Gamble, and Travelers, were up at least 20% high. The volume was up at least 20% higher than what it was yesterday, okay? So again, really, really powerful there, to say the least. All right, next, let's talk, once we understand how to use volume, how to use the filter inside the Explorer, then what we can do is then we can incorporate other things into it as well. And so maybe what you want to do is you want to use the Explorer to figure out how to filter on price as well. And once you understand how to use it up to this point, like what I've shown you, adding a price to this exploration is very, very simple. So I'll show you how to do that next. So let's jump back over here. And I'll go ahead and go back into our exploration here. And looks like, again, it looks like we might be having a delay. Hopefully it's not too terrible, but I'm just looking for the screens to change. Okay. All right. So now let's go to another tab here. In this case, we're up to tab G here. And actually, you know what? Before we do that, let's go back here for just a second. I'm going to go ahead and go back. And I want to point out one other thing here. And that is, whenever you see an R inside of a set of brackets like this, that means that there's a report available for you for that particular system. And if you want to see that report, all you need to do is right-click on it and choose Report, and you'll be right back into that same report that you were at before. Okay, so for this example, what I want to do is I'm going to unselect our filter, and I'm going to click on Start Exploration, because what I wanted to do at this point is I want to see the prices of all the securities for that scan. And the other thing I want to point out too is that once you get comfortable using this tool and looking at the information and how it displays the information, a lot of people like to look at it in this format. For example, they might want to, for example, not use the filter and then just kind of sort on these different columns, for example. And by sorting on it, then you could look for like securities. Well, I know JP Morgan, for example, is bullish, and I also know that it met my filter criteria. I know that's true for Procter & Gamble, and again, also for Travelers. And then as I kind of go down, then I can see, for example, that those are the only three that met both of those criteria. But again, just a different way to look at that information. So what I'm going to do now is I'm going to click on the close, and I'm going to sort on this. And you can see our lowest price security right now is at $51. And then our highest price security, for example, is at $365. So let's go ahead and add a price filter to our scan. And let's go back to the example saying that we want to create a database of securities that are meeting a volume criteria and maybe also a price criteria. So I'm going to go in this case now to column G, and we're going to go ahead and call this one PRCFLTR for price filter. And what I'm going to do for this one is I'm going to say that the close has to be greater than, say, whatever number it is you want. But in this case, let's say greater than $60. But let's say that we also want to put an upper limit on it, and we want to make sure that the security isn't over $300 or whatever it is. Well, then we could say, and the close is also less than whatever number again that you want to use. But I'll just use 300 again for this example. So now I've got the close is greater than 60 and the close is less than 300. And then I could go back to my filter, and again, I could incorporate this price filter. So for example, let's say that I'm looking for securities that are bullish. So that'd be column C. And then maybe the price fits within, that price range. And then I'd say column G, for example. Okay. So that'll meet those two different criteria. It has to be bullish, and it also has to meet that particular price condition. And if, for example, again, I wanted to add volume to it, you know, I could put in whatever formula I want and then say, and whatever column it is that I have the volume filter in there as well. But for this example, we'll just look for bullish and the price meeting that particular level. So we'll click on OK. And again, over here on the right-hand side, we want to make sure that the filter is activated. And again, click on Start Exploration. This will begin the process one more time here. All right. Now, once we've actually run this here, it should weed out those securities that aren't meeting those two different criteria, and we'll see what we come up with. All right. Okay, so here we go. So now what we've got here is you can see that if I sort, for example, on the closing price, you can see the lowest price security in this case now is Dow at 63.99, and vice versa. The highest price is Boeing at 252. And what you'll notice is in this report is that every security inside here is going to have a 1 underneath the bullish column, and it's also going to have a 1 underneath this price filter column there as well, because again, it met both of those criteria. Okay. All right. So lastly, what I want to show you here, how to work with this. Excuse me, hang on for just 1 second. And that is, I want to show you how you can save your results here so you can use it in other aspects of the program. Because once you learn how to run these scans, what's really nice about it is that once you figure out how to save that information, you can save it in whatever type of configuration that you want. So if you want to then go and back test or try different trading strategies to see how well it worked and so forth, you can save that list and just test those securities, for example. So let me show you how to do that next. So once we've actually have run a system like this, and we've got a lot of securities that meet the criteria, for this example, let's say that I want to save all 21 of these securities to a list. The quickest, easiest way to do it is just to click on the Save List button over here on the right-hand side. And this is going to pop up a little dialog that'll allow you to either add it to an existing list or create a new one. So I'll click on Create New, and then we'll give it a name. So again, I'm going to do the Explorer class, and we'll click on Create, and now you'll see I've got one created, and then I need to click on the OK button, and that'll add all 21 securities to that folder. Now let's say, for example, that you ran a scan, but maybe you didn't have the filter activated, and you just saw this big huge report with a bunch of different securities, but you only want to grab a handful of them and put them into a list. Well, by holding down the Control key on your keyboard, you can select whatever securities that you want. And once you have the securities that you want, just right-click directly on one of them and choose Add to Custom List. This will take you right back to that same list that we were just looking at here a minute ago. And again, we could add to an existing one, or we can click on the Create New and then give it a name. So this one, we'll call this Explorer Selective List. Okay, and we'll click on Create, and again, click on OK. All right, so let's go ahead and close these down. And now what I want to do here is I'm going to go ahead and close down these charts here. So let's go ahead and get rid of everything. We'll go back to our Power Console, and I'm going to select my chart button up here at the top. Now, where you'll find these lists is up here underneath this Custom Online Data List. You'll see the two new lists that we just added. The first one that we created was called the Explorer class, and this one had 21 securities in it. And then the one above it, we called the Explorer Selective List, and this one has 5 securities in it. So what we can do very quickly is we can just select the first one in that list, click on Open Chart, that'll select it or open up that security, and we can do whatever we want with this security as far as like adding analysis or making changes and so forth. But then in the lower right-hand corner of this screen, if we click on that right pointing arrow, we can very quickly just scroll through these charts looking at the setups here to see if any of these are meeting the criteria that we might be looking for. But you can, as soon as you click on that arrow, for example, again, like I say, it'll literally scroll through all the different charts there for you. So it's just a really nice way to kind of tie that whole thing together and really make it an extremely useful and powerful tool, to say the least. So that's what I've got here for you today. So with that being said, let me tell you just a little bit about Learn MetaStock and what we do at Learn MetaStock. today will give you a pretty good taste for the type of training that we offer. And we offer, again, a lot of different styles and types of training inside here. And we do it a number of different ways. But if you go up to the learnmetastock.com website, if you click on, for example, like live classes, you'll find that we do up to 3 live classes per week. And once you become a member and you're logged into your account, you'll see the different classes that we offer. And at that time, what you do is you just click on the join live class, and that'll take you right into the live classroom. And what's nice about that is that then, of course, if you have questions or you want me to take a look at something, we can do it all right then and there, to say the least. The next tab over at the top here is called the video library. And this is hands down where most people spend the majority of their time, with the MetaStock program or with it inside of Learn MetaStock. And what we've done here is we have over 100 different training videos inside of here on covering information anywhere literally from A to Z. So if you're brand new to technical analysis and charting and MetaStock, I recommend that you start right at the very top and just click on, for example, the introduction to technical analysis and start there and start working your way down. But by doing that, of course, that'll open up the video for you to take a look at. And then the other thing is over here on the right-hand side, you'll notice that there's a couple tabs over here underneath resources. If I've created any formulas or outlines or anything else, you'll find that you'll be able to download them directly by clicking on these buttons over here on the right-hand side. And then what you'll find also in most of the videos that we have on the site is we also have quizzes as well. And the quizzes, what these allow you to do, or what they do, is they reinforce the different things that we were talking about in the video. And it kind of will walk you through, ask you some pretty basic questions or what we covered in the video. And it'll score you at the very end and let you know how well or how well you actually understood or grasped the concepts. But again, it's just a really nice way to kind of reinforce, the different things that we're trying to teach you. So I'm going to go back to the video library and let me show you just some of the different types of categories that we have for our training here. But as I scroll down here, you'll see that I've got a section here which is called Getting Started. And if you're newer to MetaStock, this is where I highly recommend that you make sure absolutely watch these first 4 videos here. And this will give you a really good overview of the concepts of MetaStock. One of the things that I see people struggle with is they get the program and they're really excited and they want to get going, but they jump straight into a power tool, for example, and they don't really learn the basics. The problem with that is that kind of stuff will kind of come back to trip you up later on. So I like to really kind of start you from square one and work you add to your knowledge base, as it grows. And by doing it that way, I think it's a much, much better way to do it. And I think you'll end up with a much better solid foundation there, in your learning curve there. So watch these first 4 videos, but then from there, you can jump around to wherever you want. But for example, like, you might want to jump down to, for example, some of the more advanced power tools, for example, like the forecaster or the expert advisor. You'll see we've got a number of videos just on those. Option scope. We've got a number of videos, for example, just on system testing. And system testing, there's a lot of questions having to do with system testing. And there's a lot of different ways that can be tested. And again, I'll walk you through literally from the basics of how to get started with that. As we scroll down here, you'll see I've got a number of videos just on the Explorer here. And underneath that, depending on your interest level with the program, I have a number of videos just on formula writing. Now, again, as I was saying before, I know that there's a lot of users that they just want to learn the basics of the program, how to move around and apply, work with the add-on that, that they purchase with the program, which is fine. And for other people, they really want to dive into it. But even if you just want to, understand the program well enough to kind of use it and so forth, I do recommend actually taking a look at some of our formula writing videos. And the reason being is that the more that you understand of how the formulas work and maybe how to at least read them and interpret them, it might give you that much more confidence in why the program is telling you it's going to buy or sell at a particular point there. So I think it can be really, really beneficial to you as well. We have a number of videos on the RMO and on stops. Stops is another area that I think is really important. You know, as everybody knows, anybody can get into a trade, but where you get out of the trade is really going to define whether you're profitable or not. And this is an area that especially newer traders really tend to overlook. They're so, interested in finding that perfect trading strategy, the holy grail and so forth. A lot of times they don't spend enough time on figuring out how they're going to get out under the different scenarios. So we've created a number of different things there. We have a number of different videos on indicators. And probably one of our most popular sections of the website is this section here, which is called the trading strategies. And what we do is we'll take trading strategies that we get out of a book or magazine. And my favorite magazine to use is Stocks and Commodities magazine. And I highly recommend that you take a look at this magazine. There's just a ton of information. And for example, like this last video or last training session that we did called short-term gap trading, they have an archive section in Stocks and Commodities magazine where you can just type in the keywords and it'll find all the articles that, for example, that are talking about gap trading, for example. So I read probably half a dozen articles before I created this video. And what you'll find is that when I create these different trading strategies and so forth, when you watch the video again, as I was showing you before, is that I'll create formulas for you. And these formulas then can be downloaded directly into your MetaStock program. So I'll show you, for example, the concept behind this short-term gap trading strategy, for example. And since I've also written the formulas, you'll click on this button and it'll install them directly into your MetaStock program. This is going to save you a massive amount of time and effort, believe me, because I have spent a massive amount of time and effort doing this. So, and as you'll find, every single one of these, Daryl Guppy's multiple moving average, 4% system, all of these have custom formulas that you'll be able to download directly into your program, and you'll be able to follow along exactly with what I'm showing you in the videos. Two more areas. One area that we also do is we do product reviews and training on the different add-ons. And as you can see, we've got a number of different add-ons that we've taken a look at and we provide training on that, again, I think it could be helpful depending on what you're doing. And maybe you're struggling a little bit with the add-on using it with MetaStock. And I'll show you exactly, what we do with it, and how to put it together. And then lastly, we have a number of different videos on Zenith there as well for our real-time or professional traders there. So I hope that that's helpful. Again, I know that that's a lot of information, but are there any questions, anything I can help answer before I head out here? I know I'm kind of at the end of my time here, so be happy to help out if I can. And Jeff, are you there?
I am. I'm sorry. We were working out an audio issue real quick with Oscar, so I'm sorry if I missed it.
Oh, okay.
I do.
Yeah, no problem.
So if you don't subscribe to Learn MetaStock and you haven't done a subscription before, I would recommend you do it. People just listening to Kevin there and kind of the explanations and all that kind of stuff. He does such a good job. We're going to do a special. I'm going to go ahead and take the presentation from you, Kevin, if that's okay. But We're going to do a special here where if we're going to give you the Learn MetaStock service for basically $33 a month. So I'm just going to make me the presenter, show my screen. You should be able to see this. So the way that works is the Learn MetaStock is $99 per month. If you pay for a first month, basically we'll give you the second and third month for free, which brings your cost down to $33 a month. During that time, you're going to have access to the hundreds of recorded videos. You'll have all of the formula writing videos. One of the things that Kevin does a lot that I really like in terms of the actual videos is he'll take an article out of Stocks and Commodities magazine, who just happens to be our sponsor, but he'll go in and put together the MetaStock formula. He'll say, let's analyze this as a trading forum. And it's just the things that he's done with the website. I think they're really cool, Kevin. So you do a good job with it. Customers love it. We always get really good feedback with, hey, tell them to do Learn MetaStock. So you can do it. It's $99. You'll get 3 months for that, so $33 a month. Give us a call, 800-882-3040, or you can visit us online at metastock.com/sales-chat. Kevin, that was a great class. I'm sorry I missed the very end of it, but thank you for doing it.
Thank you. Appreciate it.
And I'm going to eject you now. Are you? Goodbye.
Thanks again.
All right. Okay, very cool. And now, okay, let's just go through. We did mention stocks and commodities. If you haven't started your MetaStock extended trial too, you can do that as well. We had a question just now. Okay, what is MetaStock from Eric? Eric, thank you for your interest in MetaStock. And just so you know, I don't know how long you've been here, but I've said this a few times, so it's getting rehearsed. MetaStock's been rated #1 in its price category for only 28 years in a row. And we've been talking a lot about the different things that you can do with it. We're not a broker. We don't care who you trade with. You don't have to give us $10,000 to fund an account. That's not really what we're about. You know, one of the things that we try and do is be really good about what you do, or what we do really well is scan the markets, help you identify trade opportunities, help you test the ideas, find better trading ways to trade, forecast pricing, give you real-time alerts and commentary and signals. And it's an incredible toolbox. As Kevin just showed, you can go in and write scans that are very, very easy to put together. If you haven't tried out MetaStock, you should. And I'm going to give you the same deal that I give any on the. Gosh, I'm getting tired. I've been broadcasting now for 23 hours. I'm going to give you the same deal. If you buy a month of MetaStock, the pricing starts at $59. We'll give you month 2 and month 3 as part of that. You can do that at metastock.com/conf promo. You can call us. We'll be happy to talk to you about the options and help you figure out what works best for you. 800-882-3040. You can also visit us online at metastock.com/saleschat to do that. So I hope you're enjoying it. I hope everybody's enjoying the conference. It's been great. And the next speaker that we're going to introduce is a good friend. Oh, there's the stocks and commodities stuff. We'll do that again in a second, or in about an hour. The next speaker that we have is a good friend of mine, somebody that I would call, and we have called, a force of nature. Oscar runs OmniCamps down in Las Vegas. He does them very, very frequently. He started trading in the pit session, and out of all of the people, he is so animated. He's so enjoyable to watch, and we absolutely love to have him on. One of a very, very popular guest of ours. And let's go ahead and bring you on here, Oscar, before I let more of my man crush show. Arthur, you are in the right place for Oscar's session.
Can you
Oscar,
hear me?
I can hear you now.
How about video? We need the camera on.
Let's give it a go.
All right, I'm going to give it a whirl. We'll see what happens to us. All right, I think we have a camera and everything.
Yeah, let's go for it. Let's go for broke. I'm going to see if we can share your screen. 2.
Show my screen. Yes.
Oh, that was almost too easy, Oscar. Oscar, I'm going to get out of the way. I'm really excited to see what you have to say. You always. All right, your turn.
Traders, first off, welcome. Thank you for tuning in. A round of applause out there. If you're sitting in your seats, clap for MetaStock. What a great presentation these last 24 hours. They work so hard at this. They're such good friends of mine. Their software is great. And all the presenters before me, of course, had great ideas for you. We're going to do something together now. Might be a little different from what you've just seen. I am going to show you how I am an algo hunter. I hunt down algorithms. I know what they do. I know what they look for. I follow it. I spot it. And then I stay with it. And it's simple. I can teach these techniques to you, which I will do today in this webinar. I will teach you some fantastic techniques that are simple yet powerful. And you can use them right after watching this presentation and going forward. You'll need no calculator. You'll need to purchase nothing. I'm going to show you what a good pair of eyes can do to match Wall Street. I've grown up there, started at 18 down on the trading exchange, spent my life on Wall Street until 2007 when they gave us all computers and sent us home and closed up the floors. And I am of the breed. I know what it is they're going after, and I'm going to show that to you. If you like what you see in this presentation today, please come join me at livewithoscar.com. It is a free site. If you go to livewithoscar.com, you'll end up here. Click register if you're not a member, or log in if you are. We ask for almost nothing. There's barely any information. No credit cards will be required. Once you go through, you will go to something called Omni Chat. You can chat live with me right there by clicking in. Free membership. You'll be in a live trading room. And let me see if I could just show you what that live trading room will look like when you get there. You'll have me on camera, all the traders lined up in there, and we just live together 24 hours a day. Free access to you if you like what you're going to see this afternoon. So let me show you what that is. Traders, we're going to look at charts in a way that is very simple for anyone to do, but very powerful. During today's live class, I will offer some simple yet powerful techniques that will make you become a much better trader, analyst, if you will, which you can absolutely use right after the video and find your own stocks, commodities that are falling into this. So I like to say at all times in this business, you need to keep it simple. And algorithms are scary, and Wall Street is scary, and it doesn't seem even slightly simple, but it really can be in an abstract way if you just pay attention to what the charts are. Because when you look at a chart, this chart right here is a visual look at every bit of news that's ever come out, every report that's coming out for a company or a stock or a commodity. Traders' reaction to such, all of it is built in right here on the chart movement. And that's where algorithms get their information, and that's where any smart trader gets its information, because the chart is pure. The chart doesn't have child support payments and BMW payments, nor does it have a reputation to protect. So the opinion that a chart will give you is absolute if you read it correctly. And let me show you what I mean by that. We're going to keep it simple. We're going to follow the smart money. That is the Wall Street funds. If you can follow them with a good pair of eyes, you can do well. So let's become human bloodhounds, if you will, and let's go out and hunt for what Wall Street looks for. We're going to start with something simple. This is a simple technique that I just happened to spot. So before we even get into the webinar, I wanted to show you this. I happened to just stumble across it a couple of nights ago in crude oil and went, this looks to me like a head and shoulders, clearly, left shoulder, head, right shoulder, clearly formed. Generally, that makes a market drop when this right shoulder is complete. The projections are 5360 versus June crude, and then 5200 maybe when we drop out. If, in fact, this turns out to be a valid head and shoulders. We can get rid of the whole mumbo-jumbo voodoo about a head and shoulders and simply call this a bear flag that also projects to the downside. So either way, bear flag if you want to look at it that way, head and shoulders if you are a fan of those, crude oil is projecting to drop. See the bear flag right there? Let me get the circle out of the way. So if it wasn't a head and shoulders, bear flag, now it's starting to get below an average. I assure you the street picks up on these things. They're simple, but algorithms are following it. Why? Well, the algorithm knows when it stopped here and here and here and here, the algorithm knows the geometry of the market at this point. And it's going to think there will be more support here. And it will also know when it breaks that support, it will drop lower. Simple techniques. Anyway, before we even get started on what I wanted to show you, I happened to run into this and I thought, if you're a crude oil trader, maybe I should at least show you that crude oil is telegraphing that it wants to head lower eventually when we come out of this bear flag / right shoulder of the head and shoulders. Now, it could gyrate up and down inside the shoulder, and that's all the way up to $64 and back down to 57 and still be in the formation. So maybe it's not happening today, but it will happen when the market starts to roll over. So I just wanted to show you that. Now let's become human bloodhounds. You are looking at the NASDAQ. Daily bar, each one of these bars represents one full day's worth of trading. You know what? I did one thing I didn't do, which I should. Traders, before we do anything else, please know this. This game is extremely risky. It is not easy. You will not always make money. You will lose money lots of times. You might not even know what you're doing, but if you put your stops in, your protective buy and sell stops before you ever even begin to trade, you will have a lot of that risk taken out of you trading. Put your stops in first. Never, ever trade without stops. ETFs, options, commodities, stocks. I don't care what it is. Flip an old baseball card. If you trade that these days, they're risky. Everything's risky. So please know that, okay? You can lose more money trading commodities or futures than you have in your trading account. Now that we get past that, how do we make money? Well, what I see here is this. If you want to make smart decisions, use what the street uses. Well, what's the street using on NASDAQ? I find they are using the simple 30-bar moving average to key off of. And boy, do they key off of this. Now, step back here and watch. See how we're not near the average? Market moves around, comes to the average, tests it twice, nice big rally. Back to the average, bounce, nice big rally. Through the average for one day only. The next settlement was above. The buyers came right in. Now look what happens when it fails under that average. Almost like magic. Failure, drop, failure, drop, failure, drop, failure, drop. And then finally we get above it. And the algorithms kick right in and blast this thing off. You can actually see what they're doing. You just have to know what to look for. You see this average almost cuts the chart directly in half. It's almost never involved in the market unless it's meaningful. Well, I'll tell you right now, the algorithms are calculating this. And you can see it for yourselves. Just follow what they're using by finding that yourselves. So I found putting a bunch of averages on the NASDAQ going, oh, I see this week it's the 30-bar moving average. It rotates constantly because algorithms rotate constantly. They're putting in parameters and taking out parameters. So the algorithms will shift and the 30-bar will not work on NASDAQ maybe 2 weeks from now. But today, top day, the 30-bar moving average in NASDAQ, it's almost like giving you a trick, a secret weapon that unless you can figure this out for yourselves, you don't realize what the street's keying off of. But write it down. NASDAQ, you want to use this for tomorrow? 30-bar moving average. When you get to it, something meaningful will take place. Again, we want to make smart decisions, right? So we use what the street uses, at least for the abstract analysis, to tell us what direction it should go in. Then, of course, we use other analysis to figure out where to buy and sell, but this is to let you know what direction you should be trading in if you want to be on the same side as the smart money or Wall Street. So that's NASDAQ. Well, I've got a few other examples I ran across. Let's see, we'll go here. The street is keying off of simple channels and the 20-bar moving average, in this instance, on the Dow Jones Transportation Average. How do I know that? Well, just look at how well it behaves inside these channels. Let me grab a little tool here. Look at how well it behaves inside the channel from top to bottom. So the abstract part of this analysis is figuring out what channel it is in, and the channel will show you the angle of geometry the market is trading in. Very important in this game. So you see it stayed inside, simple trend line analysis. And then you wonder, okay, what are they using to key off of? And boy, oh boy, are they keying off the 20-bar moving average. Look at the orange arrows. If you get to it, they buy it, buy it, buy it. You get under it, the selling begins, gets back above, buy, buy, buy. You get under it, the selling begins, back above, buy, buy, buy. Under it, the selling begins. That is absolute. This is telling you, for whatever reason, Wall Street and the algos are keying in using the 20-bar moving average on the transportation average. It was the 30 on NASDAQ. It will flip all over the place. There's all sorts of averages that they use. Now, this is keeping it simple. And with that in mind, I promise you, this is my 101 kindergarten analysis. Baby food. I could do this with my eyes closed in my sleep. I am just showing you the abstract portion of my analysis. If we really wanted to get into it, the Omni is intricate and will tell you where to buy and sell, but I don't give out the Omni in webinars. Omni, I only teach live in Las Vegas to 3 people at a time. That's not what we're learning here. That's a webinar I offer, a seminar that I offer, but What we're going to learn here is what the street is using to chase down these markets so that you can use those techniques going forward. If you want to learn about the Omni itself, you'll come out to a 4-day seminar and hang out with me in Vegas in my home office. I'll tell you right now, if you've got something to show someone and sell somebody, if it doesn't work, you don't invite them to your home. It's the last place you do your seminar. My seminars are held here at home. We don't kid around here. All right, so we want to keep it simple, traders. The 20-bar moving average will tell you the transports. Now, remember this. If you're someone who trades the transportation average stocks, the likelihood is they're using that on those stocks at this moment in time as well. So keep that in mind. It all fits together. So that's the transportation average using the 20, NASDAQ using the 30. Let's see what else we have. We're up to number 4, the Dow Jones Industrial Average. Now we have another interesting average. And again, traders, we're going to keep it simple. We're going to follow the smart money. In this case, Wall Street or the street is keying off of easy to spot trend lines once again. And now the 30-bar moving average on the industrials, and easy to see. Look what happens when you get above. Again, I'll take something to illustrate, just make it clearer for you. But look what happens when you get above. The rally begins, right? Big, big, big rally ensues. Bounce off, get under it. They try to sell it a little, but nothing happens. Back above, back above. Once it gets below, smack down. Back above, let's buy it, kids. Wall Street goes, oh no, we're below it again. The algorithms kick in, down we go. Look what happens when you get back above. Above, above, stay above, stay above, stay above. One test, above, above, another test. Now look what just happened here. That last little massive rally we've seen for the last 6 days bounced right off the 30-bar moving average. And better than that, it's now out of this major trend line. Look how long this thing's been running for. Boom, here, look at this. Here, let me grab the tool. Here. It just continues. It holds like crazy, right? And now look what's happened. Do you think the algorithms didn't pick up on that above that trend line? I assure you this is what they're looking at. They're not humans looking at it. They've already programmed in all these parameters, and they tell the machines follow along. They're self-learners, by the way. So we're using artificial intelligence to continue learning. And these systems know when the market's bouncing off of stuff. All right, so, sorry, I thought I had a visitor coming in. Hi, sweetie.
Hi.
So they're keying off of the 30-bar moving average and simple trend lines in the Dow. So another average you can write down and look at some Dow stocks, and you will find many of the Dow stocks are bouncing off that very same average. Now, let's look at another. Let's go to number 5. You guys are going to love this one. Everybody loves Tesla, right? Who's not a Tesla fan out there? There's a little secret that you can use going forward. I don't know why or how, and I don't care. I don't reinvent the wheel. I just try to find it, put it on my car, and make it go round and round. But look at how they key off the 77-bar moving average in Tesla. Like a magnet. Look at this. Smack down right into the average. Back up you go. Right into the average. Back up you go. Average, once you get under it, you start having a lot of trouble. See that? Now we're stuck under that average. That jumps right out at you. Remember, always follow the smart money. Keep this simple. This is for direction. What direction do you think will go in? Well, the street thinks when you're under the 77, you sell rallies in Tesla. And when you're above it, you can buy the dips. And you think they're wrong? Look at this dip, right? It got above. They bought that dip right there, right at the average. Explosion. It works. It's simple, yet powerful. So let's see if we can find another example. So let's see, going down the list. Oh, yeah, look at Netflix. This one's a good one. Look at Netflix. Why are the algos keying off the 35-bar average here? Well, I don't know. And again, I could care less. If I could figure it out, I know how to follow the smart money. So another example. Algorithms are now keying off the 35-bar moving average on Netflix. Sometimes the 200-bar moving average gets involved too. 2 different times. Basically, what you can see, like I showed you in several other charts. I hope you're writing these averages down, kids. They will work for a while until the algos flip to something else. Right here, beautiful hold, beautiful hold. Look at the crack underneath. Boom, boom, boom. Back here, great hold. Once again, you start getting underneath. You see all the selling starts taking place, and then they can't get it to go. Back above we go. Another test. Look at that wonderful test. Right back up. You can see they are absolutely using this average to key off of. It cuts the chart right in half. Right? So once again, stuff that you can use when you go home this evening on charts to move forward, cost you nothing. And as long as you're paying attention and you actually go look for the averages that they're keying off of, you can spot these. Of course, you can always come to livewithoscar.com, join me in my free trading room, and I'll discuss with you what I'm looking at and how I'm finding these. But I told you that we were going to be bloodhounds and we were going on a hunt. This is how we hunt for the algorithms. They're not all that difficult, kids. I'll show you. We'll just keep looking. So Netflix, as you can see, absolutely respects this above and below, and the street is too. And then look at the 200 bar. Now, everyone knows about that. 200 bar moving average is a giveaway. All algorithms are geared to buy or sell when you get above or below that. So we all know that. But these tricky ones, like the 35, the 32, the 27, all the different numbers, those you have to go out and find. Those aren't standard. So that's Netflix. Now let's move out of stocks into something like Bitcoin, which is, what can you call it? It's a digital currency, so to speak. It's just a digital coin by itself. It's not part of the stock market. It's not part of the bond market. It's not part of the commodity market. Why would these averages work on that so well? Because these markets are all traded by algorithms, and algorithms know how to pick up repetitive patterns. So again, keep it simple. Follow the street or the smart money. Seek out what algorithms they are keying off of. But beware, algos change constantly as to the averages and formations they are using to key off of. So don't fall asleep at the wheel. You have to change them when they're not working any longer. But look at Bitcoin. Is this average not ridiculous on Bitcoin? Could you need anything else to tell you when the big buys and sells are coming? Every time it got to this average, a major event took place. This one, Bitcoin was cheap, under 10,000. It still worked down here. But look at once it starts to take off. Boom. Look at that rally. Where does it come back to? Right to the average. Big rally. Where does it come back to? Right to the average. Big rally. Where does it come back to? Right to the average. Now, on this particular average, I am not going to tell you what it is. I implore you to find an average for yourself after this webinar and come back to me and let me know either in my trading room, send me an email. Tell me if you found the same average that the algorithms are using in Bitcoin that I'm showing you now. So I'll leave this one up to you. But boy, it works like magic on Bitcoin. And boy, oh boy, do we love Bitcoin, right? Looks like it's going to move much higher, over 80,000 in the next couple of months. But for now, I'm just showing you how to spot what the street is keying off of. Very simple but powerful techniques. Once again, you're also in a very smart parallel channel in Bitcoin, and it looks like it wants to stay in this thing for a while. Let me darken the lines if I can for you to show you what I'm getting at. So if you look at the channel it's in a very, very smart channel right now. And that channel is not pointing lower, kids. It's pointing higher, as you can see. Right? See that? You're in a channel, as well as just bouncing off that average like crazy. Bitcoin seems to be a very technical market. I am so glad it's come to pass. It had its birth. I've been able to watch the chart since the day it was born, and I've been all over this chart. And I'll tell you what, it presents fantastic trading signals. Bitcoin's a good one. Now, again, I haven't shown you the Omni, which would never happen here. The Omni would tell me exactly where to buy and sell each day, like we did today in the Russell 2000. Maybe we'll get to that a little bit later. Omni gave us the exact high in the Russell 2000 to sell today. Champions! And we did it. It was a good trade. How'd that work out today, Omniacs? Not bad, right?
Hey, Oscar.
Yes.
We have a couple questions. I thought it might be a good time to break in.
We could do questions now, or we could do them after I finish with a few more charts. Entirely up to you.
Your choice. Your choice. You're in charge. I'm just here to look pretty.
You know what? We've got plenty of time, right? So why don't we do this? If you can keep the questions off to the side, I've only got a few more charts I actually wanted to present. Then I'm going to open it up and have traders tell me whatever chart they want to analyze. And if you're in a position, whatever, we'll go over it together and see what we can find to help you out.
Sounds good.
And I'll
Thanks.
answer all the questions as well. We okay?
Yeah, you're great.
Very good. So once again, Bitcoin, very technical. I've been loving trading it, at least analyzing it. Now we go to Krugel. This one, wow, oh, wow, is this one interesting? This one turns out to be the 52-bar moving average. Not quite the 50. The 52-bar moving average seems to be the darling of Google trading algorithms. Not only does it really respect the 52-bar average, but watch what happens. You see these flat plateaus it goes into? Gets into a flat plateau and then bounces off the average, runs up, gets into a flat plateau, bounces off the average. Then here, no flat plateau, nothing to worry about, just uses the average perfectly, right back up. So this has been going on constantly, and I watch it all the time. Look here, fails at the average, breaks down, holds at the average, the rally ensues, goes into a flat. Where's the flat end up? Bouncing off the average, and then it takes off. Goes into another flat where we are now, or a sideways consolidation, if you will. And look at what it bounces off of right here before it takes off. The same exact spot, the 52-bar moving average. And of course, the low of the consolidation both come together, and bingo, that's your repetitive pattern that they are looking at and they are buying from. So you can actually spot these things with a good pair of eyes and a little bit of patience, and you can see what algorithms are keying off of. This is Google. I've shown you some big stocks. I didn't find anything obscure, right, guys? Well, I'm taking you to the biggest of the biggest and showing you what Wall Street does to chase those things down. Google, very big stock like Netflix and everything else we've looked at. And boy, does this stuff work really well. And you can do this on your own. You don't need me to point out these averages to you. You can find them yourselves. So the 52-bar on Google, if you want to write that down, that's another one that during this period of time, at this juncture in the markets, is working well. The thing about algorithms are they are self-learners, and they will morph into another average and disappear off the 52 and onto the 71 or whatever they key off of next. So remember, don't fall asleep at the wheel, but this is not difficult to figure out what they're doing. You just have to see it visually. So let's go to another. Well, I'm almost done with the presentation I was going to show you, and then I'll open it up to you guys. So we are on chart number 9, I believe. And there's another monster, and this is probably the best average I have seen all evening so far. Look at the monster average that works on Apple. So when I pulled up the Apple chart, it was a lesson I was giving last time I was using this chart. And I thought, you know what? I'll give it out anyway. We're here. So before we look at the rest of Apple, a daily chart, let's take a look at this. Follow the rules. Well, I was explaining during a presentation at some point a few weeks ago that if you are in a channel and you've got a trading system, my system, your system, anyone's system, do not take buy signals at the top of a channel. Ever, never. I don't care how much you believe in the system. You wait for the market to settle above the channel for 2 days and then consider taking a buy. Same thing with the sell. You do not take a sell signal at the bottom of a channel, because look at how many times you would have been wrong. You wait for it to drop out of the channel first if you're going to consider trading it. Wait to get out of the channel. Do not take a buy signal at the bottom of a channel. Do not take a sell signal at the top of a channel. That's a day that you go neutral and you don't trade. Or you find another trade, another market to trade another stock. So anyway, that was a lesson from a few weeks ago. Because it was on the chart, I thought I would present it to you here. The reason why I want to show you this Apple chart, Apple, as we know, mega, biggest company in the world, most money in cash, right? Well, it's not all that difficult to figure out what they're using to key off of. The algos on Apple seem to be keying off of the 96 simple moving average. And look at how well, once again, I'll grab something to illustrate. Look at when it starts. It drops from here, and from there, it just becomes relentless the way it holds this average. Look at this. major hold, major hold. Once it gets under, they pick right up on that. Look at how it just cannot get above anymore. They come in and sell it now at the average instead of buying it, which they probably did today. This is as of the close on Thursday. Let's add in. Let's see what we did. Look at that. They sold it today right at that average. This is today's bar. Let me see if I can expand on that for you. Just as we would have expected, we put Friday in and they sold right here, pushed it all the way down. It came back, but look at the trouble it's having right at that average. I tell you now, it's because the algos are keying off of that spot. And once you get above it, they'll start buying it. It's simple techniques like this that will keep you on the right side of the market, I promise you. Simple but powerful techniques you can use as soon as tomorrow or this evening. I hope that you're learning something from this. I've got a few more examples I'd like to show you that I just stumbled upon last night when I was building this webinar. Let's go to number 10. Zoom, another big mover, keying off of the 55 bar moving average for whatever reason. Who cares? But when you're looking at Zoom, the street's darling is the 50 bar moving average usually, right? The street's darling is usually the 50. Here, it's the 55. So they shift a little. Sometimes it goes way out from there. But in this case, they are using the 55 bar moving average, not the 50. But this is the street's darling. The 50 and the 200, they love. But I'm going to change this for you so that you use the right one. They were probably using the 50 bar moving average a few weeks ago. Who knows? Right now, they're not. They're keying off the 55 in Zoom. Buy with the smart money or sell with the smart money. Not what you think might happen, what the street is showing you is going to happen. And Zoom, as you know, very active lately. Zoom, as you can see what's happening with Zoom in a fundamental standpoint. Well, not everybody's staying home anymore. Not everybody wants their kids to be homeschooled. Not everyone's afraid of Corona anymore, COVID, if you will. So what's starting to happen here is, look at the long drop we're starting to get out of it. And it does not look like it wants to go up, maybe to the average, but looks like it's starting to head towards the downside. Now, when you do things like simple trend line analysis, it will actually tell you that you're heading towards the downside because you put a line there. Well, you know what? That didn't stick correctly. Let's get that right. You put a line here, and then you drop another line down here, and you can see that it's starting to move in a different direction than it's been. Now, as you can see, what's here is you're moving in this direction all of a sudden, right? Everything's moving down, but all the way back here, you were moving up, 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 up. Well, now we've got a change of direction, and we are also below the 55 moving average. As soon as that direction changed right here, you see how they started keying off the downside of the average, got above for a pop, then above for a day, but the street is keying off of that average, as you can see visually. No one needs to tell you this. You can find these on your own. And then I think we've got maybe one or two more. Let's see, number 11. Proof of just how well technical analysis, even in its simplest form, can work for you. COVID hits, the panic begins. TV's talking about we're in a bear market. Oh my God, it's the end of the world. Look out. You heard all of it, right, during COVID? If you watch my videos, I stepped right out in front of the camera and called the COVID lows right here on the low day. I stepped out. First off, I explained to everybody that we are not in a bear market yet, because in order to be in a bear market, you've got to take out the lowest low to your left, which we hadn't done. And we bounced off one of my big gun averages that only comes around whenever we have crashes or rallies. I never see it for anything else. And it showed up right there at the low. My Omni flipped to a buy. The double bottom was being tested. We called the COVID lows, and it rallied ever since. That is absolute. Ask anybody. I was out there the night we were dropping. I called the lows that evening on a YouTube video. Technical analysis allows you to keep it simple, but be highly accurate with your directional calls. This is how I called the COVID bottom on YouTube in my trading room. You're looking at the combination, a double bottom, and the market crashing into one of my averages, which is never involved ever with anything. So when it got involved, I thought, well, it's do or die now. It either breaks this and we drop forever, or this is the bottom. And up we go. And lo and behold, that was the bottom. Simple analysis. And then watch this guy. Look at Chipotle. Oh my God. Look at this one. And it's actually spelled wrong, isn't it? Chipotle. Yes. That's actually, there's typos in there. I'm not going to fix them. I don't care. They are spelled wrong. Anyway, look at the 100-bar moving average and the 200-bar moving average on Chipotle. Oh my goodness. Look at how well it bounced. When they came together, they connected right here and the explosion began. Then, of course, it got into this wonderful channel, which you can clearly see. And look at what they did every time this thing got near the 100-bar moving average. Boom. Boom. You couldn't get near it without the algorithms coming in and just going crazy on it. Then you got in under, and look at how fast they sold it. This goes from 1,400 to 1,250 that quickly. As soon as you got under, they knocked this thing down that many points. Then it gets back above, big rally ensues, and where do we end up? Bouncing right off that average, and another rally ensued. When we broke the average, algorithms immediately picked up on the 200-bar mover, because that's programmed into every algorithm I've ever seen. So the 200-bar moving average comes into play if you break a smaller average that the algorithms are keying off of, and they will buy and sell that 200-bar as if it were meant to be, as if it was a written law. And you can see that happening right here. So these are some of the things that I look at for abstract analysis to give me market direction, simple stuff that I think all of you can do for yourselves. See if I have any other examples before I open up. I think that's about it. I don't see anything past 12. I will now accept questions and open this up to suggestion on other charts, other markets, whatever you'd like to do together. I hope this helps, right. And I hope you wrote some of this down.
You've gotten some great feedback, as always. Even like our sales guy's like, wow, Oscar does such a great job every time. So I'd want to say that. I also we had a lot of questions about how you select a moving average. Like, is it different for every instrument? Do you change that? Do you trade a lot of combinations? So maybe you can speak to that for just a minute.
So let's go with the one that's right in front of us, Chipotle. So if we decided to mess with this average, let's say we put an average on here. We went with like a 30-day average, or we'll just whatever, 30, put it there. And you apply it. You look at that and you say, well, I don't really see anything happening there. It goes through a lot. It's like through the bars. There's no support, no resistance. I don't really see this one doing much, right? It more confuses me. Well, you move it out a little bit. And you go, well, all right, so maybe is it like the 50? And you drop that on there. And you go, well, that's definitely looking better, but I think we can tighten this up a little bit. I don't like the way it doesn't get involved too often, and it gets jetted through a little too many times. So I expanded out, and I went from the 50. I said, well, maybe it's something like the 77 that they're using on Tesla. Maybe that's the one they're keying off of. And I throw that in there, and I said, well, it's not it, but it's getting smoother now. And then I moved out to 100, and bingo, it dropped in and just looked beautiful. Now, you guys can do this for yourselves. You guys, gals, whoever's out there watching. Now, look at how smart that one looks. Very rare that it even was penetrated. It's not jetting through any lines anywhere. It looks like it belongs, like they're partners. They belong together. And that's how I know I have found what the algorithms are looking for. And just look at these bounces. That doesn't happen by accident. There's no way that bouncing off of an average is happening by accident. You just have to find which one they're keying off of. That's one of the ways I will find them. But it can't be something that you like. It just has to be an average that worked. And maybe it's new to you. I've never used the 77-bar average in my life. 39 years, I've never used it once till I ran into Tesla and went, I guess that's a new average. So if that answers your question, that's how I found the 100 on Chipotle.
Great. That was awesome. Let's see. We do have a couple of, do you want to look at some, somebody's asking you if you have a chart of Viacom.
Give me a symbol, I'll pull a chart.
Let's see. I think it's VIAC. Let me see if I can pull it up real quick. VIAC. No, that's not it. Yeah, give me a symbol. Gonna throw that back. Try AMZN.O.
AMZM?
Mhm.
That's Amazon.
.o.
The N.O?
Yep.
Oh, so we left that one, huh? Amazon. So first thing we do, of course, is add something that makes sense, which is a template where it throws a few averages on and pretties up the bars. And whatever average that is right there doesn't look terrible to me. I think we could smooth that out a little. But this is Amazon, right?
Mhm.
So if we got rid of one average and just looked at simply, remember I told you when they see that 200 ball moving average, which is what this is, they go crazy on it. You have to type slowly in this mode. So this is the 200 ball moving average, and look at the work they've done on it. Trying to, staying under, trying to get above, and then boom, the blast off begins. So that simplest form, that's what I see right off the bat. Then, of course, once just looking at the chart, I can clearly see that these trend lines are starting to come together. You've got trend lines that are now starting to head towards one another, which I believe are these right here. So it looks like you're going into, you see where you've been inside this pennant flag for a long time? Looks like Amazon is going back into the pennant flag. And the beauty about it is it's at the point where it's got to make a move. So if it gets back in this pennant flag, see how it's narrowing? It has to break out once it gets to the narrow end of the pennant flag. So right off the bat, simple analysis looking at Amazon, I see that it's looking better than some of the other stocks I've seen. I love the fact that it's back in the pennant flag, and the street is keying off the 200 ball moving average recently, which is the one that's gotten involved in Amazon. If that helps.
Good. We found a symbol for Viacom. It was actually what I thought it was, VIAC.O. And while you're pulling that up, somebody wants to know what software you're using right now.
Well, I'm using MetaStock, by the way. It's one of my favorite softwares I've been using since I'm a child. Literally at 18, I started using MetaStock. I think everyone that works there was born after I started using it. But I've been using it since then. I've tried and been part of beta testing for everything out there you can think of from the 80s through 2010. We're talking TradeStation, you name it. I've been part of working with them. I've just always loved the way MetaStock works. So I stay with MetaStock. That's my steadfast one. Now, this is a horrible looking stock with people who probably jumped out the window for the last 10 days. I mean, what happened here?
Right.
Dear Lord, let's put a template on it and see what that is. Wow. So, of course, you can see right off the bat, not only did you drop in Viacom, it was VIAC, right? Just so that we know what we're looking at. All right, so if you can see what happened here, I'll expand upon that for you. Once you had whatever news came out and crashed this poor market, look at the poll and look at the flag that built since then. And that is absolute. Anyone can spot that. You know what? We can just leave that alone. Let me just drop a couple of trend lines here. Look at this flag that's developed. And it's basically getting ready to fall apart right now. We could extend these out, just have lines, but that's the flag right there. Now, of course, does anybody remember what this average I always keep on here, this weird color average? Remember, that's the 200 bar, right?
And
we know the street
it's a simple,
that.
right?
Yes, they're all simple.
Yeah.
So
okay.
You see where we're going to. It will make a decision when it gets there. If it goes through that, you could be at $20 in a snap. So this looks absolutely terrible. The other side of it is, of course, if the cavalry comes in and buys at the 200 ball moving average, you can see that it is absolutely what they use to decide whether they want to be long or short a stock. Get rid of this other average, and you can see how well the 200 ball works. It doesn't come into play a lot, but when it does, they react. So you do have a bear flag, but once it gets down to the 200 ball moving average, which looks to be coming in at somewhere around 38.85, 38.90 right there. Is that what the right price? Yeah, about $39, 38.50. Once you hit that, if you don't hold, big downside comes. So right off the bat, that's the first thing I noticed. There's really nothing else I would say about that chart. There's nothing else on it. It sure did have a beautiful run, though, didn't it? Now, why am I a short-term trader? A great example. People ask me all the time, Oscar, why don't you like holding stocks? And here's why. Imagine this. Think about a scenario at home. You go home, you tell your wife, husband, whoever, significant other, hey, I bought a stock, Viacom. I bought it at like $27, $28. I think it's going to go to the moon. And then each day you have dinner and you talk about that stock. Yeah, honey, it went up again. Oh, look, it went up. Oh, we're going to make so much money on this stock. Look at all the days that you've had to sit in anguish while the stock is in your portfolio. Dinner after dinner. Maybe we should hold on a little longer. We could end up with a new house. And then 1, 2, 3, 4 days later, it's over. See you later. So as far as I'm concerned, I don't like holding anything. I like holding real estate and Bitcoin. Everything else, I trade short term. Because this is the worst thing that can happen to a person, is to get involved in something like this. And generally, by the time you're up that high, your stop is all the way back down their break even, because people don't know how to adjust stops properly. And you end up losing all your money, if not more. So many times there's been questions, how come I don't long-term trade? You're looking at the reason right there. I cannot stand these horror stories, and I've heard them throughout my entire career. You could be in a stock for 2 years, and in 3 days, it's worth less than you paid for it. There are questions from Dano. Is that on YouTube, Dano? Dano says he's got questions for Oscar as well. You can chime in when Jeff's done, Dan. I'm more than happy. So what do you got next, brother?
Sugar Papa Charlie Bravo .Oscar for the symbol.
Like
SPCB.O.
Supercom.org?
That's it. This is for NJ and Joom now. And I'm sure I said that right. From YouTube.
Is this a penny stock?
I've got it at $1.62. Yeah.
So sorry to say, I do not analyze penny stocks of this price. I don't think they hold to anything. Look at just all right. So let's just remove anything on here, and just look at the chart itself. So right off the bat, I would know this is a penny. I knew it was a penny stock. I didn't even see the price. I looked at the chart and went, well, that doesn't make any sense. None of this does. And you know why? Because these bars are the times where people in penny stocks that hold way too many of the shares get to do false movement on those stocks. They either get in or get out on a piece of news that they've been waiting to present for quite some time, and it completely distorts technical analysis. And I would almost be willing to bet that every one of these moves that you see here are insiders knowing what news is coming out and bailing out and leaving everybody else holding the high-priced stock. So I don't even bother analyzing these. I don't trade them. I don't suggest anyone trades penny stocks. With that in mind, I don't even look at most of the digital currencies. Bitcoin, yes, because it's like looking at a major stock. Almost all the rest of them, a few aren't, but most of them, in my eyes, are penny stocks. I don't go near them. So sorry to say, I wouldn't analyze this, nor would I trade it, unless, of course, you own a bunch of shares and it's yours. At $1.62, it's got nowhere else to go but up, right? It's only $1.62. So you'd hold it if it was yours, but I wouldn't even suggest trying to analyze this. You'd find yourself more wrong than right because of the way it jerks around so much.
Neo from John P.
Neo.
NIO. Yep.
And I see that we have Riot from Dano. We'll do that next.
I'm ignoring Dan. Just kidding. Just kidding, Dan.
Whoa, that doesn't look even slightly good. All right, so I don't like this formation even slightly right now. Neo, you know, you would have thought, being that they took Tesla's technology and then made a rule a couple of weeks ago that you're no longer allowed to drive a Tesla if you live in China and you live anywhere near a building that's considered government, or you work for the government, or even if you've ever heard of the government. No more driving Teslas in China. So
Wow, I didn't know that.
Such unfair players. Oh my God, I don't know how we let them get away with that. But in any event, this is the opposite or the same as Tesla, but it's NIO. It's Chinese Tesla. And that doesn't look good even slightly. Let me get rid of this average and show you what I see right here. And I think it's obvious to me. So as soon as the chart came up, I went, ooh, that's a familiar look. Does anyone see what's on that chart? Can anyone tell me before I draw it up for you? Anybody answer that? I'll do it for you then, kids. Look at how this jumps right out at you. What happened here in NIO? Shoulder, shoulder, head, shoulder built up like it was meant to be. Look at this head and shoulders that is building here. Okay, now I've mentioned that this is going to take crude down. If that does work, you keep your eyes on NIO, but you've got that 200 ball moving average here. You've got that 200 ball moving average here, which of course they're going to figure out whether they want to use it or not. And if they don't hold there, you could be down at 15 before you blink. Now, once again, not only did it set up as a head and shoulders, but it's set up just like crude did. It also gave me an opportunity to say, forget the voodoo about a head and shoulders. Why not call this a flagpole and call this portion of it some unorthodox flag? So I think it also has some weird basically more like an Oscarism known as the F flag. Let me snap the price off this line so I can move it around freely. All right, so if you ask me, this is an Oscarism type flag called an F flag. And let's just create a little parallel channel down here. It's going in the wrong direction for a bear flag. It's what I generally call an F flag. It's not orthodox by any means, but it generally will tell you that the market's probably going to stay in that same mode for quite some time. So I think this stuff we could call the pole, even though, it's a little bit sideways and unorthodox. And this is some sort of a flag formation. And all of that's building over the 200 ball moving average. So that is basically what you need to look out for now. Let me just get rid of this. I would say do nothing with NIO until this gets challenged. If you get below it, you can sell it. If it holds, look for some upside. Now, that's just using the 200. Remove that, pretend it's not there, and you have a very, very valid head and shoulders formation.
All right.
Definitely takes a market lower. So that's
Cool.
what I'm looking at first glance. I haven't looked at NIO in a week or so. But on the way up, it looked much better. Kept building these little bull flags constantly all the way up. It's not doing the same anymore.
Let's look at riot.o for a guy named Dan in the chat here.
Riot.o, Riot blockchain. Oh boy, look at that one. And so I've obviously been using this before. Huh? Look at this. I've been all over this chart in the past. All right, so let's see what's on it. What is this? I bet you if we tighten this up, we can see what average they came off of. So let's start with the 50. Let's go down to, we'll just drop it 20 points, go down to the 30. No, that's way too low. Let's start here. A little better. So somewhere around the 45 ball moving average, they're keying off of that, as you can see, and it just got below right here. It just started to get below, which generally hasn't happened for quite some time on the Riot chart. But at the same time, looking at larger analysis, this whole piece right here would literally just be a massive flag building. A massive pennant flag building right there. So you've got that for longer term analysis, right? Inside of that, however, these things are common like crazy. That's why I've been showing them lately. We've got head and shoulders starting to build all over the stock market. On all the stocks I pull, on the big ones, on our indices, we're getting them everywhere. And I displayed a video about this a few weeks ago and said, look, this is not 2008, but this is starting to shape up the way the end of 2007 shaped up for me technically. We're starting to see a lot of that take place in a lot of our stocks and in our indices. Let's hope we just keep moving higher, but the NASDAQ especially, if you look at the NASDAQ in a particular way, it'll show you a head and shoulders and a head test that's failed so far, which could literally mean more downside coming our way. I'm not going to make any future calls here. I'm just showing you how to use some stuff to help you guys out moving forward. If I am going to actually make a big call like the market's change complexion, that will happen in YouTube videos over some time.
Alex wants to know if you consider head and shoulders only a reversal pattern, or sometimes do they act as continuations?
Yes, they do. So good question. Whoever asked that must have used enough head and shoulders in their lives to know. I can answer the question on the very same chart, so great question. This is something I teach to people all the time. If you see a small head and shoulders, it is a continuation pattern. It is not going to top out anything. It's just a continuation pattern, and here's a small one. When you see small ones, they lead to the same direction. It's more of a stalling pattern while it's staging for the next rally. When you have small ones, like that happened within a month's time, this is basically about a month's time from start to finish, no big deal. When you start having those that take 3-4 months to create, you've got something you really need to look at. So a small head and shoulders formation, whether it is upright or inverted, is simply a continuation pattern. So don't confuse the two. It's got to be massive if you're going to try to call the top of a market, not a small one.
All right, let's look at one more. I think we're NCLH, Norwegian Cruise Lines.
Oh, well, being that's Norwegian, I don't know.
Actually, it's a .k. My mistake.
But I know our companies that are part of cruise lines are starting to do really well. Let's see what they're doing there, and that looks like it. And yeah, they're doing well as well. Maybe not today's daily bar, but that chart looks much better than it did here. All right. Looks much better than it did there. So let's draw some lines on here first and see if it's breaking out of this channel that's been forming for quite some time. First things first, let's identify where it's going in an abstract point of view. All right, so we've got a top line to tell us where it's going to run into resistance when it gets there again. And then we'll just drop a bottom line, keep it really far away. We just want to see abstract support and resistance. Give us a clue of what could happen if it dropped. And I don't see any of these averages doing anything except for, of course, the 200. As you can see, when it finally got above, the buying started. Well, let's get rid of it. Cut away to 200. I don't know what this average is either, but we're going to get rid of that as well and just look at the chart. So looking at the chart, I say that's a very good-looking constructive chart because what it's been doing ever since the COVID crash is putting in higher highs. And higher lows. Right? So right off the bat, you just get abstract and make it simple. We go back to kindergarten, pre-kindergarten. That you can at least see now it's moving higher. And the fact that you put in a low, a high, a higher low than the one before, a higher high than the one before, a higher low than this one back here. Now a higher high than the one before, a higher low than this one back here. What's coming next, kids? Can you tell me? Anybody know what comes next?
Higher high.
Yeah, you're paying attention. A higher high. Hey, you guys, here's a lollipop for you guys out there. Maybe even a T-shirt. All right. So, of course, this daily bar makes it turn around a little bit, but it's starting to check the resistance up here. You may get some fund managers taking profits. But the pattern, and again, let me just mark it so that you see all of them. The pattern has been higher lows and higher highs all the way up since COVID. And once again, here, right, you went up. This high was higher than that. You came down. This low was higher than that low. You went up. This high was higher than that. You came down. Boom, boom, boom. And this low was higher than that low. So the next high should be above this high, which could even be that blue line, by the way. That would make it higher than this one. And maybe hit the resistance.
Oh, sorry. I didn't mean to cut you off.
No, you're good.
Oscar, here's a question from RDW25X. What are your thoughts when an instrument hits a moving average quite a bit in short frequencies? How many touches before you start to take caution?
3. If I see 3 bounces, let's just say that this was an average, this line. I know it's not, but if I start seeing 3 bounces or more, it catches my attention. Because obviously some algorithm or someone on the street picked up on that as well. Otherwise, you wouldn't get the bounce from it. So 3 bounces, I start to consider the average valid. Or
Okay.
three drops from it, one or the other.
Oh, one more. I know I keep saying that. Let's do FSR.
Yeah, I was waiting. I seen Daniel put it in. So oh, he's writing to me in my trading room. We have a secret relationship going on here without you guys knowing.
Dan is awesome. He does a good job. He
Not that
I talked to him quite a bit. Yeah, just FSR.
Daniel, thank you so much. He's taking so much weight off of me. I love this guy. And if anyone ever needs anything, contact Daniel at my site, even though his information is not in front of you. Is it Fisker?
Uh-huh.
Perfect. Ooh,
FSR.
Since he announced his new car was coming out, it went down, not up, huh? Imagine that. Remember the Fisker I was almost going to buy?
Oh, yeah.
They're starting to make them again.
Okay.
I was afraid to buy it because I didn't think the company would last. Yeah, I was right about that, huh? All right, so in this one, whatever average that's going to be, it's got a strange plateau. So Fisker, I will say I don't like this chart at all. I don't think it's going to hold when it gets to the 200 here. But what are these crazy flats that are building here? Look, it gets into this flat zone more than once before it decides what to do. Right, you got one here. And then you pulled a couple of flats. You pulled one right here. You got the flat right here. And then look at that one. That's when I guess they were trying to figure out what to do with themselves. So I don't like the fact that you've come down so low from that blow up. Now, remember I was showing you lower lows and lower highs? So let's keep that in mind for Fisker. So here's a low and here's a high, right? Let's mark all of these. And then we came back down and we did make a higher low. Right, this is the lowest point it came down to. It's higher than the last one. And we did go up and make a higher high. But what I don't like is how close we are now to the previous low. We're not at it, but, you know, the previous low was here. So the 200 and the fact that we may get lower than that previous low would give me a lot of cause to worry. If we hold that 200, look what happened here. Now, remember, fund managers do key off of most stocks that bounce into a 200 ball moving average. Look at that. After it held the 200 here, quite the explosion, right? So you're getting close to it now. I would say sit tight on Fisker. Let it make a decision for you. Under this, you have a problem. If you don't get under this, I think you can probably buy that dip at the 200. So leave it there. Don't do anything until it shows you what it wants to do.
Okay, one more. How about Walmart? WMT.
WMT is in Terrence.
This one's for Bob, and somebody was asking about Walmart earlier. It might have been Bob twice.
Well, that's a .o if I remember right. No, it's not.
I thought it was just WMT.
Yeah, there it is.
Mm-hmm. Yeah.
Ooh, let's go look. Look at the way they key off that 200. I don't know what this is. This is just sitting on there. I never know what average I'm going to use till I hunt, but the 200 is always there because I know they're hunting for that. So Walmart, you know what? That seems to be the key right now for really big moves because once it got under this portion of the 200 ball moving average, they took that thing for a ride from 138 to 126. And here they're testing it again, right? So what you'll find is if they cannot get above that 200, this whole thing is going to turn out to be movement on the downside. If they can get back above it, you know, which they're at now, I think they'll go up and challenge this area, 146, 148. So simple analysis, just looking at what big algorithms might be saying about Walmart right now. they're saying, hey, Walmart just got above the 200 and bells are ringing like crazy. Ding, 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 ding. Watch Walmart. I think you're getting that now. I can also envision trend lines right here that are going to come into play very shortly to show us resistance levels. And there you go. So you've got one there that will come into play. The bottom side of that was down here, but you're above it now. So you know what? Buy dips into that 200 until the street tells you not to on Walmart.
All right. Livewithoscar.com, right, Oscar?
That would be livewithoscar.com. Absolutely. You can see the Omni recommendations that we do for each day. You can join me in my live trading room. Again, I did show you that in the beginning. If you just go to livewithoscar.com and create a free membership, in fact, let me see if I can just take you there now. You create a free membership by either hitting register or log in. We ask for almost nothing. Fill that out. Click Chat Live with Oscar, and you will literally be live in this trading room at livewithoscar.com with me, where I can answer more of your questions. We also have something interesting that Dano, I know, wants me to talk about right now, and that is the online trading, the Omni Trading Bootcamp, or basically omnibootcamp.com. If you are looking to come to one of my exclusive seminars here in Las Vegas, where 3 people get invited to my home office, you would go to omnibootcamp.com and fill out one of the applications by clicking here. And that's probably your easiest way to fill out an OmniCamp application. Of course, I always answer my own phones. So give me a call if you want at 702-629-4755, which I'll write here on the screen for you. I actually am somebody who does not mind speaking to my traders. I speak to them all the time.
Oh, here's a question you can answer while you're typing your phone number. What time do you start every day?
So I don't know that that's the proper question. We start on Sunday evening at 6 p.m. when the market's open, although I start about 7 a.m. in the morning on Sunday. And we continually trade. It's one long session until Friday afternoon at 5 on the close. So sleeping, the word sleep, as far as we're concerned, that's a 4-letter word here. Bad. We're not allowed to sleep because markets could care less about human sleeping habits. And I come up with trades like, look, I'll just show you something quickly here. I come up with trades all the time where we're going to buy and sell, and the market could care less what time it is, because when it's 1 in the morning here, it's certainly 8 in the morning somewhere else where people are trading. So you basically have to try to stay awake through this 24 hours a day, which no one can do. So I've created a system to help you do that. I have an Omni system where you'll come to my site, you'll see whether I want to buy or sell. So Tuesday night at 6 p.m., I put this out. The Omni has switched teams and is now on the Seller of Rally squad for trading Russell 2000 on Tuesday night through Wednesday. Once you have that information from me, and you can click on my latest video and it'll take you right to it. Once you have that information from me, I then start sending out these things called flash updates, which you'll see on the right. So this will say, okay, the last price, Omni wants to sell short the Russell 2000 at 2264 to 65. The last price is 2260, so it's kind of close. This tells you where to place your stop. And then below that, I actually give profit objectives on where to get out. So the market hits our spot, literally hits 2264 on the nose and dumps. I send out the next flash update. Third one will come out, take all your profits, and cancel stops once flat. We're trading at 2241. So we sold 2264 as the Omni told us to do. And we bought them back at 2241. And how I send those to you, when I was speaking about sleep, you can sleep if you're an Omniac, because I send you the signal in this fashion so that you're allowed to sleep. You will receive this. Makes noise, tells you what to do. If you turn off that signal by accident, then you just go to the Omni page and all that information is waiting for you. Any Omni page. Just click Daily Omni and all the information is already waiting here for you. At the same time, I've fired off a text, an email, and a message on Messenger, Telegram, if you will, all at the same time. And if that's not enough, come to the live trading room where you'll see me live and you can say, hey, Oscar, what the heck just happened? I was half asleep, and I'll straighten you out there. So I completely encompass you with everything that you need to trade these markets. and I offer the Omni trading signals to certain people that want to join that service.
All right. Mark says you should do one that's not on a Saturday, or do an online course.
My courses last from, you show up in Vegas on Thursday evening, and we have a course all day Friday through Friday evening, all day Saturday through Saturday evening, Sunday and Monday, and you get to go home either late Monday night or Tuesday. We have to have a weekend to get them done.
John wants to know, do you trade mostly futures or stocks?
So, trading stocks presents a bit of an issue for me. The Omni works fantastic on stocks, but if I look at a stock, we'll call it Tesla. I do analysis and the trade says, hey, the chart says, hey, Tesla's going up. Let's call it the Tesla chart. Tesla looks like it's going up, right? So that looks and sounds great to me. I'm sorry, because I looked at that chart, I forgot what question you just asked me. That chart just made me respond something. So
Mostly stocks or futures?
My attention. Oh, so when I look at that, I go, okay, we're going to trade Tesla. Omni says buy Tesla. Now, Tesla is one stock. Tesla the CEO could decide to drive his car onto the Golden Gate Bridge and get out and jump off in the morning. The guy could get back on camera, did what he did a few months ago, and smoke a joint and get himself in trouble. And if he does that, my stock plummets because I decided to trade Tesla today. Or any CEO of any company can lose a governmental report over the weekend or a governmental contract that you don't know about till Monday morning. So my point behind that is this. If Tesla is part of the NASDAQ, why trade Tesla when you can trade the NASDAQ? If you're getting buy signals in stocks that might go up or down based on what one owner of a company can do, you're much safer putting that trade in the NASDAQ where 15 CEOs can decide to end their lives in the morning on the way to work. And guess what? NASDAQ will still go up if it wanted to go up that day. So I analyze single stocks and I give out those trades. Personally, I'd rather be in the NASDAQ, S&P, or Russell than any single stock.
All right. One last question. William wants to know how much the camp is.
So because I don't give the price out ever, because it's not something I sell to a lot of people, I only hand choose the few that are coming out. It's something I would discuss with him on the telephone. I will tell you this, it will be the best money you've ever spent when it comes to a trading seminar, and it will be way less expensive than the blank trading academy that you've heard about out there that seems to be not a very savory operation. It will be way less than that, I'll tell you that much.
I've been to a number of the camps. People really like them. I'd recommend it.
Also, by the way, if you do come out to camp, not only do I encompass you with the information, during the 4 days, you've got to prove to me and the other students at camp that you can get the Omni techniques correct in live markets. Then when I buy you a computer, I program it myself, I send you home with it. And then when you go home, you've got me in a live trading room. And once you've been out to Omni Camp, you have access to a separate trading room where the Omni Camp graduates gather and we discuss the same techniques that I'll teach you here in Vegas. And it's in private, and that's continued education forever. So once you've come to my camp, that's it. We're together from that point forward.
Okay. Oscar, thank you very much. Live with Oscar.
Live.com.
.com. Go ahead and get up there and get signed up. Oscar, you do a great job. Thank you very much for everything.
You guys inviting me. Thank you for tuning in, people. I hope you learned a little something here this evening. And please come join my free trading room at livewithoscar.com.
Thank you, Oscar. Okay.
Thank you, everybody. Appreciate it. I'll be there anytime you need me.
We love Oscar. He does such a good job. Let's go ahead and do this. Let's wrap up. Let me make me the presenter. We'll show my screen. We'll go back over to the conference slides, and we'll kind of just talk a little bit about we'll just wrap up. How'd everybody do? All right. If you've been here for 3 days, for 8 hours, let me know in the chat. I have. Anyway, I'm glad you liked it. Thank you, Robin. Thank you. What a tremendous finish to those 3 days. Yes, sir.
I had to take 1 day off to get my vaccine.
Yeah. All right. For those of you that haven't yet, you might have heard of this program called MetaStock. It's won the Reader's Choice Award for 28 years in a row. It'll help you test trading ideas, scan the market, do forecasting. You can do a buy one, get two free. You can get 3 months for the price of one. Give us a call, 800-882-3040, metastock.com/conference or conf promo, or metastock.com/sales chat. Also, we talked about a lot of different offers today. If you go to our website, and let me just go ahead and shrink this down to just metastock.com/conf promo, CONFPROMO. You'll be able to go through different videos. You can sign up for the offer for that buy one, get two free of MetaStock if you want. You can see all of the add-ons that we've sponsored here over the course of the week. You can go through little different videos that we've trained on them. You can even order them right up here. So, but if you do have any questions, if there's anything that we can help you with, give us a call. Get in touch with us, 800-882-3040. metastock.com/sales chat. Tapas says, when is the recordings going to be available? Since we've been streaming the whole event up to YouTube, they're actually available right now. What you need to do is youtube.com/metastock, and all 3 of the videos will be right there. While you're there, make sure to like and subscribe. It helps a lot. And go nuts. All 24 hours are there. If you didn't write down youtube.com/metastock and you can't remember it later, we're actually going to send you an email with the links to the playlist tomorrow morning. Or you can come online with us, metastock.com/sales chat, and we'll just send them to you right now. I do want to thank all of the presenters that spoke over the last 3 days. I think this has been a great conference. I mean, we've just did 24 hours of streaming, and I've learned a lot. I hope you've learned a lot. I hope you enjoyed it. I hope you enjoyed the presentations. I want to thank you for making it possible. You know, if you didn't come, we wouldn't have any speakers here. So I hope you enjoyed it. I hope it was worthwhile for you, and I hope you learned something that'll help you. Stay safe, stay healthy, and I'll see you at the next one.